हेलो एवरीवन, गुड मॉर्निंग, गुड आफ्टरनून, गुड इवनिंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव सेशन। स्टार्ट करते हैं आज का सेशन। फिलहाल के लिए देखोगे क्रूड ऑयल और नेचुरल गैस को। नेचुरल गैस हल्का सा एक गैप ओपन हुआ है रेजिस्टेंस पे, एक नेक्स्ट रेजिस्टेंस पे। वहाँ मॉर्निंग पे थोड़ी बहुत सेलिंग आई है। नीचे अभी भी सपोर्ट है, एक स्ट्रॉन्ग सपोर्ट लोअर एंड पे दिखता है यहाँ पे। बाकी एक ये भी सपोर्ट है, यहाँ पर भी देखेंगे कैंडल अगर ओपन इक्वल टू हाई नहीं बनती तो यहाँ पर भी एक बाइंग का ट्रेड रहेगा। फिर एक मेजर रेजिस्टेंस 302 है। बीच में भी एक रेजिस्टेंस यहाँ पर है, बट वो ऑलरेडी टेस्ट हो गया है तो मैं उसको कंसिडर भी नहीं कर रहा हूँ। ठीक है, एक लेवल से एक ही बार। बाकी क्रूड ऑयल तो कल से साइडवेज ही है, वो कल सपोर्ट एरिया पे था, उसके बाद वो कम्प्लीटली वहीं पर साइडवेज चला गया, आज भी साइडवेज ही है। थोड़ा सा पुल बैक देता है अप साइड पे, तो यहाँ एक सेलिंग का प्लान करेंगे। स्ट्रॉन्ग रेजिस्टेंस है एंड देन हमारे पास एक रेजिस्टेंस यहाँ पर भी है, ये भी एक टेस्ट हो चुका है वैसे तो। बाकी देखते हैं, रेंज ब्रेक कर देता है हल्का सा। एक छोटा सा रेजिस्टेंस यहाँ पर ही बना था, थोड़ी बहुत सेलिंग आ रही है बट ये रुक रहा है क्योंकि नीचे एक वो रिटेस्ट जोन है फॉरेक्स के अकॉर्डिंग, तो उसके नीचे क्लोजिंग नहीं आएगी तो ये बस साइडवे चला जाएगा इसी रेंज के अंदर। बाकी नीचे हमारे पास एक यहाँ पर एक रिटेस्ट जोन है, वो भी रिटेस्ट कर चुका है। एक बार और शायद मेरे अकॉर्डिंग करना चाहिए लोअर एंड से। बाकी फिर एक मेजर रेजिस्टेंस यहाँ पर है, बीच में और भी दो तीन सपोर्ट हैं बट वो भी दो तीन बार टेस्ट हो गए तो वो मैंने रिमूव कर दिया। लेट्स सी कोई ट्रेड बनता है तो। बाकी इंडियन मार्केट ऑलरेडी क्लोज हो चुका है। निफ्टी देखोगे तो मॉर्निंग पे सेल ऑफ था कंटिन्यूसली, उसके बाद फिर सेकेंड हाफ 11 बजे के बाद पूरा साइडवेज ही क्लोज हुआ है। बाकी 12:30 लंदन सेशन ऑलरेडी ओपन है। न्यूयॉर्क सेशन की ओपनिंग 5:30 एंड देन यूएस मार्केट ओपनिंग एट 7। एंड उसके अलावा और कोई डेटा तो नहीं है आज शेड्यूल। लास्ट ट्रेडिंग सेशन है, थोड़ा क्वांटिटी का ध्यान रखना, कोई डेटा नहीं है आज जो शेड्यूल्ड हो। तो इंट्राडे में मार्केट का मोमेंटम ही मूव कराएगा मार्केट को। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। Trump plans major Russia statement Monday, mulls sanctions. Let's see the highlight of that. Trump start to soar on Putin over Ukraine. Zelensky sees movement on US delivery amid Russian assault. बाकी बिटकॉइन को भी देखोगे तो सुपर बुलिश हो रखा है पिछले 3 दिनों से। काफी दिनों तक साइडवेज ही था बट देन ब्रेकआउट हुआ आपका 9 जुलाई को, कल और परसों से कंटिन्यूसली बाइंग कंटिन्यू है अभी भी। 4 जुलाई से कंटिन्यूसली साइडवेज था, लग रहा था ब्रेकआउट करेगा, बट ब्रेकआउट ऐसा हुआ कि रुक ही नहीं रहा है। पुल बैक आएगा तो वापस 1,08,000 के आसपास अच्छी बाइंग दिखती है। गोल्ड भी पिछले 4 वीक से 4 वीक हो गए ना, हाँ, इस वीक हो जाएंगे। साइडवेज ही है, कल थोड़ा सा एक ब्रेकआउट मिला था, बट ऊपर अभी भी 15 मिनट में रेजिस्टेंस ही दिख रहा है। लेट्स सी ब्रेक कर पाता है नहीं कर पाता। मेनली ट्रिगर हुआ है बिकॉज ऑफ द सैंक्शन ऑन कनाडा बाय यूएस 35%। जहाँ पर करंट लेवल है 15 मिनट का, वो रेजिस्टेंस जोन ही है ऑलरेडी। 3 बार यहाँ से रेजिस्टेंस ले चुका है, आज भी मॉर्निंग से देखोगे उसी रेजिस्टेंस एरिया को 3 बार हिट कर चुका है। अगर थोड़ा सा ब्रेकआउट कर देता है बढ़िया रहेगा। फिर अपर लेवल पे एक रेजिस्टेंस है, वहाँ सेल करना ज़्यादा बेटर है। 3353 के ऊपर 15 मिनट की कैंडल क्लोज होती हैं दो, ब्रेकआउट मान लेना। दैट इज़ कम्प्लीटली ब्रेकआउट। उसके ऊपर एक रेजिस्टेंस है तो फिर वो नई सेलिंग वहाँ से ज़्यादा बेटर रहेगी। बाकी देखो कब तक रुकता है, वैसे सेलिंग आनी होती तो आ चुकी होती है अभी तक गोल्ड में। ठीक है, ऊपर एक रेजिस्टेंस जोन और है अभी हमारे पास, 3358 से लेकर 3363 के बीच में। तो वहाँ पर एक ही बार सेलिंग आई है, तो मोस्ट प्रोबेबली एक बार और जरूर जाएगा। थोड़ा पास पास हो जाएंगे रेजिस्टेंस, बट डेफिनेटली दैट विल अ गुड रेजिस्टेंस एरिया। एंड मोस्ट प्रोबेबली उसके इसमें नीचे एक नया सपोर्ट क्रिएट हो ही जाएगा, सो दैट पुल बैक आए तो दैट सपोर्ट एक्ट लाइक अ जो मेजर डिमांड एरिया। ये सपोर्ट यहाँ पर ये भी कई बार शिफ्ट कर चुका है लेवल से। ठीक है, एक बार यहाँ सपोर्ट ले चुका है, 2 बार ले चुका है, यहाँ पर भी ब्रेक होगा पक्का। हाँ बस ओपन इक्वल टू लो हाई में ना रुक जाए। फिर से सेल मत करना क्रूड को, ठीक है। कैंडल ओपन इक्वल टू लो बनी है वो करंट। बाकी देखो कि डेली टाइम फ्रेम पे इतना ज़्यादा कंसोलिडेशन है ये क्रूड में। उस दिन रसिया, सॉरी, यूएस और ईरान के बीच जो वॉर हुई थी, बम्बार्डमेंट कह सकते हो, वॉर तो क्या कहेंगे उसको। उसके बाद से मार्केट जब गैप डाउन ओपन हुआ था उसके बाद डेली टाइम फ्रेम पे आज 14th डे है और ये मार्केट बिल्कुल साइडवेज फंसा हुआ है। कुछ क्लैरिटी नहीं है कहाँ जाने के मूड में। तो 2 वीक से ये भी साइडवेज है, या तो थोड़ा ऊपर ही चला जाए। स्पेस है हमारे पास, जो उस दिन स्विंग बना था हाई का, दैट इज रेजिस्टेंस जोन। तो अगर ऊपर जाता है आपका आराम से, मेजर रेजिस्टेंस 6450 से लेकर 6250 के बीच में। ब्रेकआउट हुआ, रीटेस्ट करने भी नीचे नहीं आया, एग्जैक्ट लेवल पे तो नहीं आया। यहाँ नीचे आ जाए ना 5316, ये भी अच्छा सपोर्ट है। तो ऊपर भी जा सकता है, नीचे भी आ सकता है, दोनों ही स्पेस पेंडिंग है। कुछ ज़्यादा ही फाइट हो रही है लग रहा है क्रूड में। ये एक रेजिस्टेंस जोन बना हुआ है, सेलिंग काफ़ी देर से मार्केट में थी, यहाँ पर ओपन इक्वल टू हाई भी बना था। ये कैंडल, ये वाली रेड वाली कैंडल देख रहे हो ना, ओपन इक्वल टू हाई। ये एक कल वाला सब रेजिस्टेंस बना था, आज गैप अप हुआ तो ये रीटेस्ट किया, फिर से उसी रीटेस्ट पे रुका हुआ है। कोशिश जरूर करी रीटेस्ट को ब्रेक करने की, कर नहीं पाया। तो ये फंसा हुआ है इसी रेंज के अंदर, किसी एक साइड पे क्लोजिंग चाहिए तभी कुछ बड़ा मूव कर पाएगा, नहीं तो ये बिल्कुल ही ऐसी साइडवेज। सेलर ट्राई कर चुके हैं ना, बायर्स ने भी ट्राई कर लिया ऑलमोस्ट, ओपन इक्वल टू लो कैंडल बना के। Option, thank you so much for joining channel membership. If you have any question you can ask in the comment box. कहीं तो ब्रेक हो जाए। नेचुरल गैस में भी देखोगे ओपन इक्वल टू लो कैंडल अगेन, लास्ट कैंडल भी ओपन इक्वल टू लो थी, ये कैंडल भी ओपन इक्वल टू लो है। क्या न्यूज आ गई, आई डोंट नो। कोई और न्यूज़ तो नहीं है। एक बार जीएमई का स्टॉक देख लेते हैं, वहाँ से एक बार सेलिंग तो जरूर आती है। मंथली का चार्ट देखो इसका। इस एरिया पे है ना। तो जो जीएमई स्टॉक है ना उसमें नीचे अभी स्पेस है, अभी आना चाहिए उसको। ये लोग और शॉर्ट करके बैठे हुए हैं, इसका आईबी भी गिरा हुआ है, ये देखो। इसका लोअर एंड अभी भी थोड़ा पेंडिंग है जितना मुझे दिख रहा है। ये अगर लोअर एंड पे टच हो जाए तो वो भी चलेगा इसमें। यहाँ पर ना, इसको तो रिमूव ही कर दो, इसकी ज़रूरत नहीं है ऐसे भी। और अगर ये आता लगभग ये 60 है तो ये 30 हो गए समथिंग। वहाँ आता आता फिर वो नीचे आएगा नहीं, नहीं तो क्या वो कंप्लीट रेंज बाउंड हो जाएगा इस तरह से, सेम रेंज के अंदर। देखते हैं किस साइड ब्रेक होगा फिर। तो नहीं जा सकता। कैंडल भी ओपन इक्वल टू लो बनी है वहाँ पे। फोर थर्टी तो हो गया है, आधा घंटा देखते हैं और 1 घंटा और 5:30 के बाद शायद क्रूड कुछ मूव करे। रेंज बाउंड हो गया कम्प्लीटली, ना ऊपर निकल रहा है ना नीचे, या तो इस साइड निकले या फिर नीचे क्लोज कर दे, तब एक बड़ा मूव हो सकता है, आ जाए इसमें। एक्स में नहीं किया है, फॉरेक्स में किया होगा। एक्स में देख ही नहीं रहा है वहाँ पे। ये एक बार नीचे आके यहाँ से सपोर्ट ले ले, इसका भी हो गया। ये सपोर्ट ले ले, इसका चला जाए, दोनों एक साथ निकल जाएंगे, फिर ये तो रहेगा नहीं। देन एक कंप्लीट रेंज हो जाएगी स्मॉलर जोन के लिए। क्योंकि ये तो ब्रेक होने से रहा। ब्रेक कर रहा है, अगर ये रेंज ब्रेक करता है तो मोस्ट प्रॉब्ली 5820 से 840 तक जाना चाहिए इसको। अगर ये रेंज ब्रेक कर देता है क्रूड ऑयल, मॉर्निंग की रेंज है, यहाँ ब्रेक होता है तो 5820 840 के बीच में वहाँ वापस सेल करेंगे। अगर हल्का सा पुल बैक आ जाता तो ले लेते, बट अब नहीं आ रहा है, इसमें कुछ कर नहीं सकते। अभी भी रेंज बाउंड ही है, लेट्स सी निकलता है ऊपर तो मोस्ट प्रॉब्ली निकल ही जाएगा। वो काफ़ी बड़ा है, ऐसा छोटा रखना पड़ेगा। रीटेस्ट भी हो गया इसका। ये भी नहीं है फिर तो। Nope, पुल बैक भी आ जाए तो इसमें ऐसे छोटा हो जाएगा ना, अगर यहाँ से लेंगे तो दैट इज टू हाई। लुक एट दिस, इफ इस पुल बैक गिव्स द पुल बैक अराउंड हियर राइट, तो ऐसे ज़्यादा नहीं होता, सिर्फ 20 पॉइंट का ही बनता है। एंड द टारगेट विल बी अराउंड दिस 1:6। अंडरस्टैंड? नेचुरल गैस में देखो एसएल थोड़ा सा बड़ा है, मैंने छोटा करके लगाया हुआ है। ओवरऑल देखोगे तो 293 तक पूरा एसएल जाता है, बट वो थोड़ा बड़ा हो जाएगा। अगर वापस यहाँ से सेल कर रहे हो तो फिर 293 का एसएल रखना पड़ेगा, ध्यान रखना, क्योंकि ये ऑलरेडी 50% लेवल पे आके, ये 50% लेवल है वहाँ तक का, वहाँ तक आके सेलिंग दे चुका है। थर्ड टाइम आ रहा है इसी लेवल पे। चलो अब तो चाहिए एटलीस्ट, अगर वहाँ पर भी रुकना है इसको। नेचुरल गैस तो सीधा ऊपर तक जा सकता है, स्पेस काफ़ी है। ओके, क्रूड ऑयल अगेन ओपन इक्वल टू लो, मोस्ट प्रोबेबली ब्रेक हो जाएगा रेंज। ठीक है, अगर देखो दो ये ब्रेक होता है, दो पॉसिबिलिटी, या तो वापस नीचे आ जाता है, नीचे आता है तो वापस वो सपोर्ट कंप्लीट स्ट्रॉन्ग बन जाएगा ऑटोमेटिकली। अगर ऊपर जाता है तो फिर 2000, जैसा मैंने बताया, 5820 840 के आसपास तक जाने की स्पेस वहाँ पर है, ऊपर और स्पेस है, बट फिर वहाँ से सेलिंग जोन स्टार्ट हो जा रहा है। तो अगर सीधा आया तो फिर 5820 840 से सेल करेंगे। करने को नीचे से भी कर सकते हैं, बट अगेन वो एसएल इतना बड़ा हो जाएगा कि रिस्क रिवॉर्ड ही नहीं बनेगा। तो ये भी एसएल छोटा नहीं है कोई, एटलीस्ट इतना तो रखना ही पड़ेगा। 1:3, ठीक है, 1:3। तो ये भी नीचे आ जाए और फिर यहाँ से बाइंग स्टार्ट हो जाए और इसमें सेलिंग, दोनों स्पेस हमारे पास। ये 5 PM हो गया, 30 मिनट और है, लेट्स सी।
This is an iHeart podcast.
Today, we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with the latest developments on global trade. President Donald Trump is threatening a 35% tariff on some Canadian goods, an increase from the current 25% rate that would take effect August 1st. But as Bloomberg's Bill Ferries reports, this increase would not affect goods under the terms of the current U.S.-Mexico-Canada agreement.
That might be a little misleading as a headline number. I mean, our understanding of this is that it would not apply to products or goods and services that are already covered under this USMCA trade agreement with Mexico, Canada, and the U.S. So that's the majority of goods traded between the U.S. and Canada right there. So things like energy as well are subject to a lower 10% tariff. In terms of the 35%, I think we're going to need a lot more details from the White House before that goes into place about which products. But it doesn't look like that kind of broad swath of tariffs across everything that comes south from Canada.
Bloomberg's Bill Ferries reports President Trump's announcement on Canada came as he told NBC News he's also eyeing blanket tariffs of 15 to 20% on most trading partners.
Nathan, Vietnam is seeking to lower its tariff rate by the U.S. Sources say the country's leadership was caught off guard by President Trump's announcement last week of a 20% tariff. Vietnam is pushing for a tariff in the 10 to 15% range.
And Karen, Brazilian President Luiz Inácio Lula da Silva says his country can survive without trade with the U.S. and will look to other partners to replace it. In a broadcast interview, Lula said Brazil's trade with the U.S. represents 1.7% of his country's GDP. And quoting here, it's not like we can't survive without the U.S. Earlier this week, President Trump threatened 50% tariffs against imports from Brazil.
Meanwhile, Nathan, tariffs on China remain in the spotlight this morning. Secretary of State Marco Rubio met his Chinese counterpart Wang Yi in Malaysia. It marks the first in-person session between the two, and Rubio came away hopeful.
Very positive interaction, and constructive is the most important part. At the end of the day, look, no matter what, the United States and China have to have relations. We have to have communication. We have to be able to interact with one another. And it's just impossible for the foreign ministers of our respective countries to not engage in conversation. So I'm glad we had that meeting today. There's a lot of work to be done. No one's saying it's easy, but we do have some opportunities on some things we might be able to work on to begin to build some momentum in our relationship. I thought it was a very good meeting. I really felt encouraged by it. But look, there's work to be done.
Secretary of State Marco Rubio added that President Trump has a very positive relationship with President Xi and says the odds are high that there will be a presidential summit between Trump and Xi. Back in May, the U.S. and China agreed to temporarily slash their high tariffs imposed on each other.
Now, Karen, when it comes to the impact the tariffs will have on inflation, St. Louis Fed President Alberto Musalem says it's still too soon to tell. He spoke at an event in St. Louis yesterday.
The outlook for inflation that I have, and it's in accordance with what many private forecasters have, is for inflation to increase going forward, mostly owing to tariffs, which may settle somewhere between the low teens or the low 20s, depending on trade policy.
St. Louis Fed Chief Alberto Musalem says the tariff impact on inflation so far has been mild, but he expects it to show up more in the data starting in June, July, August, or September.
Nathan, President Trump says he plans to make a major statement on Russia on Monday. In an interview with NBC News, the president repeated his criticisms of Russian President Vladimir Putin over his continued attacks in Ukraine. He says he expects the Senate to pass a tougher sanctions bill sponsored by Republican Lindsey Graham, though it's his option whether to use it. And he says he's reached an agreement with NATO for allies to buy U.S. weapons that would then be sent to Ukraine.
Well, later today, Karen, President Trump's focus turns to the flood disaster in Texas. He does plan to visit Texas Hill Country today, where at least 120 people were killed in last weekend's flash floods and more than 170 are still missing. Fredericksburg, Texas Fire Marshal Reagan Rapke says more than 2,000 local, state, and federal workers are still searching for victims in Kerr County.
And we have heavy equipment working, and we're having to dig through it by hand as well. Just because the machines can go through it, we have to be very methodical about what we're doing.
It's Fredericksburg Fire Marshal Reagan Rapke. President Trump's expected to get an aerial tour of some of the hard-hit areas and meet with first responders and relatives of flood victims. Texas's 2 Republican senators are expected to join the president aboard Air Force One.
Nathan, let's turn to the markets where futures are lower as we close out the trading week. Yesterday, the S&P 500 closed at a record as it nears the 6,300 level. Veronica Willis is global investment strategist at Wells Fargo Bank.
The market's seen a really impressive rally from those lows earlier this year. Maybe has gotten a little bit ahead of itself. There's still some uncertainties related to trade. We've got, earnings season coming up, which could start to see some of those impacts around that uncertainty around prices and uncertainty around tariffs.
Wells Fargo Bank's Veronica Willis. The S&P 500 is up almost 7% so far this year. Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. The Wimbledon semifinals begin today with the American Taylor Fritz trying to upset the two-time defending champion Carlos Alcaraz, and then it's Novak Djokovic against the top seed Jannik Sinner. Cooper Flagg's first game in a Dallas Mavericks uniform. NBA Summer League in Las Vegas. It didn't go well. He shot 5 for 21, 0 for 5 for 3. It did make a late defensive play and an assist that led to the game-winning shot. Dallas beat the Lakers by 2. Bronny James missed a game-winning 3 at the end. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
Remember when a single technology glitch could bring an entire workday to a standstill? I'm Mark Banfield, Chief Commercial Officer at TeamViewer. Today, most technical issues are recurring. If you know the patterns, these issues can be remediated before they impact your business. One major UK retailer discovered a single point of sale outage cost them around $1 million in lost sales during a single lunchtime. Now, using TeamViewer's digital workplace platform, the same company is able to identify and fix those issues before they even happen. But proactive troubleshooting isn't just about the incremental improvements. It's about fundamentally reimagining how work happens for everyone. And the companies that move first get competitive advantages in terms of efficiency, productivity, and innovation. To find out more, visit bloomberg.com/TeamViewer.
The data that matters for your investments.
Shares of banks across the board are gaining.
And analysis on the companies making news on Wall Street.
NVIDIA, once again, the top dog.
Tesla's really taking a hit this morning.
Listen to the Stock Movers Report from Bloomberg.
Wind and solar stocks on the move.
It's your short audio report on the day's winners and losers in the stock market.
The biggest one-day decline since 2010.
Subscribe to the Stock Movers Report on Apple Podcasts, Spotify, or wherever you listen.
This is an iHeart podcast.
What do 35% tariffs then mean for the nation of Canada and its trade with the U.S.?
Well, 35% tariffs, as Paul just mentioned, it doesn't actually, it's not going to be as impactful as it might seem initially on the headline when you read it, because the USMCA and goods traded through USMCA trade deal are actually exempt. In other words, the majority of trade between Canada and US, so think machinery, auto, and auto parts, all of that will be exempt from the higher 35% tariff. It's also not that much higher than where we are already at the 25% level. So that's potentially why we're seeing markets not trading as much on this, even though the loonie obviously had some fluctuations earlier. And it's also kind of remains to be seen, right? Like we've seen this game before where there's a tariff announcement, it gets moved back, especially for Canada, because Canada still needs to have this negotiation with the U.S. and Mexico about updating the USMCA. So there's kind of an open question. Will this tariff go into place before then? Will it just be used as a negotiating tactic as they continue speaking? So it's not overall not as maybe big of a deal as first thought.
Katya, what is the state of play, meanwhile, for U.S. trading partners that have yet to receive letters? Canada has received that letter. Now President Trump, there was an assumption that the baseline tariff would be 10%. Now President Trump is putting a question mark over that.
Yes, it was a huge week in tariffs. I mean, even starting from Monday, we got the tariff letters on all of these economies that went up to the double digits. They were kind of mostly in line with what we saw on Liberation Day. And there's a few economies who are still in negotiation. So Japan and South Korea really actively trying to bring those levels down and try to avoid getting those tariffs in place before August 1st. But the 20% level is interesting strategy, because it would effectively double what markets and economists had expected from President Trump on the universal level, and basically doubling the economic damage. And then the question becomes, well, is this just sort of a tactic from President Trump, who, as Paul just mentioned, he monitors the markets. The markets aren't moving too much. It will just embolden him to take further steps and raise tariffs further until those markets start reacting, at which point he dials it back. And the answer right now, at least for today, we're not sure. But, I mean, we can expect next week to be full of more surprises as well.
To next week, Katia, then, what are you and the team going to be watching for as the tariff story unfolds towards what is now apparently the new deadline of August the 1st?
Well, there's going to be a lot of action in terms of scrambling for further talks. We have Scott Bessent and Lutnick in Japan next week, for example. We're also going to get a lot of economic data that's going to really underscore what's at risk here for economies. So Japan and China, we're getting just a slew of data from across the economy, from the unemployment rate to inflation, labor market dynamics, and GDP, of course, in China's case. And it's going to show what's at risk. It's going to show how exports continue to really stay weak on the back of tariffs, and not just tariffs, but uncertainty. It might show that investment and industrial production is likely weakening on the back of the uncertainty as well. We're seeing price pressures. So already companies across Asia are paying for the tariffs in a way, because they're negotiating with the U.S. and their U.S. companies that they supply, and they're going to have to knock down those prices further, likely. So we're going to see a lot of that in the trade data next week, starting from Monday.
Has Putin lost Donald Trump?
I think for Democrats, I think that would be a little bit of a stretch. Let's just say that. I mean, you look at, but certainly the president is fluid. So, you know, we saw that White House piece with Zelensky in the Oval Office.
Yeah, right.
And so that was pretty
It's like
heated.
a different world now.
It is a different world. I think, you know, certainly for Democrats, it will be more of a wait-and-see approach. Certainly there is bipartisan support for this package, as was just stated, and strong bipartisan support. But that bipartisan support has existed for a while. So there has been a push to really, and I think significant conversations with the president and the White House about moving that forward. And the Republicans in Congress have, to this point, stepped back. Now, we got a little bit of a green light from the president, and obviously Secretary of State Rubio also made some comments as well today. Yeah. So those were all promising, but I think from a Democratic perspective, it's a question of, is this a negotiating tactic to send a message to Russia to kind of get back to the negotiating table? Number one. And number two is, if it is, if the president backpedals a little bit, what does the Senate do? Do they go forward?
Right.
And I think that's the big critique on the Democratic side, is there needs to be checks and balances. Congress cannot be just a rubber stamp.
Who are the leaders who are going to take this up on the Democratic side? Is it the Mark Warners, the Tim Kaines? Does Hakeem Jeffries feel the same way?
You know, I think the DNA on the Ukraine issue is very strong, bipartisan DNA, right? Like you do actually, if you recall, when this all started, the Biden administration was weighing their options.
Sure.
And you saw this upswell from Democrats and Republicans in Congress for support for Ukraine. And we've seen that consistently throughout. So even we were talking about the Russia sanctions package. If you look at the House, really isn't an issue because we're going to see Democrats step up. We're going to see Democrats step up for Ukraine, and we've seen them same on Russia. I think the challenge has been so far for Democrats is even on enforcement of the Russian sanctions. There have been some, as you know, investigations in the Senate led by Senator Shaheen about whether the administration has been doing what they need to enforce these and whether Russia has been sidestepping the sanctions. So I think on Ukraine, absolutely. I think we're going to see Democrats across the board. You look at the ranking member, Greg Meeks in the House. You look at, I think it's across the Democratic caucus in terms of unified support for Ukraine.
The Lauren Boeberts, Marjorie Taylor Greenes, and aforementioned Steve Bannons of the world cloud the greater Republican feel for Ukraine on Capitol Hill?
I think that's the beauty of when you have bipartisan policy. It's much stronger, it's much more sustainable, and then you don't need to worry about maybe, let's say, fringe elements, right? And I think that's what we have on this issue.
Well, absolutely. So John Thune says a vote as soon as this month. Do you think that happens? And as a Democrat, do you worry about the language that's been inserted on behalf of the president? He will basically have total purview about whether these sanctions would be implemented or lifted.
Well, I think that is the open question, right? Is where does the president ultimately land? Because the language is still a little bit, he's open to them. We haven't seen a firm commitment. And then also we've seen in a lot of these discussions where the president, again, can be fluid. So, you know, circumstances can change for the president. So I think that's number one. But number two, I think it is a question for congressional Republicans, is that are they going to take a stand here and really assert their power? And I think for Democrats, that is fundamental because this whole notion of co-equal branches of government. And checks and balances, and particularly in something as important, and because this on and off again kind of approach on Ukraine, that also is damaging.
Yeah. Is this how Pete Hegseth loses his job in the end? Over that decision?
No, I think ultimately, if his fate is in the hands of Donald Trump, I think that's clear.
Who doesn't like to be overruled?
So, yeah, so time will tell.
Progress never stops. Neither should you. At
profits not to reflect that.
A close to 40% rally off the lows on a KPW bank index from the lows of April. Unreal. Futures this morning pulling back a touch from all-time highs. We're down by 0.5%. With an update on stories elsewhere with your Bloomberg Brief, here's Lizzie Burden. Hey, Lizzie.
Hey, John. Secretary of State Marco Rubio met his Chinese counterparts on the sidelines of the ASEAN talks in Malaysia. It's the first in-person meeting between the two since President Trump returned to the White House. After the meeting, Rubio told reporters odds are high for a meeting between President Trump and China's Xi Jinping. Elsewhere, New York City Mayor Eric Adams raised more than $1 million in his re-election effort in a single night in a fundraiser in Manhattan. It's a stark turnaround for Adams, who in March reported raising just over $18,000 in a two-month period. In recent weeks, his campaign's been boosted by donors and business leaders opposed to the Democratic nominee, Zohran Mamdani. And the original Hermes Birkin bag sold for a record $10 million at an auction in Paris. The 40-year-old black leather handbag sold after a bidding war that lasted more than 10 minutes. Tokyo-based designer goods reseller Valuance Japan bought the bag and said that it will exhibit it as a piece of, quote, global cultural heritage. And that's Viva Brief, John.
Lizzie, thank you. More from Lizzie in 30 minutes' time. Keep it together, Bramo.
Well, I mean, first of all, two things. That's where AMH is, clearly, to bid on the Birkin
I was
bag.
missing her.
Yeah, exactly.
I need the take from Anne-Marie.
And then the second thing, and this was pointed out by Chris in the control room, is sort of the Mamdani and then the Birkin bag is fantastic. Yeah. It's sort of this wonderful contrast in 2025.
Is that what he's campaigning on later on this year?
The $10 million Birkin bag.
Some people have got too much money.
Yeah, well, that seems to be his take, but there shouldn't be any billionaires, right?
So I hear. Up next on the programme, a tale of two consumers.
If we look at other categories, discretionary categories like restaurants, you're seeing fewer, but some households pull back completely. But the people who are still going out to eat are going out more often. You've got a little bit of a disconnect, and it's kind of a tale of two cities.
Up next on the programme, we'll catch up with Stephanie Roth of Wolf Research, live from New York. You're watching Bloomberg TV.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Technology is embedded in every aspect of our lives and laying the foundation for the future. From finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Drulers in Hong Kong. I'm Sherian in Tokyo. Watch Bloomberg Tech Asia. New episodes every month, only on Bloomberg Television.
AI should be for everybody, from leaders to the working on the floor. And we can save percent of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think machine in the past help our hand and legs. Now the machine help us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I ask whole corporations study how will you bring generative AI to the job.
In case you missed it on Bloomberg Insight.
I think it is wrong to say that China in this area has the upper hand. We are both vulnerable. We are both interdependent.
Yes, so what Trump sees as anti-American is survival for other countries. And to some extent, if he comes down very hard on the Southeast Asian countries, I think what he's going to find is that China is the beneficiary, not the loser.
Don't miss Bloomberg Insight live weekdays.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Tehran, and this is Bloomberg.
Slow grind towards the weekend, almost there. Equity futures down about 0.5% on the S&P. Little change so far this week, coming into Friday at all-time highs. Just a small pullback so far, down by 0.5 on the Nasdaq 100 also. Under surveillance this morning, it's a tale of two consumers.
there are certain households, lower income households, who are pulling back completely from making purchases in travel. If we look at other categories, discretionary categories like restaurants, on the other hand, again, same analysis. You're seeing fewer, but some households pull back completely. But the people who are still going out to eat are going out more often. You've got a little bit of a disconnect, and it's kind of a tale of two cities.
So here's the latest. Mixed messages for the consumer coming from two corporations. Delta Airlines restoring guidance, saying travellers are coming back. Meanwhile, Amazon seeing a plunge in Prime Day sales compared to last year. To discuss, Stephanie Roth of Wolf Research. Stephanie, good morning.
Good morning.
Who's got it right? Is it terrible or great? Is it Amazon or Delta?
It's always somewhere in the middle. So I think what we're seeing is services were hurt in the first half of the year, largely driven by concerns around the economic outlook. A lot of that's super discretionary. So people pulled back there, especially when it came to travel. That's going to start stabilizing through the back half of this year. And then people pulled forward their demand for goods because they were concerned about tariffs. So now we're going to have the reversal of that, where the services side of the economy gets a little bit better, and there's a little bit of an air pocket on the goods front.
There's a much more simplistic way of explaining what John just said, which is people are buying $10 million Birkin bags, and then they're voting for socialist policies because you have the tale of two consumers, right? I mean, kind of what we were discussing before. Is that overly simplistic, or do you see that gap widening in terms of the ability of consumers to keep spending on the lower income side as well as the higher income side?
Yeah, I think that gap will persist. I don't think it's necessarily going to get materially worse. Of course, at the very low end, they are certainly hurt by tariffs more so than other folks. But we'll see the low-end consumer continue to remain, fairly sluggish. But the rest of the economy should be okay. And it's going to largely depend on the labor market. To the extent that the labor market remains okay, we don't see layoffs picking up materially, then the consumer should spend, albeit at a fairly slowish pace, somewhere around 1.5%.
So just to extrapolate this a little further and get a little bit, existential, because it's Friday. It's Existential Friday. There's been this sort of overlay of a theme where white-collar jobs have been disappearing, and there are fewer of them and they're higher paid. And blue-collar jobs are actually expanding. And people are able to get blue-collar jobs because there are immigrants who are leaving the country or who aren't coming in as quickly, and because there is a much bigger demand for that. Are we actually seeing that in any of the economic data that will actually boost the lower and middle income end and will actually give some sort of tailwind, frankly, to a lot of the consumer-facing companies?
Yeah, I think that's a really good point. And the latest jobs print might have been the first indication of that. We saw downward pressure on the unemployment rate. Yes, the driver between native-born versus foreign-born is not entirely clear, but I think what we're starting to see is that there's some funky things under the surface that's really putting downward pressure on the unemployment rate as a result of this reduction in immigration. That's going to put upward pressure on wages for blue-collar workers, which could start to help that feed through the data. Granted, a lot of the major changes on immigration only happened at the end of May. So we're really just starting to see the effects of that, and it should take throughout the course of the summer, perhaps into Q3, to become more abundantly clear.
You've referred to three different sources of inflation through this conversation so far: goods, services, and labour. How is CPI next week going to capture that story?
Yeah, so I think we're going to start to see inflation creep up a bit. We're looking for 0.26 on core. June should be kind of modest compared to the next couple of prints that we're going to get. And it's important to flag that financial services should also be a big source of upward pressure. So that's one thing we didn't even talk about. But that's been pulling downward pressure on core PCE in the last couple of prints. It's very much going to reverse on the back of strength in equity markets. So what we're looking at is a string of core PCE of 0.3% or above for the next couple of prints, which makes September a really difficult backdrop for the Fed to be cutting.
So you think it's hard for the Fed to cut in September, at a time when the likes of Governor Waller's going around saying, hand up, let's go? Might have to cut rates as soon as the next couple of weeks.
He's also saying, hand up, I'll take the job as Fed chair. So there's some
You think it's political? When he sits there and says it's not political, you think it is?
Yeah, I think he's vying for the chair job. He doesn't seem to be towards the top of the list, but I think he would be a good candidate for it. But I think he's trying to get the job. I think that's the main message there. The Fed does want to cut. They are looking for an opportunity to cut a couple more times. I just don't think that the data are going to be consistent with that by September.
One of the reasons why there is a legitimate economic argument that we've been hearing to be cutting rates sooner than later is because there are sources of disinflation, and we are seeing that, and housing prices is one of them that we keep pointing to. Why is that not fair, given that it's about a third of CPI?
Yeah, I mean, but it tends to move fairly slowly. It's going to continue to kind of ratchet down. And in this print in particular, we actually think, just given the volatility in owner's equivalent rent, we actually think it could bounce back a little bit, at least just temporarily. But the rest of the inflation metrics are going to be moving the other direction. So sure, housing could be decelerating, but when you get goods prices picking up, travel starting to rebound a little bit, that's just a tough backdrop for the next couple of prints.
Bank of America's Michael Hartnett came out earlier this morning and said, when we look back, the 2020s are going to be an inflationary decade that reverse a lot of what we had seen over the past 4 decades of disinflation. Do you think that the evidence has borne that out, or do you think the jury is still out to really understand how this is all going to shake out, what the ramifications from supply chain disruptions from the pandemic will be, and how much tariffs will really rejigger that?
No, I think this is just a fairly temporary second inflation shock, and we're going to be looking in a year and a half time, we're going to be moving back down towards 2% on inflation, and this will not really be a big issue. Granted, for the next couple of months, it's just difficult for the Fed to cut, just because there are temporary inflation upward pressure.
So you think Governor Waller does have a credible argument here for lower rates? The one he's articulating, you think he might be running, okay, that's your opinion, but ultimately underpinning that is a credible argument for lower interest rates.
There's a credible argument for lower interest rates. I think now is tough to sort of rush into it, just given inflation should be elevated for the next couple months. And there's not a rush. The economy's okay, and it's proved to be not that interest rate sensitive. So there's not that much harm in waiting a couple of months until we just see where inflation ultimately settles.
I still remember when Bill Dudley came out years and years ago and said Fed funds might have to go through 5%, and everyone said 5%, good luck, this economy will crater. Didn't happen.
And part of that is because a lot of people had already extended out a lot of their personal maturities. How much it really will be stimulative if they do cut. You could say on one hand, it's not a big problem, you can wait, but you could also afford to cut then, especially if it's politically expedient.
Just before you go, just quickly, when's the first cut? What month have you got penciled in on the calendar?
I think we're talking mid-2026.
You think the first cut is mid-26?
Yeah, because I think we're going to see inflation a little bit elevated here. Then growth is going to remain pretty strong. We're going to have positive stimulus from the fiscal bill, and it's going to be just a tough backdrop for them to cut. Eventually they will. They certainly want to, and it makes perfect sense for them to get there. It's just going to take some time.
And we'll have a new Fed chair in the middle of 2026.
You know who agrees with her? Bill Dudley, the person who thought that there'd be 5% interest rates.
Stephanie, it's good to see you. Thanks for
see
dropping by. Stephanie Roth there of Wolf Research. Coming up next, Jose Minaya of BNY, Angelo Zeno of CFRA, Steve Rasciuto of Mizuho, Walter Piecyk of Lightshed Partners calling for a change at the top of Apple. That conversation in the next hour.
A cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
In case you missed it, on The Pulse.
I think the idea of wait and see and pause is really yesterday's news. Our best advice to CEOs right now is that if you're not operating differently than you were a year ago, you may be falling behind. Yes, we need to build resilience, but we need to also build growth despite the environment, and that requires a different strategy than just a year ago.
Don't miss The Pulse, live every weekday.
Bloomberg launches our inaugural 25 African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We're integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
In case you missed it, on Bloomberg Open Interest.
Where would you like to see the 10-year?
I think that we could see a further lowering of rates. I think inflation is very, very tame. I am focusing on the 10-year. So as we see inflation come down, I think the whole curve could parallel shift down.
Don't miss Open Interest live weekdays.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What started out as just a relief rally is starting to become something real.
The markets are adjusting. There's no panic so far.
If you're looking at what's been working in markets the last couple of years, it's quality stocks.
The market is pricing in a friendly sort of mix of growth, inflation, and policy.
Equities and risk are discounting the here and now.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P pulling back from record highs. We're down by 0.5%. Similar move on the Nasdaq 100, down by 0.5. The Russell this morning down by 0.9. As we work our way into the weekend, look ahead to next week. Fireworks, CPI, Tuesday, alongside earnings from JP Morgan, Wells Fargo, and Citi.
Yeah, the earnings to me really are front and center. CPI, of course, we're going to be looking for any type of tariff ramifications coming through that tariff-related inflation or not. The earnings that will give maybe the better picture. Do we see a repeat of things are stable, a la Ed Bastian over at Delta, or do we see beginnings of a sign that there's some sort of hit to the economy? If we don't see that, which is what's widely expected, how much more can this market rally?
Erica Najarian of UBS said blue skies and sunshine for the financials next week after a rally of almost 40% off the April low. Let's go with Jamie Dimon. Let's think about Ed Bastian. Ed Bastian of Delta is making the argument that businesses now have more certainty than they did in the first quarter.
And part of that stems from the one big beautiful bill. I mean, this to me is the certainty that a lot of people are looking at to give a sense of the tax planning, of what kind of investment they could potentially do. Key question will be, does it give them the stability to make large investments that might hinge on supply chains? And that, I think, might be something that some of the bank executives could answer.
Yeah, compare that to Diamond, who's talked about businesses sitting on their hands. Are they still sitting on their hands? Or do we see that pickup in activity in the second half that many of the bank bulls think we will see?
And this is what we've seen with respect to recent acquisitions, even with Kellogg, for example, the Nutella and Fruit Loops. I keep thinking about that and thinking, why would anybody do that? But going forward, how much more can we see of certain companies that see a benefit of being larger and could see enough of some of the noise dissipating to really have that conviction and make those investments?
A fantastic lineup of guests so far this morning, including the conversation we had about 5-10 minutes ago. Stephanie Roth of Wolfe Research, making a case for the first interest rate cut to come in the middle of next year, 2026, and looking for firmer inflation reports going into a tricky September meeting. I don't think that's what this market and many people are looking for going into next year.
You know, this goes to the question, and you've been asking it all morning, and rightly so, how much does this equity market depend on rate cuts? And what we've heard from the bulls is it doesn't at all. And it actually can continue with the gains regardless of any kind of rate cuts. A number of people have said that's not true. You need the disinflation to continue in order to support the rest of the environment. But ultimately, that's the question. Is Stephanie's view prohibitive to further gains on the equity market, or is it supportive because the stability in the economy is what will actually keep driving the equity market higher?
Equity so far this morning, negative by 0.5%. Coming up this hour, Jose Minaya of BNY on investing in a volatile environment, Steve Rasciuto of Mizuho on a shock-proof economy, and Walter Piecyk of Lightshed Partners calling for disruptive change at Apple. That is must-watch later this hour. We begin this hour with stocks lower as President Donald Trump floats a higher global tariff rate. Jose Minaya of BNY Investments and Wealth writing this: volatility is here to stay invested, and look for the right diversification. Jose joins us now for more. Jose, good morning.
Hey, good morning.
Just want to pick up on that first line. Volatility is here to stay. Why is that?
Look, I think volatility, clearly, we're at an all-time high or peak in terms of the noise in the markets. If you just think about back to the beginning of the year, our team kind of added around 26, 27 different policy changes or news cycles that really kind of impacted or jolted the markets. Yet the markets have kind of powered through that, right? I think I was on one of your shows earlier in the year saying around, hey, you should not be risk off. And this was like right after Liberation Day because of like what we're seeing in the fundamentals and trying to look past this noise. Seeing a White House and administration, there's a little bit around the carrot and the stick, right? We saw a lot of the stick at the beginning of the year. Now you're seeing more of the carrot. And again, the markets are responding to that. So it's less about today when we talk to our clients around, hey, what should you be invested in or not? But it's more about what are the solutions you're looking for. You're seeing more and more of that in the industry, whether it's technology with kind of SMA capabilities, what you're doing with model portfolios, which we do in BNY Advisors. Across the board, it is about staying invested through these times, but kind of understanding what outcomes you're looking to get.
Well, let's run with that. Stay invested, long-term time horizon. Got it. What are these strategic anchors you're offering people to get them comfortable with doing just that?
Well, I think, again, it depends on their needs and outcomes. In some cases, it might be, hey, they're looking for income, right? Like, we create a lot of like what we call like, bond portfolio in a box or personal bond portfolios with our Insight investment platform, where it's like we're getting very customized in how we deal with our clients. It might depend on when are you looking to retire? Is there a wedding? Is there educational needs and these things? So you might need principal protection. I've got a new niece on the way. In that case, I'd be like, hey, you should just go long equities. So again, we could spend a lot of time thinking about the noise, the volatilities out there. If you look at, it hasn't paid off to just say, I'm going to stay off the markets. And there's still a lot of cash out there. But again, that idea of I'm going to stay invested, but am I really focused on my solutions and my outcomes versus call it a 60-40 type of portfolio?
Congratulations on your incoming niece and going all equities in response. I am curious, though.
For her. Yeah.
For her, for the niece, not necessarily the parents. But I am curious about how much going forward the ballast for income comes from the same place. You said not necessarily a 60-40 portfolio. Let's say someone is conservative and looking for income. Does it still come from U.S. Treasuries? Does it still come from credit? Or do you have to look elsewhere for that type of ballast?
No, I think the markets are becoming a lot more efficient, and they are looking elsewhere across the board. Again, we've seen the advent of private credit. It kind of plays a big part of this. You saw with the Secure Income Act where now annuities and guaranteed income contracts are being allowed to be used in 401k portfolios. I think these are all important legislations that are all kind of recognizing the incredible crisis we have from a retirement perspective, not just globally, but definitely in this country. So you need to kind of look more broadly.
There's a little bit of skepticism in younger generations, it seems. There's this concern that maybe the same kind of gains that the older generation saw in their portfolios are not going to subsist in their generation. Do you think that it will? Do you think that the returns will be the same in the next 10 years that it has been for the past 30 years for a generation that has gotten wealthy off stock market returns?
I don't. And what I mean by that is, if you look back over the last 20 years, you would have been, for all this discussion around different investments, hedge funds, private equity, at the end of the day, you would have been just fine doing a very low fee, kind of like passive equity funding. You would have been just fine. I don't think that's the case in the next 10 to 20 years. There's just a lot more volatility. There's a lot more volatility out there. I think returns are going to be more measured, yet it's, again, finding your spots. Again, it's not about anymore, can I find the strategy that just I can sit back and it's just going to grow 15, 20%. It's being able to do the work around how you diversify your portfolio.
I applaud the risk appetite of the younger generation, looking at things like crypto, don't you?
Well, where else do you
Their
get
risk
the gains?
appetite is far higher than it was when we were growing up.
But maybe not necessarily for the same instruments. And this is exactly where I was going to go. It's for Bitcoin. It's for hedge funds. It's for NFTs. It's not necessarily for some of these other instruments. And are they correct?
Yeah, I would actually, slightly disagree, John, a little bit, that I think if you look at the younger generation, they tend to be a lot more risk averse in terms of buying a home. They're buying their first home.
Well, that's an affordability issue.
Affordability.
They just can't afford it.
Yeah, but I have conversations with some of these folks, including in my family, where they're heavy in cash. But if you look at their portfolio, what they're invested in, they are invested in crypto or these things. So there's a lean here to technology and some of these quote unquote cool things versus, look, just put your money in a 401k and max it out. Hey, by the way, do a balanced portfolio, set it and forget it. That stuff, I think there's a lot more risk aversion.
Can we get your ideas on what to do with bonds? This is what Michael Harder of Bank of America had to say this morning. Best performer decade to date, gold. Worst, Treasuries. Calls it a decade of inflation. What should you do for the decade ahead, and what do you do with that bond portfolio? You talked about income. A lot of people are very worried about inflation hanging around for too long.
Yeah, look, I think we've got a more kind of constructive view on inflation. It's why we still see the markets kind of maybe topping out, or the wide end for us is around 6,400 S&P. But look, I think this is a time where there's likely to be more rate cuts coming, right? You can debate whether that matters or not. You were just having that conversation. I think it's a good time to lock in yields today. And again, for us, it's not necessarily just about what's going on with treasuries, right? It's again, how are you looking at your overall platform and portfolio? There's a lot of different kind of characteristics to take into account.
Jose, I appreciate your time.
Thank you.
Thanks for giving it to us. Thank you. Jose Minaya there of BNY. Similar argument on income from Emily Rowland a little bit earlier this morning.
There's value there. And actually, it will serve a similar, well, not necessarily the same kind of role that it has played in the past, but it will still provide income. And that's the reason why people have been going into credit. That's the reason why people have been going into treasuries. You're actually getting something for them. So why don't you get them now, even after some of the biggest consecutive losses that we've seen in a generation?
Even with credit spreads super tight. How many times do we hear the same argument?
And it's what's borne out this year in the market. I mean, let's just call it what it is. It's actually been the ongoing grinding tighter in that spread picture, despite some of the naysayers.
Credit spreads are near the tights of the year. Equities coming into Friday, all-time highs. Check out the Treasury market this morning. Yields higher by 4 basis points so far. The 30-year at 4.91, the 10-year at about 4.38. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Lizzie Burden. Hey, Lizzie.
Hey, John. President Trump is threatening a 35% tariff on some Canadian goods. The tariff is an increase from the current 25% tariff level and would take effect on August 1st. It would be imposed on US imports from Canada that aren't shipped under the terms of the US-Mexico-Canada agreement. Trump also told NBC News that he's eyeing blanket tariffs of 15 to 20% on most trading partners. And President Trump plans to visit Texas Hill Country today, where at least 120 people were killed in last week's flash floods and more than 170 are still missing. President Trump is expected to get an aerial tour of some of the hard-hit areas and met with first responders and relatives of flood victims. And Apple is planning a release of a line of new products during the first half of next year, including a new low-end iPhone, multiple iPads and upgraded Macs. The budget smartphone, dubbed the iPhone 17e, will be a follow-up to a $599 model that Apple launched earlier this year. And that should be my beast, John.
Hey, Lizzie. Thank you. More from Lizzie in about 30 minutes' time. Up next, the Morning Calls Plus. Bloomberg's Ed Ludlow and Angelo Zeno of CFRA as NVIDIA's Jensen Huang takes a visit to the White House. Live from New York. You're watching Bloomberg TV.
Technology is embedded in every aspect of our lives and laying the foundation for the future. From finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Drulers in Hong Kong. I'm Sherian in Tokyo. Watch Bloomberg Tech Asia. New episodes every month, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
What do 35% tariffs then mean for the nation of Canada and its trade with the US?
Well, 35% tariffs, as Paul just mentioned, it doesn't actually, it's not going to be as impactful as it might seem initially on the headline when you read it, because the USMCA and goods traded through USMCA trade deal are actually exempt. In other words, the majority of trade between Canada and US, so think machinery, auto and auto parts, all
5:30 ऑलरेडी हो चुका है, ध्यान रखना थोड़ा सा. नेचुरल गैस स्टिल ऑन रेजिस्टेंस, ठीक है. अब फेक ब्रेकआउट देने की कोशिश करी है रेजिस्टेंस पर ही. वो ऊपर जो ब्लू कलर की लाइन ड्रॉ करी है, दैट इज अल्टीमेट रेजिस्टेंस. मैंने पहले ही बता दिया है, वो लेवल काफ़ी बड़ा है रेजिस्टेंस का, तो उसको थोड़ा मैंने छोटा कर दिया है. बट दैट इज़ अ लास्ट रेजिस्टेंस, के ऊपर नहीं निकलना चाहिए क्लोजिंग बेसिस पे. बाकी मैं एक्सपेक्ट कर रहा हूँ इस लेवल तक आना ही चाहिए. एक्सपेक्टेड है यहाँ तक आएगा ये. यहाँ पर देखते हैं अगर वापस बाइंग बनती है तो. भाई क्रूड ऑयल भी नीचे वो रेंज ब्रेक कर चुका है. नीचे मेन ये स्ट्रॉन्ग सपोर्ट है. अब ऊपर आता है, देखो ये पूरा रेजिस्टेंस जोन है. कोशिश करना हाई लेवल से सेल करो सो दैट एसएल छोटा बने. नीचे से सेल कर दोगे तो एसएल बड़ा हो जाएगा, नहीं तो. बाकी डेटा तो कुछ है नहीं. 5:30 न्यूयॉर्क सेशन ओपनिंग, 7 PM पे अब सीधा यूएस मार्केट ही ओपन होगा. उसके अलावा और कोई डेटा नहीं है. बाकी न्यूज आई है अगस्त में शायद इंडिया में पहली टेस्ला आ जाएगी. फर्स्ट टेस्ला की जो डिलीवरी है इंडिया में वो अगस्त 2025, मतलब नेक्स्ट मंथ से स्टार्ट हो जाएगी मोस्ट प्रोबेबली. Ukraine spy chief says 40% of Russian ammunition is North Korean. Big US banks set to post trading gains on Trump tariff turmoil. भी करते रहो guys, don't forget to like the stream. Our US mission post Trump deal in Congo and revealed immigration rate on California can invest spark protests.
Today, Trump strikes a deal with NATO to send weapons to Ukraine. We hear what life is really like in the country's capital, 3 years into its war with Russia. A judge blocks the administration's birthright citizenship order. More tariff turmoil. This time, Trump has Canada in his sights. And how a US mission to push a Trump deal in Congo unraveled. It's Friday, July the 11th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes, every weekday. I'm Carmel Crimmins in Dublin.
They say life is a race. But there are those to whom life is a sport. A sport that isn't just about winning, but about the pursuit of excellence. Introducing the Honda City Sport. Life is a sport.
US President Donald Trump is shifting gears on Ukraine, with an announcement that the US will supply weapons to Kyiv via NATO. And he's hinted that he will have a major statement about Russia on Monday. It comes as his frustration with Russian President Vladimir Putin builds over a lack of progress in ending the 3-year war. In the Ukrainian capital, residents have grown used to the sound of explosions from Russian missiles at night. But in the morning, as firefighters pack up after extinguishing blazes and street sweepers clear glass and shrapnel, the city buzzes like any European capital. Reporter Dan Pelishuk shares what it's like living in the city.
The best way to describe it all is to kind of highlight the extreme contrast of the situation for anyone who lives in Kyiv, and indeed in a lot of other Ukrainian cities. Most people go about their day as normal. You know, they go to work, they go to school, they go shopping, they hang out, they get coffee and beers. And there's quite a strong semblance of nightlife, particularly in Kyiv, though it's worth mentioning that curfew does begin at midnight. And so while even the night time can seem fairly normal, it's not until a little bit after that when things start turning terrifying, basically. And the city becomes an entirely different landscape. The streets are empty, but the skies are booming. The sky is lit up by flames from either burning buildings or the tracer rounds of machine guns firing at drones or other anti-air defenses going off. And the city that is, during the day, kind of lively and bustling, almost like any other European city, kind of turns into this carnival of terror at night, frankly. And it's just gotten worse over the past several weeks as diplomatic efforts to end this war have kind of broken down and stalled out.
Back in the US, Trump is expected to visit flood-hit Texas today.
They could have somebody saved still. You know, there's a lot of areas. It's a big area. And, it's probably unlikely at this point, but there could be.
And meet with families of flood victims and first responders. The search for missing people after the flash flood in Kerr County, Texas, is stretching into a second week, with more than 160 people still unaccounted for. In New Hampshire, a federal judge has again barred the Trump administration from enforcing an executive order limiting birthright citizenship. That's after the Supreme Court restricted the ability of judges to block his policies using nationwide injunctions. Nate Raymond is in Concord, New Hampshire, following the case. So Nate, what does this ruling do and how does it work given these restrictions from the Supreme Court?
The Supreme Court's ruling was targeted at a particular type of nationwide injunction. This case in New Hampshire was filed a couple hours after the Supreme Court ruled, and it actually seized on a carve-out in the Supreme Court's decision because what Justice Amy Coney Barrett made explicit in the ruling was that you could obtain the equivalent of a nationwide injunction if you instead pursued a nationwide class action on behalf of everyone that's similarly situated and that could be similarly affected by a policy.
So what does this mean for birthright citizenship?
Well, I will say, despite the judge's ruling, while he has blocked Trump's order from taking effect on July 27th, he put his order on hold technically for 7 days, and that's because an appeal is absolute, and lawyers on both sides are predicting that there will be further litigation in other courts and that this is eventually going to wind right back up to the Supreme Court, and the Supreme Court's going to have to eventually decide the whole issue.
An Israeli airstrike near a medical centre in Gaza has killed 16 people. Local health authorities said 10 were children. Reuters has seen verified footage of the incident, showing the bodies of women and children lying in pools of blood and dust. Israel's military said it had struck a militant who took part in the Hamas-led October 7th attack. It said it was aware of reports regarding a number of injured bystanders and that the incident was under review. President Trump is ramping up the trade rhetoric. This time, he's threatening a 35% tariff on some Canadian goods, and he's raising the prospect of imposing blanket tariffs of 15 or 20% on most other trading partners. The move comes as he broadens his trade war, planning a 50% tariff on goods from Brazil and on copper. This latest salvo is rattling investors, with US and European stock futures both down. President Trump is shifting the US's approach to Africa and says he's focusing on trade rather than aid. After hosting leaders of 5 African nations at the White House, Trump has indicated that those countries could avoid US tariffs. White House reporter Jeff Mason is in DC. Jeff, what's President Trump's aim with this summit?
I think broadly he was trying to make connections with African leaders who he thinks will be helpful to the United States in terms of potential business opportunities. The president is very eager to make deals, and particularly deals that he views as beneficial to U.S. businesses, beneficial to the U.S. economy, beneficial to U.S. coffers.
Now, the Trump administration's outreach to African countries comes in many forms. In March, an Israeli-American businessman, a former State Department official, and a decorated Green Beret pitched up in the Democratic Republic of Congo. The 3 envoys had come with an offer from Washington. Release 3 American prisoners on death row, and in return, President Trump will accept your minerals for security proposal. Our West and Central Africa chief correspondent, Jessica Donati, has the story.
While the trip got off to a good start with an official escort, things quickly went wrong when they had a meeting with President's security advisor who did not trust them, and then they went to a nearby military base and engaged in some ill-advised late-night target practice with some Israeli contractors, which put them on the radar of the intelligence services. Those intelligence services then turned up at their hotel the next morning and tried to arrest them, and they had to call the embassy and get bailed out of the country. The embassy sent a security advisor there to talk them out of the situation and then help them get to the airport and escape the country.
So the American prisoners were eventually transferred to the United States. But what does this tell us about America's interest in Congo's mineral wealth?
The US is very interested in Congo's minerals because they have many critical supplies of minerals which are generally controlled by China and which are really critical for use in things like batteries and mobile phones. And so Trump has entertained this idea that the US can help Congo secure its country, which has endured decades of conflict, in return for access to these minerals. At the moment, the US is helping Congo negotiate a peace agreement with Rwanda, which backs the rebels that are involved in the conflict in the east. But it's still very much a work in progress.
Neither the president of Congo, Felix Tshisekedi, or the security services in the country responded to requests for comment. And for today's recommended read, how the original Birkin bag has sold for a record $10 million. We'll drop a link to the story and the photos in our pod description. For more on any of the stories from today, check out Reuters.com or the Reuters app. And don't forget to follow us on your favourite podcast player. We'll be back on Monday with our daily headline show. Today, Trump strikes a deal with NATO to send weapons to Ukraine. We hear what life is really like in the country's capital, 3 years into its war with Russia. A judge blocks the administration's birthright citizenship order. More tariff turmoil. This time, Trump has Canada in his sights. And how a US mission to push a Trump deal in Congo unraveled. It's Friday, July the 11th. This is Reuters.
Today, Texas officials dodge questions on whether they could have done more to warn people ahead of the fatal flash floods. A spat between Trump and Brazil's leader turns into a huge new tariff and potentially a huge new front in the trade war. TikTok counts down to a new standalone for US users, separating it from the global app. And OpenAI looks to change the way we browse the internet. It's Thursday, July 10th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Kim Vanell in Whanganui, New Zealand.
They say life is a race. But there are those to whom life is a sport. A sport that isn't just about winning, but about the pursuit of excellence. Introducing the Honda City Sport. Life is a sport.
With helicopters overhead, volunteers on horseback continue to search along the banks of the Guadalupe River for the more than 170 people still missing after the Texas 4th of July floods. No one has been found alive since Friday. Almost 120 people are dead, many of whom are children. With the death toll still expected to rise significantly, there are growing questions around whether officials could have given them and everyone else warning sooner about the flash flooding. Kerr County Sheriff Larry Leather dodged questions about how long it took for officials to respond to code red alerts.
And I know that's going to be asked over and over. Please understand that. You know, we're not running, we're not going to hide from everything. That's going to be checked into at a later time.
Our Reuters graphics team has been piecing together how the conditions came together to create such a catastrophic and quick event. Julia Wolf is in New York.
The area we're talking about, Texas Hill Country, it's also known as Flash Flood Alley, just because of the nature of the topography. It has very steep terrain leading into the valleys with a big widening river. And on top of that, it's a region with thin topsoil, over a impermeable limestone bed. That means that when you've got water coming down these steep hills, it's not soaking into the ground like it would normally. So you're just sort of picking up momentum. That's going to be coming down these hills and just sort of flooding into those big plains and valleys.
So that's a natural context for this disaster, but there's also the man-made element at work here.
Right, exactly. Kerr County is right in that zone on the slope path, in the flood path of the river. And Kerrville and Camp Mystic are unfortunately right in that path. So then you have this massive rainfall. The river height skyrocketed from around 1 to 34 feet in 5 hours in a rural area without much cell service. That's a disaster.
This is being described as a 1 in 100-year storm. We hear that phrase a lot, but is that really the case? How frequent are extreme storms in the region?
A team of European climate scientists released a report on this flood specifically, but how these kinds of floods in general are increasingly common due to climate change. The air's getting warmer. Warmer air holds more moisture, and more moisture in the air is going to lead to more extreme, more common rainfall.
The US is on the cusp of a trade war with the biggest country in Latin America. President Trump is threatening Brazil with a 50% tariff on exports to the US, up from 10%. He notified Brazilian President Luiz Inácio Lula da Silva in a letter, where he also fumed over what he called the witch hunt against former President Jair Bolsonaro, who is on trial in Brazil on charges of plotting a coup. It follows an increasingly public spat with Lula, who at the BRICS summit earlier this week said the world does not need an emperor, referring to Trump. Lula says any unilateral measure to increase tariffs will be met with a response in accordance with Brazilian law. Russian drones continue to rain down on Ukraine's capital for a second night. On Tuesday, more than 700 drones flew across the country. Footage released by Ukraine's emergency services shows firefighters battling a blaze in the wake of that attack in the city of Lutsk, culminating in Russia's largest drone attack in the now almost 3.5 years of war. The US is sending more defensive weapons to Ukraine, and President Trump is also considering sending Patriot missiles, which had previously said the US needed for its own defenses. Hamas says it's agreed to release 10 hostages under ongoing efforts to reach a ceasefire deal in Gaza. Both Israeli Prime Minister Benjamin Netanyahu and US President Trump say a deal is within reach.
There's a very good chance that we'll have a settlement, an agreement of some kind this week, and maybe next week if not.
Hamas's sticking points are the flow of aid, the withdrawal of Israeli forces, and guarantees for a permanent ceasefire. Israel, meanwhile, wants Hamas entirely dismantled. In Gaza, hospitals are reaching breaking point because there's no fuel for electricity. Al-Shifa Hospital says around 100 premature babies may die as a result. Officials there say they only have enough fuel for the next 24 hours. At Nasser Medical Complex in Khan Yunis, doctors are performing surgeries without electricity or air conditioning and say sweat drips into patients' wounds. The Israeli Military Aid Coordination Agency did not immediately respond to a request for comment. If you want to browse the web, you open a web browser, like, say, Google Chrome. Well, AI is about to change that. OpenAI is launching an artificial intelligence browser in the coming weeks. And as other startups attempt the same thing, it's gearing up to be the biggest change and challenge since the Chrome, Firefox, Internet Explorer competition more than a decade ago. Kenrick Tai is one of the reporters on this exclusive Reuters story.
According to the sources that my colleagues and I spoke to, OpenAI's new browser is going to include a chat interface. So it's going to be similar to the experience that you have with something like ChatGPT. The chatbot will be able to deliver information to the end user directly, rather than the end user having to click into an external web page to find that information, like you have to do in a traditional web browser.
Why is OpenAI making this play into browsers?
The goal with all these new products, sources tell us, is to have a more direct line into collecting user data. As OpenAI matures as a company, it's putting its tentacles into all kinds of new product areas. They want to build an entirely new device that will be a third device after your smartphone and your laptop that they hope that a user will carry around with them to interact with their technology. So it's going to be very interesting. It's a whole new chapter to how people browse the web.
Reuters is also exclusively reporting a new development for TikTok. TikTok is preparing to launch a standalone app for its US users. The app is expected to operate on a separate algorithm from its global app. Users outside the US won't be able to access it. The move lays the groundwork for a potential sale orchestrated by US President Trump, according to people familiar with the matter. TikTok and its owner ByteDance have declined to comment. A few other stories we're keeping an eye on today. Measles cases in the US have reached the highest level since the disease was declared eliminated 25 years ago. There are almost 1,300 confirmed cases right now, according to the CDC. Outbreaks are being driven by a drop in vaccination rates, particularly among children in states like Texas and New Mexico, where vaccine coverage has fallen well below the 95% threshold required for herd immunity. If you're off on a European vacation, best to check before you go, as wildfire season has started early. Fires, which reached the outskirts of France's second city, Marseille, are under control, but not over. In Greece, people flee the town of Oropos in the south, but fires have also broken out in Athens, Crete, and other parts of the country over the past few weeks. Parts of Spain have also been affected. Weather across the globe has become extreme due to climate change, and 2024 was the hottest year on record. And for today's recommended read, Running with the Bulls in Pamplona, as revelers take to the streets during one of Spain's best-known festivals. We'll drop a link to the story and the incredible photographs in our pod description. For more on any of the stories from today, check out Reuters.com or the Reuters app. And don't forget to follow us on your favourite podcast player. We'll be back tomorrow with our daily headline show.
Land once devastated by American bombing now accounts for half of Nike's global shoe production. Hundreds of other American companies and their suppliers have manufacturing bases in Vietnam too. As the Southeast Asian country's annual GDP climbed, exports to the U.S. grew. Now, Vietnam is one of the countries most dependent on American trade.
The United States is Vietnam's largest export market.
Vietnam's massive trade surplus with the U.S. has made it a key target for Donald Trump.
The problem is they charge us 90%. We're going to charge them 46% tariff.
If Vietnam were to lose access to the American market, that would have a profound effect. It would ripple across the economy.
which is why this was imperative for the Vietnamese government.
President Trump says he's reached a trade deal with Vietnam following weeks of intense diplomacy between the two nations.
Unlike military conflicts, trade wars are at least fought without bloodshed. But they can still do damage. And even with a deal, the economic relationship between the U.S. and Vietnam faces an uncertain future. Manufacturing is the lifeblood of modern Vietnam.
It is now a major player in the global supply chain. It is making everything from Apple iPads to Samsung smartphones, Nike shoes.
But Nike is just one of a long list of apparel companies manufacturing in Vietnam. Lululemon, Adidas, Abercrombie, and others source huge percentages of their products here. Since the turn of the millennium, global brands have reshaped the appearance of provinces like Dong Nai, where clusters of factories now produce and export everything from T-shirts to specialized machine parts.
Exports in general represent about 90% of GDP. It's absolutely critical for the growth of the economy, of lifting people out of poverty.
And after the last American troops withdrew in 1973, there was a lot of that.
Post-war Vietnam was one of the world's poorest countries. It had been drained of resources after years and years of war.
Vietnam suffered significantly under collectivism in the 80s, and because of the fall of the Soviet Union at the same time and bad economic policy, it had to reform.
The government began to relax its control of the economy and created policies to attract foreign investors.
That included tax incentives, building out the right infrastructure that these companies wanted, and generally having a very open attitude to global manufacturers looking at Vietnam.
Bolstered by the country's cheap, hardworking, relatively young and educated labor force, as well as political stability and proximity to China, the strategy worked. More than $600 billion of foreign investment has flowed in since 1988. Exports have surged, and as we've heard, now make up about 90% of the country's GDP. As much as 30% of those land in the U.S., making America's trade deficit with Vietnam its third largest by country, behind only China and Mexico. And that imbalance has only grown since the first Trump administration, in part due to policies enacted then.
During Trump 1.0, Vietnam emerged as the biggest winner of U.S.-China tensions. Vietnam became a place that investors gravitated towards to tap into the U.S. market, where the arbitrage between tariffs in China versus Vietnam became wider.
This was part of a hedging strategy known as China Plus One, where companies began relocating some production to Vietnam to avoid tariffs slammed on Chinese goods.
A good example could be footwear, where the global economy continues to depend on China. Vietnam is a key alternative to that.
Jung Min Khoi is a manager at Yangcheng Wooden Industries, which makes and exports wood furniture to the U.S. He remembers the impact of Trump 1.0 well.
Thì đồ gỗ của Trung Quốc chịu đánh thuế 25%, trong khi Việt Nam thì chưa chịu đánh thuế, thì khách hàng của mình và các khách hàng của bên Mỹ họ chuyển rất nhiều đơn hàng từ Trung Quốc và Việt Nam.
Trump 2.0 is very different in that instead of targeting China alone, which Vietnam benefited from, we're now seeing tariffs on Vietnam itself.
Vietnam's government anticipated some sort of tariff from the Trump White House. They did not anticipate a 46% tariff. They were shocked, to put it bluntly.
Liberation Day.
The impact of the announcement was immediate.
97-98% cái hàng của mình sẽ xuất đi Mỹ. Nếu mà thông thường thì nhà máy của mình có thể sản xuất được 250 đến 300 container một tháng.
He says now that's down to as few as 100 containers a month because of reduced demand. This will likely have a ripple effect on communities around manufacturing hubs.
You could see factories laying off workers. You could see plants perhaps shutting down.
Vietnam isn't alone in facing these effects. What sets it apart is the potential scale of them. It's one reason the government has responded so proactively.
They were one of the first governments to reach out to the White House and say, hey, let's start talking. The officials have repeatedly said we will buy very big ticket U.S. products, such as aircraft, LNG, anything that will help reduce the trade gap.
The tactic appeared to work, with Trump announcing the two sides had reached an agreement.
Giving full market access to American companies while slapping a 20% tariff on all Vietnamese imports.
One of the biggest sticking points in negotiations was a U.S. demand for Vietnam to get tougher on trade fraud and do more to prevent Chinese goods being rerouted and repackaged through Vietnam to skirt higher tariffs.
And that's exceedingly difficult for Vietnam because so many of the factories here, they rely not just on components, not just on material, but they rely on machinery that comes from countries like China.
It's like asking Mexico to stop having a trade relationship with the United States. While the U.S. is the biggest market for Vietnam, China is its most important geopolitical consideration. China sits on top of Vietnam. It has a very complicated relationship. The last war that both countries fought was actually against each other. That is a relationship it has to be most delicate about and is the forefront of its consideration in foreign relations.
Over the years, Vietnam has been able to navigate tensions between the U.S. and China through a strategy known as bamboo diplomacy.
Vietnam, like a bamboo, knows how to bend in the wind, so to speak. So when the winds are shifting, it knows how to shift along with it. They have learned how to dance between these big giants, between Washington and Beijing.
Vietnam must now repeat the feat, managing relations with two competing superpowers while preserving its export-reliant growth model.
Targeted measures are possible. And that is where Vietnam can find its sweet spot in order to appease the U.S., but at the same time maintain its key relationship with China.
The race to a $4 trillion market cap has been won. Nvidia becoming, for the first time in history, the company reaching that milestone and really cementing itself in terms of its position as a linchpin within the global financial system. The stock is up 20% year to date. Take your mind back to 2023 and the stock is up an eye-watering 1,000%. So where are the other players in this race to 4 trillion? In second place, Microsoft at 3.7 trillion. In third place, Apple at 3.2 trillion. But this has not been a smooth ride for Nvidia. Take your mind back to the release of DeepSeek, a much cheaper model, questions about how much you actually need to spend on the kind of chips that Nvidia produces, and then further downside when Trump comes through with Liberation Day and those tariffs. But it has recovered those losses and more, breaking record highs and getting to that $4 trillion market cap. Jensen Huang has warned about export restrictions into the Chinese market, but the demand for these GPUs and accelerators that they make continues to be strong. About 40% of their revenues come from the hyperscalers like Meta, like Alphabet, and like Amazon, and that does not seem to be abating. So we get to earnings season, which is coming up, and that is when we lift the hood on the numbers for Nvidia. Do the numbers justify this $4 trillion market cap? That is the next test for this company.
The odds are high. I think both sides want to see it happen. Obviously, we have to build the right atmosphere and the right deliverables so that a visit isn't just a visit, but it actually has some takeaways from it that are concrete. But there's a strong desire on both sides to do it. The president wants to do it. The Chinese side wants to see it happen. President Xi said that publicly. So I think the odds are high. I don't have a date for you, but I think it's coming. It'll happen.
Let's ask Matt Bloxham, senior analyst for Bloomberg Intelligence, whether Elon is firmly back in the driver's seat. Matt, what do you reckon?
Yeah, I mean, I think he's definitely in the driver's seat. I guess the question whether he ever left it, but I think the question for shareholders right now is whether he's definitely got both eyes firmly on the road ahead for Tesla and not distracted by, other projects, not least SpaceX and his political ambitions. Obviously, we've heard some pressure recently from shareholders that the board needs to kind of apply more pressure to Elon to be much more focused on Tesla. And there's even been some suggestions that maybe it's time for him to step down as CEO. And obviously, that's worked quite well for SpaceX. So, yeah, definitely you can see his influence coming very much back to Tesla, and they're really diversifying away from just the cars into robo-taxis and beyond. So I think there's going to be a lot of interesting announcements in the coming months to do with Tesla as he kind of gets back into that kind of regular mode of operation.
Yeah, a pretty bumpy ride for the stock price so far this year. And similarly, you've had pretty spotty demand for Apple over the past 2 years. And we know that they're planning this ambitious pipeline of new products for release in the first half of next year. Do you think that these models are really going to be all that different, Matt?
I think that certainly the kind of the lineup they've got for next year, which is kind of low-end iPad and the cheap iPhone, the 17e, maybe not that different, more incremental product developments. Obviously, I think that the big focus is really on the fall launch, which is really the spotlight for the new iPhone 17, which I think is going to be a bit more of a significant launch. And there's talk of the iPhone Air, a kind of very thin version of the product. So I think to some degree, they want to sensibly phase their products and really kind of give the iPhone 17 enough kind of its own space, if you like, to kind of really drive sales in the near term and then balance that out with other products into next year. And obviously, we've got the whole tariff situation, which continues to be very uncertain. And I think with some of these products, there's perhaps a question mark for them about where can they price these or whether should they price these, depending on how much the tariffs end up being and when they kick in. So I think there's certainly some uncertainty there for Apple in terms of their pricing strategy for some of these products in the next 12 months.
Greg, good morning. So what can we actually expect President Trump to say, and how could this shape U.S. foreign policy moving forward?
Well, this could be a number of things. In recent weeks, we really have heard a shift in tone from President Trump on Russia. He's seemingly grown increasingly frustrated with Russia over their intransigence in talks and the continued bombardment of Ukrainian cities with drones and missiles. What we could hear from Trump would be more of that continued rhetoric, or even something like the introduction of sanctions on Russia. It could also be potentially an announcement about weapons deliveries to Ukraine as Ukraine seeks to protect itself from these bombardments. But on the other hand, we also had Secretary of State Marco Rubio, who just met with his Russian counterpart, Sergei Lavrov. They discussed Ukraine, among other things, in that discussion, and so it could be something out of that. The key thing to watch will be, is there some kind of concrete announcement, something on sanctions, weapons deliveries, or the talks at hand, or is this just really more rhetoric? And that will be the key to deciding whether this is an actual shift in U.S. policy or whether this is continued frustration with Putin, but not really a real policy change.
Greg, President Trump also threatened the possibility of more sanctions against Russia. So how likely is this?
Well, up until now, we've seen a real reluctance from President Trump to impose sanctions on Moscow. He has said on a number of occasions that that is an option at hand and that he would consider it. But so far, there's been no introduction of sanctions, and we've heard that he's actually quite reluctant to do so. Some in his party, including in the Senate, are really anxious to try to impose new sanctions. There is a Senate legislation for imposing sanctions. It's quite punitive. But if he does decide to impose sanctions, it could come about quickly. He probably would have the backing of Congress. But as of right now, it seems that it's still rhetoric. We don't know if he's actually decided that, yes, now is the moment. That's something we could learn on Monday as well.
Greg, meanwhile, the Ukrainian president attended a conference in Rome and seemed pretty optimistic. What are the main key takeaways?
Yeah, there definitely were some positive sounds from President Volodymyr Zelensky coming out of that conference. Zelensky's been on the hunt for Patriot missile batteries. Those help protect against the drone and missile barrages that Russia has been launching against Ukraine. He seems pretty confident that those would be coming, and allies seem to back that up, saying that Patriots would be delivered to Ukraine and that they were on board with supplying Ukraine with that. Trump said that they would be supplied, but that NATO allies would pay for them. So it does seem some movement there in terms of the deliveries. Of course, this is coming against the backdrop of these incredibly large and growing missile and drone barrages that Russia has been launching against it. So Ukraine really looking for ways to try to shield against those increasingly lethal attacks.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Bloomberg understands that Vietnam's leadership was caught off guard by Donald Trump's announcement last week of a 20% tariff on Vietnamese goods. Now, sources say the country is still hoping to secure a rate closer to 10 or 15%. Meanwhile, Canada is facing a 35% tariff on goods not covered by an existing trade agreement with the U.S. after receiving a letter from Donald Trump. With us now, Rosalind Matheson, our EMEA News Director, and Klaus Bauder, Global Chief Economist at Société Générale Corporate and Investment Banking. So thank you both for joining us. Raz, you're on every day. Every day we say actually how the president is absolutely not backing down. And actually the rhetoric around trade is getting more aggressive. How are other governments reacting?
Well, it seems to be the case. And as we know with the Vietnam example just now, Trump is saying these letters are deals. He's describing them as deals. In fact, it's the U.S. deciding what tariffs are and imposing them on other countries. And in the case of Vietnam, we could see they went very, very quiet when he announced that he had a deal. They didn't say very much. We couldn't get a lot of confirmation. Now we know behind the scenes, they were obviously saying, hang on, we're surprised by this. We thought we were still negotiating, and they still seem to think that they are. But with Donald Trump again, whatever the numbers are, wherever you're at, everything is still, to some extent, a negotiation. You can see with Canada again overnight. I mean, the numbers have moved around constantly for Canada as well, depending on the week that we're in. Everything remains a negotiation, including for Brazil and others. The question is, he's come for Canada, he's come for Brazil, he's come for countries in Asia, Africa. Where is the EU? We still don't have a deal here. You know, are they getting nervous, despite the fact that Donald Trump has been sounding warmer lately on the EU, saying that they're better to deal with? There's no deal yet. And does that mean that they're worried that he's going to just decide that, I'm going to announce something and therefore kind of try and make it a fact in a way by doing so?
And Klaus, I guess, I mean, there's a concern that actually Donald Trump, then he's threatened to double basically the baseline universal tariff to 20%. But at the same time, he's saying, well, look, the stock market is at a record there behind me. And so what we thought would maybe counterbalance some of the overzealous on trade is not there.
Yeah, I mean, if you really try to follow what tariffs are going to be imposed, you end up with a spinning head. And I think, frankly, what's worthwhile is to go back to first principles. And the more I think about it, the more convinced I am that these tariffs are going to do absolutely nothing to bring either manufacturing output or manufacturing employment back to the United States. The fact is that always, this is really fiscal policy 101, always when you're talking about a fiscal measure, and tariffs are a tool of fiscal policy, what's absolutely key is whether those measures are perceived to be transitory or permanent. Now, you can tell me a lot of things, but I really would love to see the entrepreneur who thinks that the current tariff structure of these threats are going to be permanent. Now, if you can't be sure that they're going to be permanent, are you going to make the massive commitment of building a factory in the United States to produce things that you're currently producing much more cheaply outside the United States, in the United States? I think the answer to that is no. And so what's going to be, I think, That alone is enough to seed the demise of the policy. What I do think the policy is going to be excellent at is raising prices in the United States, which is also not going to make it very popular. I'm not even talking about the lack of excess labor supply in the United States. I've always wondered, well, who's going to do all those jobs? So I think this is just a whole lot of noise. And in the end, the economy that's going to be really harmed is the United States. And look at the consensus forecasts. It's very clear. This is a majority opinion. I think they're right.
Okay, let's also talk about China. China's foreign minister says the United States has abused the tariffs and undermined the free trade system. Wang Yi also expressed his opposition to unilateral tariffs when questioned by Bloomberg's Min Lo.
Minister Wang, what's China's position on tariffs?
Oppose unilateral tariffs.
Are you meeting with Secretary Rubio?
Well, we can now go to Min Lo in Kuala Lumpur at the ASEAN meeting. Min, first of all, great doorstepping. I mean, Wang Yi had some pretty strong words to say about the U.S. Where does it leave the two countries?
Yes, he said that the U.S. has been undermining global trade, and he actually said he believes that ASEAN countries are going to push back against this unilateralism. He had a slew of meetings yesterday with the ASEAN foreign ministers, for instance, and he came out of that room grabbing hold of the hand of the Malaysian foreign minister in front of the media pool. It was clearly a very strategic sort of gesture in front of us to show the close.
guys, नेचुरल गैस का यहीं पर एक टारगेट है, ठीक है. यहाँ पर एक छोटा सा बाइंग का प्लान रखना. सेलिंग वाले निकल सकते हैं इस एरिया पे. कैंडल का ध्यान रखना, ओपन इक्वल टू हाई बना तो बाइंग नहीं करेंगे, ठीक है. कि अब वापस ऊपर आएगा तो ऊपर वापस सेल मत करना. जितना भी आएगा मोमेंटम थोड़ा बहुत यहीं से आएगा. अगर ये ऊपर गया तो ब्रेकआउट ही होगा. अगर इसको नीचे निकलना है तो ये लेवल होल्ड नहीं होना चाहिए. ठीक है, 7 PM यूएस मार्केट की ओपनिंग है, तो कैंडल का ध्यान रखना. ओपन इक्वल टू हाई पे बाई नहीं होगा. नॉर्मल कैंडल पे ही बाई करना. हाँ, सेलिंग वाले निकल जाओ. बाकी सेलिंग में जो लोग हैं वो निकल सकते हैं. उनका हो गया टारगेट. इतना ही है फिलहाल. श्योर. कल शाम तो नहीं आया वहाँ पे. ये कितना है? लगभग 5:30. उस हिसाब से 1:2 ही बनता है फिर वो. अच्छा, फिर वो अगर नीचे आया तो 1:3 बनेगा, अदरवाइज 1:2 में निकल जाएगा. गॉट इट. अब ये रेजिस्टेंस वीक है, ठीक है. बाकी क्रूड को थोड़ा ऊपर आने देना, वहीं सेल करना, नीचे मत करना सेल. नहीं, लेट इट गो. मैक्सिमम इतना ही जा सकता है, उसके नीचे तो मुश्किल है. बाकी लास्ट ट्रेडिंग सेशन है, ज़्यादा रिस्क मत लेना, ठीक है. नया कोई रेजिस्टेंस तो नहीं है ना. दैट इज ओनली रेजिस्टेंस वी हैव. डिपेंड ऑन द नेक्स्ट कैंडल. ऊपर नहीं आना चाहिए. ज़्यादा मुश्किल आना था. अगर एक ऊपर निकल जाता है तो फिर उस केस में मिल सकता है वहाँ पर एक. गोल्ड भी देखो अपने वो 15 मिनट में ब्रेकआउट करके नेक्स्ट रेजिस्टेंस को हिट कर चुका है। ठीक है, थर्ड टाइम आया है यहाँ पर गोल्ड 15 मिनट में 2 बार रेजिस्टेंस दे चुका है। दिस इज द थर्ड टाइम हिटिंग द रेजिस्टेंस इन 15 मिनट। 3362 इज द लास्ट रेजिस्टेंस ऑन अबव। बाकी ऐसा नहीं कि नीचे सीधा ही आ जाएगा, नीचे भी सपोर्ट बना दिए हैं मार्केट ने कंटिन्यूसली ब्रेकआउट के बाद। नीचे आता है तो 3348 से 3345 फर्स्ट सपोर्ट जोन, वो ब्रेक नहीं हुआ तो ऊपर का रेजिस्टेंस जरूर ब्रेक हो जाएगा। श्योर, ओके। ठीक है, 15 मिनट 20 मिनट रह गए यूएस मार्केट की ओपनिंग पे सिर्फ, और इसमें गोल्ड यहाँ से भी ब्रेकआउट करता है तो फिर सीधा ऑल टाइम हाई या रेजिस्टेंस के ऊपर नहीं है, ऑल टाइम हाई नहीं है। 3387 से 3393 दैट इज द नेक्स्ट मेजर रेजिस्टेंस जोन। कोई नया बन जाता है तो अलग बात है, बट वही फर्स्ट जोन है अगर यहाँ पर भी ब्रेकआउट आता है डायरेक्टली। फिर एक ब्रेकडाउन दिया, रिकवर कर गया, फिर 2 सपोर्ट बार साथ साथ बन गए। बात वही है, सपोर्ट तो ब्रेकडाउन सपोर्ट। पूरा लेवल दूसरे का रीटेस्ट है इन द सेंस। कुछ ये स्टॉक में देख लेते हैं मंथ का चार्ट। इथेरियम में इंट्राडे में देख लेते हैं एक बार इथेरियम के चार्ट को भी, वैसे तो बुलिश ही लग रहा है। लेट्स सी। बाइनेंस इथेरियम 1 आवर में देख लो, ज़्यादा बेटर रहेगा क्योंकि 15 मिनट में लेवल ना बहुत जल्दी चेंज हो जाएंगे। यार ऑलरेडी ऑल टाइम हाई पे चल रहा है, कोई रेजिस्टेंस तो नहीं, ऑल टाइम हाई पे नहीं है सॉरी, इतना पीछे लेवल भी नहीं दिखा रहा है। ठीक है, 1 आवर टाइम फ्रेम पे देख लेते हैं, इंट्राडे के लिए ज़्यादा बेटर रहेगा रेदर देन 15 मिनट, क्योंकि 15 मिनट में काफ़ी पीछे का लेवल है 2000 फरवरी का, तो उतना पीछे सो नहीं करेगा चार्ट में मोस्टली। लेट्स सी 1 आवर टाइम फ्रेम पे कोई रेजिस्टेंस है, क्योंकि जिस हिसाब से बन रहा है तो बोली सी क्या रुक सकता है यहाँ पे। ओके हाँ ये रेजिस्टेंस एक बार सेलिंग दे चुका है। देखो ये रेजिस्टेंस पर ही है, 1 आवर टाइम फ्रेम के थर्ड टाइम आया है, साइडवेज हो गया रेजिस्टेंस पे, ब्रेकआउट अभी भी हुआ नहीं है। 3038 के ऊपर ही होगा ब्रेकआउट अगर 1 आवर की कैंडल क्लोज होती है, तो इट इज जस्ट साइडवेज एट रेजिस्टेंस। एक बार 7 PM की ना कैंडल नहीं तो क्लोज जाने दो, क्योंकि 2 बार हिट कर चुका है, अगर हल्का सा ऊपर निकल के नेक्स्ट रेजिस्टेंस को टच कर जाए तो ज़्यादा बेटर है मेरे अकॉर्डिंग तो। तो 1 आवर टाइम फ्रेम पे इट इज़ ऑन रेजिस्टेंस, एक और है ऊपर छोटा सा रेजिस्टेंस। नॉर्मली तो सेलिंग अभी तक आ जानी चाहिए थी, जैसा नेचुरल गैस का चार्ट है वैसा ही लग रहा है, बिल्कुल सेम टू सेम। नीचे पेंडिंग है पुल बैक, बिल्कुल पेंडिंग है एक पुल बैक। ये भी पेंडिंग ही है। मोस्टली टच करने आएगा जरूर। ठीक है ये 1 आवर टाइम फ्रेम पे है, वैसे तो बुलिश ही लग रहा है। खैर ये भी तो आ जाता है, ये जो पहली कैंडल बनी थी ना यहाँ पर, ये 1 आवर टाइम फ्रेम का चार्ट है। ये कैंडल ही ओपन इक्वल टू लो बन गई थी, ऐसा लग रहा था ब्रेकआउट के लिए ही बनाई है कैंडल, बट साइडवे चला गया। ब्रेकआउट हुआ नहीं है, ऊपर भी एक रेजिस्टेंस है, तो प्लान दो कर सकते हो यहाँ पर। अगर फिर से सेल करना चाह रहे हो तो छोटे एसएल के साथ, डे हाई के एसएल के साथ कम क्वांटिटी में सेल कर लो, क्योंकि देखो ये यहाँ पर पहली दूसरी बार नहीं आ रहा है, थर्ड टाइम आ रहा है, इसलिए बोल रहा हूँ। कोई न्यूज़ वगैरह आई तो कहीं बड़ी कैंडल ना बना दे। बाकी नेक्स्ट फिर रेजिस्टेंस आपका अपर लेवल पे है यहाँ पर 3130 से 160 के बीच में, और नीचे एक सपोर्ट आपको मिल जाएगा 2800 से 2770 के बीच में। ये भी रेजिस्टेंस है बट मल्टीपल टाइम टेस्ट हो गया, और कैंडल मनहूस कैंडल है ये, बिल्कुल ओपन इक्वल टू लो बनाई थी, उसके बाद साइडवेज है रेजिस्टेंस पे। ठीक है बिल्कुल सेम वैसा ही है, नेचुरल गैस का ऐसा सेटअप है। अब किसी ने यहाँ पर ये ओपन इक्वल टू लो बनाई है तो कहीं ना कहीं जानबूझ के ही बनाई होगी। तो दो पॉसिबिलिटी, या तो ऊपर जाके गिरे इस तरह से, या फिर अब गिर जाए यहाँ से और फिर ऐसे जाए। तो यहाँ पर अगर लेना चाह रहे हो तो कम ही क्वांटिटी, बड़ी क्वांटिटी मत लेना यहाँ पर। ये एक ट्रेड बन सकता है इंट्राडे बेसिस के लिए, इन 1 आवर टाइम फ्रेम पे अच्छा लेवल है। कैंडल ध्यान रखना, ओपन इक्वल टू लो पे सेल मत करना, ओपन इक्वल टू हाई पे बाय मत करना। और कभी बन जाए इस तरह की कैंडल एंट्री लेने के बाद भी, तो समझ जाओ कि प्राइस फिर आपका ब्रेकआउट या ब्रेकडाउन ही करेगा। ठीक है ये है 1 आवर टाइम फ्रेम का आपका सपोर्ट रेजिस्टेंस। और गाइस 10 मिनट हैं यूएस मार्केट की ओपनिंग पे, 10 मिनट ही रह गए हैं सिर्फ। लाइक भी करते रहो, कम ऑन, डोंट फॉरगेट टू लाइक द स्ट्रीम। वीकली एनालिसिस करेंगे कल, सो डोंट फॉरगेट टू जॉइन वीकली एनालिसिस फॉर टुमारो। वेयर इज द क्रूड, सॉरी एक स्टॉक था वो, उसको भी देख लेते हैं। नहीं अब तो ब्रेकआउट के लिए ट्राई करेंगे। वही कहूँ, ये बनाया है इसने मंथली टाइम फ्रेम पे इतना स्ट्रॉन्ग रेजिस्टेंस बनाया, तभी वहाँ से रिवर्स किया कम्प्लीटली। वो 2021 का जो हाई बनाया था ना उस समय, वो बहुत ज़्यादा स्ट्रॉन्ग वॉल्यूम के साथ था। अब ये बनाया तो फिर लास्ट में जो यहाँ पर बनी पूरी लिक्विडिटी एक साथ स्वैप हुई है। आपका 3 जनवरी का मंथ है 2022 जब उसने ब्रेकडाउन दिया था, और फिर ये एंट्री हुई है 1 मार्च, 1 अगस्त, 1 मई। वहाँ से कितना गिरा ये? 77%। नीचे क्लोज हो गया तो फिर तो सुपर बेरियस हो जाएगा अगर यहाँ सेटअप है ऑलरेडी। एनी कैंडल क्लोज बिलो $20.69, नीचे के सपोर्ट को वो रिटेस्ट तो वैसे भी कर देगी वापस। कितना परसेंट है रिटर्न? सुपर रिटर्न है इसमें तो मंथली में। Seven minute left in US market opening। यहाँ पर क्या है एक बात है, ओके ये 2020 के आसपास हुआ है कोरोना के टाइम पे। अपॉर्चुनिटी दी थी सितंबर 2020। कितना रिटर्न दिया है इसने? 5%। Oh my god, the fuck। हाई तक लोगे तो लगभग 8000% रिटर्न 4 महीने में। क्लोजिंग बेसिस पे 5600, और फिर ये रीटेस्ट किया। पर मिली है तभी रिटेस्ट यहाँ किया है। अभी रिटेस्ट भी हो चुका है तो मुश्किल है कि यहाँ पर रुकना। जब तक अगर नीचे सपोर्ट नहीं बनता तो फिर और बेरिस हो जाएगा। यहाँ पर कुछ है ही नहीं, लिक्विडिटी नहीं है बिल्कुल भी। एक जंप तो मारना है इसमें। यहाँ पर साफ साफ दिख रहा है ये सारी कॉल सेल करके बैठे हैं यहाँ पर। यहाँ तो जाएगा नहीं, और ये सारी पुट शॉर्ट करके बैठे हैं ईयरली बेसिस पे। 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20 4 साल से साइडवेज कर रखा है, बताओ। प्रीमियम पूरा ही जीरो है ना उसमें। 3 मिनट लेफ्ट, 3 मिनट और रह गए। कम ऑन गाइस, लाइक भी करते रहो सभी लोग। क्रूड ऑयल में सेल कर सकते हैं वापस ऊपर, नेचुरल गैस वापस सेल बाई कर सकते हैं नीचे से अगर आएगा तो। बाकी अब ब्रेकआउट ही होना चाहिए क्योंकि ऊपर मोस्टली हाई लेवल से लिक्विडिटी लेके आ चुका है। एक बार मेरे को उसमें देख लेता हूँ, रिलायंस में भी सेम ही किया क्या आईसीआईसी वाले ने। इसका फ्यूचर, बैंक का फ्यूचर, ग्रेट ग्रेट 5 में निकल जाएगा। ठीक है, क्रूड में थोड़ा ऊपर से ही सेल करना, यहाँ से ना एसएल बहुत बड़ा हो जाएगा, नहीं तो ये है पूरा रेजिस्टेंस जोन ही मान के चलो, बट जितना छोटा हो उतना बेटर एसएल। हाँ, कोई नया सपोर्ट बना दिया तो बात अलग है, फिर हम देखेंगे। टारगेट छोटा करना पड़ेगा फिर उस केस में। वो भी चलेगा, ये नहीं आया देखो, इट इज़ वेरी स्ट्रॉन्ग। वो फॉरेक्स में आया ना, एमसीएक्स में तो हम अभी मानेंगे, अभी आया लिक्विडिटी लेने के लिए। कोशिश करते हैं अभी यहाँ तक जाए 100 के आसपास, वहाँ से वापस सेलिंग का प्लान एक हो जाता है इजीली। श्योर, दोनों पे देख लेंगे जैसा भी रहेगा। अभी भी नहीं है, 2 मिनट। दिखा रहा है क्या मंथली में? नहीं, डाउन पे होना चाहिए ना। ये भी नहीं, ये भी नहीं है। बनते रह गया ये तो। Fuck. टू 2023 के आसपास एक अपॉर्चुनिटी मिली थी बस, उसके बाद से अभी तक कोई अपॉर्चुनिटी नहीं है। रिटर्न लगभग 15%, रिटर्न लगभग 57%। वाओ, 1 से 3 पे निकाल दिया हुआ इन लोगों ने तो मोस्टली। 100 हो गया, क्या हो गया, नहीं होगा। सही बात है, इससे पहले अपॉर्चुनिटी कहाँ मिली है, एक यहाँ पर भी है 20 के आसपास। ओके, यूएस मार्केट ओपन, लेट्स सी कितना मूव करता है अब। जब भी गिरेगा अच्छी अपॉर्चुनिटी मिलेगी. के टाइम पे क्या लेवल बनाया है यार ये मंथली में. तो एक बार देखें तो 2020 देन 24-25 अगले साल मौका मिलेगा बाइंग का फिर से इसमें. तो वो इस हो जाता है लिक्विडिटी के साथ। इसे देखना मैं इसको दिखा देता हूँ तो मैं
ties between ASEAN and China, and this coming as the two sides are working to upgrade their free trade agreement before the end of the year. He also had this meeting with the Vietnamese foreign minister, which I thought was very interesting because Wang Yi said that China is willing to work with Vietnam to ensure that the legitimate interests of all countries is safeguarded. And this is interesting given the rhetoric that we have been hearing from China, warning that it's prepared to take countermeasures against countries that cut deals with the U.S. that undermine Chinese interests. And yet, even though Vietnam has agreed to those tiered tariff levels, 40% on transshipment, that is really targeting the back door for many Chinese exporters, still the tone appears to be quite constructive and positive. And it seems like Wang Yi is really here, vying for influence with Marco Rubio in Southeast Asia. Of course, it's Rubio's first trip to Southeast Asia as well, and he is also getting all these questions, especially from the Malaysian Prime Minister, about lowering tariffs as well.
Min Min, is this just a preliminary summit for when the two presidents meet?
Yes, so Marco Rubio and Wang Yi is actually meeting right now just upstairs. It's still ongoing. It is not clear whether they are in fact laying the groundwork for that potential trip by President Trump to China, because neither Rubio nor Wang Yi really talked about what they were going to discuss, although Rubio did say he's going to raise the issue of Russia. He said China has been doing as much as it can to support Russia without getting caught. That's something that he wants to talk to Wang Yi about, especially ahead of that planned announcement that President Trump is planning to make on Monday regarding potential sanctions on Russia. Of course, the big question is whether China would be implicated in perhaps secondary sanctions for buying, oil and LNG from Russia. Of course, this coming against that backdrop of the trade tensions, but at the same time, Rubio doesn't really have the power to decide on trade issues, right? Scott Bessent has said he's going to meet with his Chinese counterparts in the coming weeks. But again, we're hoping to doorstop the ministers later and when they come out of the meeting to see, what the tone was like, whether it was a constructive meeting and whether there is going to be a potential meeting between Trump and Xi later this year.
Min, thank you so much. Min Lo there in Kuala Lumpur. Now let's get back to Roz and Klaus. Klaus, we were talking about tariffs, and it was really interesting saying that you think if it's not a one-off, it's something that actually we can look through because they're not going to be in place for a very long time. What are you expecting for the European Union? What kind of letter will they get? Is it going to be at 20%? And do they now have to choose between China and the U.S.?
I don't think that they really need to choose between China and the U.S. Again, I think I'd have to be either a seer or a charlatan if I told you that what kind of tariffs are going to be imposed. But you said earlier, and I thought that was really hit the nail on the head, which is that Trump is sounding a lot more positive about the EU. I mean, he's in the past said that the EU is even worse than the Chinese, and so there's been definitely a change here. It's clear, tariffs are an incredibly complex tool, and I think Donald Trump is finding that out. You can't just negotiate a trade deal in a couple of weeks. But the hope is that, I think the kind of silence that we're hearing in the background suggests that there is at least a framework agreement. The Europeans, they will accept a 10%, and I think in return, they will give the United States no tariffs at all. Our base case, as long as these tariffs are within a reasonable bound, let's say it's 10, 15% maybe, and probably some special arrangements, maybe some part quotas for automobiles, that's an important thing. Yeah, and your German companies, where they have huge manufacturing plants in the United States, then I think the EU will probably not retaliate. And that's quite a good place, I think. Think about it. For the US right now, for Trump, they are receiving 10% on all of the imports that come from the EU. And I think the 25% on autos are also in place. Meanwhile, they're not getting any countermeasures. So this is a good place. You don't really want to upset that, do you?
I mean, you don't, but actually we don't really have a formula. I think, President Trump was asked by one of our reporters yesterday, and he said, look, it's bad will, it's numbers, but actually we don't really understand yet how this is decided. Sometimes, Roz, we talked about yesterday, it's domestic politics in Brazil. So what's the framework for this?
Well, that is the question. It is politics. I mean, we're talking about tariffs being a fiscal tool, but they're also very much a political tool, depending, again, on Trump's mood on a given day. He tried to use tariffs against Colombia on migration. Now he's been using them against Brazil on a domestic judicial matter because he's mates with the former leader of Brazil and friends with him. And so, what proportion of the 20% is political and what proportion is actually based on trade reality? I mean, you're threatening tariffs on a country, for Brazil, for example, there's a trade surplus with you. So technically, it doesn't really make any sense economically. And so for countries working out how to deal with Donald Trump, it's just quite complicated because you look at Canada, the former Canadian leader, he tried to be tough, then he tried to placate Donald Trump. None of that seemed to work. Carney, the current leader, is trying some more of a middle ground, and that's not necessarily working either. You need to give Donald Trump the sense of a win without giving too much away, and that's exactly what the EU is trying to do. You manage it in a way that you give him some of the things that he's asking for without damaging yourself too much, but it has to be for Donald Trump to be a bit of a win, and that's how you maybe negotiate with him in all of this.
Yeah, and yesterday we were speaking, for example, about coffee because of that 50% tariffs on Brazil. It would actually make it cheaper for a European coffee maker to send things from the U.S. because their own roasters in the U.S. would be punished. Klaus, you basically said, look, you expect inflation to go up.
Yeah.
In the U.S. Is it significant, and why have we not seen it yet? It's not translating into the data.
Well, I think, first of all, I think there's good reason. There was a really enormous boost in imports, all this front-loading that's been much discussed. So American warehouses are chock-a-block full with stuff that was imported into the United States before the tariffs hit. So I'm definitely not confident that just because you haven't seen a whole lot of pass-through, you're not going to see it. Besides, you see, the story is actually a little bit more complicated. In December and in January, goods prices ex energy in the United States rose 0.6% a month in 2 months in succession. And at least according to the liaison and the commentary from the Federal Reserve, the principal reason that they heard from businesses was the anticipation of tariffs. Now, the last few months, goods price inflation has been very, very moderate. I think next week's inflation report is not going to bring a whole lot of good news. After a big undershoot and broad-based, you're going to see a broad-based big overshoot of what the Federal Reserve is looking at.
So I think that would come as soon as next week. So that means repricing.
I think we're going to
start.
I think we're going to start seeing it now. You know, pinning down when these effects come through by the month is a bit tricky.
Yeah.
But there are some weird things. For instance, you know, used car prices in the U.S. have been really weak for several months. That's odd, right? If you anticipate that new cars that are imported are going to be slapped with a massive tariff, you would think that used cars become more competitive. So I think that there may very well be a snapback. Is it going to be this month? Is it going to be next month? No. So I think absolutely those higher prices are going to come through. You know, there's the idea that the exporters are going to swallow the tariffs is, of course, laughable. Yeah. There's a little bit of that effect through the exchange rate, maybe. But you see, the textbook has not been fulfilled in reality. Yeah. The currencies that are being hit, or the economies that are being hit, are seeing their currencies actually appreciate rather than depreciate. And so that's not going to happen. And I don't think that importers and distributors' profit margins are wide enough to swallow them. I think most of it is going to end up with the consumer, and they're not going to be happy.
And Russ, what do we know about the EU? I mean, again, the U.S. consumer is going to be a problem for a lot of EU companies. But do we get a letter today? Or do we know if the two sides are actually talking? Or do you literally just get a letter by email from the President of the United States?
Well, we know they are talking, and we keep hearing it's imminent. But it's a bit like India. We've been hearing that there's a US-India deal, and it's been imminent for a week, and it's not yet emerged. I might just jinxed it and it will come out in half an hour. But we know that there's a feeling that they're getting close. The Europeans do have, as we're saying, a framework. They were willing to take 10%. Are they willing to take 15 or 20%? If that becomes the new baseline for tariffs, that becomes a lot more complicated. So that's a wrinkle they're probably talking about today. EU ambassadors are meeting today. We know that trade ministers are early next week, but the conversation is going on constantly behind the scenes. And so we may get a framework today, but the Europeans probably just want to get something out publicly and at least on the board, even if it's broad, even if there's a lot to be discussed, a la the UK, you get something, then you go away and start having proper detailed negotiations. We can see from the UK just how hard that is. There's a lot we don't know, but at least you have a framework, and that slightly prevents the US or Donald Trump from tinkering at the edges as we go on.
Klaus, very quickly, I mean, are we going to see a recession? You're not pointing to any good news, given how you explained everything. So could we also see a significant slowdown for the U.S. and the rest of the world?
Well, I certainly think that the slowdown is absolutely inevitable. You know, the U.S. economy has been growing around 2.75%. We are relatively sanguine about U.S. economic growth prospects, but we think that a slowdown by about 1 percentage point to around 1.75%, which would be below potential, is on the cards. I don't think recession unless you get additional shocks. But, you know, again, the whole tariff landscape is so uncertain that you really can't exclude it. But I definitely don't. It is not our base case that the U.S. is going to slip into recession. Big slowdown, yeah. Recession, yeah, probably not.
Okay, Klaus, thank you so much. Ross Matheson there, our EMEA News Director, and Klaus Bader from SocGen CIB. Coming up, EM currencies on their longest losing streak this year. We'll ask why next. And this is Bloomberg. Welcome back, everyone. Now, an index of emerging market currencies on its longest losing streak this year. Now, EM currencies have fallen for 5 straight days as President Trump's tariff threats derail a rally that had held sway for 3 months. Now, for more on all of this, we're joined by Kamaksha Trivedi, Chief FX and Emerging Market Strategist at Goldman Sachs. Kamaksha, thank you for joining us. I mean, it's probably a welcome relief from your desk because, like, tariffs are coming left, right, and center with letters. I mean, what's your underlying understanding of what will happen in the next 2 weeks?
more negotiations. I think that's what it seems to be all about. I mean, the actual news in terms of what has changed is simply that the deadline has been pushed back to the, August rather than sort of July. So it seems to me like what is going on here is that there's a desire to reach more deals require more negotiations require more time. So I think there's a reason why, markets are going sideways, FX markets are pretty choppy, because there is not really a whole lot of actual new news here as much as the deadline has been pushed back.
Do markets embolden Donald Trump to go further?
I think there is a fair amount of complacency that, like we saw the rollback or the extension of, tariff deadlines, back in after Liberation Day, like we've seen that again, that some of the most extreme tariff headlines will not come to pass. I think what has also happened is, and I think this is more genuine, is that the range of uncertainty has shrunk. I mean, if you set aside the Brazil example, if you think back on Liberation Day, the bid-ask spread on tariffs was, between, 10% and 50, 70, depending on what you think about China. Now it feels like the bid-ask spread is somewhere around that 10% level. 10% seems to be the new floor. That's what the UK deal suggested. But even above that, it seems to be a little bit more bounded. And so I think that's part of what markets are responding to, that the uncertainty has come down, and that allows them to make some more progress than before.
But then there's a kind of, I don't know what the upscount is, like the contrary of a discount for BRIC countries. So how much, what does that mean for China? What does that mean? I mean, Brazil, as you say, was domestic politically, but can it be negotiated down?
Look, I think in Brazil, if you look at the details of the letter, I mean, it does seem much more political than about trade. I mean, bear in mind that, Brazil has a trade deficit with respect to the U.S. and has had one for several years. So it really doesn't feel like this one is about trade deficits. That makes it harder to provide trade-related concessions that would, offset some of the tariffs. But equally, I think, at the end of the day, the reality is that Brazil's export exposure to the U.S. is pretty small. And so I think that this is going to be a small hit to GDP if it goes through in the way that it's been, headlined. And you saw that in the currency as well. Yes, the real sold off as per your opening segment, but it came back pretty quickly. And given the strength of the real year to date, this is a relatively minor move. It's like the daily volatility of the real.
Yeah, I mean, I was struck today, but, Vietnam surprised by Trump's 20% tariffs. And also, if you put it bluntly, like a lot of these countries would probably love to be able to afford U.S. goods. They just can't. Yeah. So, again, I don't know how that gets managed. Do you have favorite currencies that you play into right now?
I mean, I think that, when you think about the broad FX complex, I think there's a sort of, important theme about what's going on in the dollar and the fact that the U.S. is finding it increasingly difficult to attract unhedged capital flows. That's putting pressure on the dollar. So that's kind of one side of it, and I think that's likely to extend going forward. But bear in mind, we are 6 months into a dollar downtrend. When you look at like large dollar depreciation, like the one after the financial crisis, like the one in mid-2000s, they tend to be very rapid 6 months in and then tend to flatten out. You have choppy periods, you have back and forth. So I think we are in that phase now. I think you need a kind of new catalyst to really kind of push the dollar forward. I think one of that is potentially, Fed cuts. If we start to see Fed easing move more centrally into the picture, that could be one. But the other, I think I wouldn't underestimate, is China. CNY is moving. It's moving slowly. It's under a lot of people's radar, but we just recorded the lowest, year-to-date fix in dollar CNY, so the strongest CNY level. I think there's something very tangible going on there. I think if you see that move continue, I think it's going to unlock a lot more upside in Asian currencies, places like the Korean won, places like the Japanese yen, apart from the CNY itself.
But are you expecting Fed cuts this year, or are we going to start inflation creeping up into data even as early as late July, August?
We are expecting 3 cuts this year. I think that, you're right, that I think there's going to be a little bit of a tug of war between the macro data as it comes through. If we see a little bit of that inflation pickup, how quick it is, how significant it is, and then, of course, how transitory or not that is. at the same time as you're seeing a sort of graduate loosening in the labor market. Yes, payrolls were very, pretty strong and stronger than expectations, but probably not as strong as the overall headline suggested. And so I think that, those two things combined, starting with the fact that the policy rate is at a pretty high level, pretty restrictive level, you would argue in some senses, I think it still allows room for some gradual reduction in the policy rate this year.
Kamaksha, is this a one-off? I mean, we're out of time, but actually, are these tariffs here to stay for a long time, or is it really just trying to get money back to the U.S.?
I think even the history of the last set of the Trump tariffs and then how it went through the Biden is that some of these tariffs are here to stay. Particularly the sectoral ones, I think, are hard to roll back. I think those are going to be here to stay for a while.
Yeah, and that changes also inflation expectations. Kamaksha, as always, thank you so much for joining us. Kamaksha Trivedi, their Chief FX and Emerging Market Strategist at Goldman Sachs. Now, coming up after a volatile week for copper, we'll talk to Amy Gower, Metals and Mining Commodity Strategist at Morgan Stanley. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump threatens a 35% tariffs on some Canadian goods and raises the prospect of increased levies on most other countries. Meanwhile, Vietnam says it's surprised by Trump's tariff announcement. China's Foreign Minister Wang Yi accuses Washington of abusing tariffs as he meets with Secretary of State Marco Rubio. Plus, the UK economy shrinks for a second straight month as companies and consumers struggle to bounce back from the blow dealt by tariffs and tax hikes. So it's been a volatile week. That's an understatement for copper after President Trump said he would impose 50% tariffs on copper imports. Now, those plans include semi-finished products such as materials used in power grids, the military and data centers. Well, joining us now is Amy Gower, a Metals and Mining Commodity Strategist at Morgan Stanley. Amy, thank you so much for joining us. Copper, there were so many questions, first of all, of why copper in the U.S. traded differently to copper in London. But what did you see this week? What have you learned?
Yeah, so I think some of what's happened is as we would have expected things to play out. So we heard on Tuesday night Trump would plan to put 50% tariffs on copper imports. And US is a net copper importer, so it relies on imports for about half of what it consumes. And so, therefore, the COMEX price, which is the delivered into US price, should ultimately reflect that tariff. Now, at the moment, it's moved to about a 30% premium to the international benchmark. And I would say the reason that's happened, why we haven't moved all the way there yet, first of all, the tariffs aren't actually in place yet. They're due to come in on the 1st of August. But second, we have had warning that this was coming. So the Section 232 investigation was launched in February. So what this has done is allowed the US to front load significant volumes. We think they've got about now 6-7 months worth of import coverage sat in the US that can be used first.
So were we expecting actually the president to be so aggressive on copper?
So I think that the tariffs probably were expected broadly by the market, but they came both earlier and higher than expected. The deadline for the Section 232 investigation was late November. I think people generally thought country tariffs would be prioritized. So the timing is a surprise, and then also going straight to 50%. Now, that is where we are on aluminium and steel, but we went to 25% first and then 50%.
So how does it change actually the copper complex? Again, are things going to be shifted around? Are there countries that will benefit from this?
Yeah, so I think what we should see from here is short term, actually, for the international benchmark, this is a bit of a negative. So it's benefited so far from this front loading of US demand. We've probably added about 1.5% to global annual demand just from all of this extra buying. And that's been because there's been a profitable trade by doing that. As soon as the tariffs are in place, that trade is over. So we're going to not only lose that buying, we may even see the US buying less than normal because they're going to use up this inventory buffer first. So actually for the LME benchmark, we think this is a bit of a negative. So far it's holding up. But I'd say that's how we would expect that to trade. And then COMEX should gradually move higher. In terms of countries benefiting, it's going to depend who ultimately pays the tariff. So if you've got long-term contracts into the US that you have to deliver against, you may have to be still paying it, and maybe that the consumer pays is not clear at this point.
I mean, where does this leave China? I mean, they're a huge consumer of copper. I know it's gone down because of some of the dynamics, but actually overall, does it shift overall copper demand worldwide?
So China is, probably over half of global copper demand, but they're mainly going to be buying based on that LME benchmark, the international benchmark, which hasn't really moved. In fact, it pulled back a little bit. And what we've seen is the Yangshan premium, which is the China copper import premium, has actually bounced with this. So that's actually suggesting with these small pullbacks, maybe China's even coming in to take a little bit more copper.
I mean, there's a number of metals that we also need to look out for. What's going on with iron ore? There's a lot of these metals that you follow every day that is absolutely necessary for everything in the economy that people don't really realize or talk about as much.
Yeah, so iron ore is the key raw material to make steel. It's been quite range-bound, actually, this year. So we've been trading in a sort of $90 to $100 per tonne range, which is actually a little bit lower than we've had over the last few years. There's a few things happening there. So one is that there's this broader steel reform going on in China. So there's expectations that China will be looking to ease off steel production through the second half of the year. And China's about 75% of iron ore demand in the seaborne market, so that means less demand for iron ore. But equally, there's a bit of optimism at the moment. So iron ore has actually been bouncing because there's hope that we might get some extra money for property in China, that maybe there'll be some stimulus at some point this year. And we're also just coming off peak seasonal shipments as well, so maybe a little bit less supply from here.
I mean, there's a lot of these. Again, a lot of these metals are also used for the energy transition. That maybe we don't call it ESG anymore, but it's going into a different kind of energy resource. I mean, do all these tariffs actually impact the availability, for example, for a region like Europe that still has targets of how much they want to diversify energy?
Yeah, so I think this energy transition demand is definitely still there. Actually, for many of these metals, it's quite small at the moment still. So it is growing. Your biggest sectors are still going to be your construction, your grid. But with all these grid upgrades planned, of course, if we are seeing inflation in global prices, that is going to be starting to come through, particularly for something like cable where, copper's the main component. In a electric vehicle, copper's going to be one of many. But in something like a cable, copper, an increase in copper prices is going to translate directly through the price.
Gold. I mean, gold, I feel like the limit is the sky, actually, for gold, because we're also seeing a lot of central banks buying gold as a way to diversify away from treasuries.
Yes. So on gold, this has been one of our top pick metals for this year. I think what we're seeing at the moment, which is super interesting, is this really strong inverse correlation with the dollar. And it's actually quite unusual for gold to hold this relationship for so long. And so actually, if we do see this dollar weakening trend continue, then arguably gold can keep moving higher from here. And that's just from a sort of macro view. But again, if we talk about the physical demand, it looks like central banks probably on track for another year of this kind of elevated buying that we've seen. And then the other one is the exchange traded funds. So for the last 4 years, they've been net sellers of gold. And then year to date this year, they've really stepped back into the market. So that's all backed by physical gold. That's creating that demand. We'll have to see on jewelry, which is about half of global gold demand. That is more price sensitive. But sometimes what you see is people pause their purchases and then they sort of adjust to the new normal price. So we're kind of waiting to see on that one. But it does look like there is a bit of weakness in that sector.
But I mean, do you see it like actually the role of gold having completely changed? And I know you were one of the ones that were kind of predicting in terms of price, but what kind of price could you expect in the next 12 to 18 months for gold?
Yeah, so look, I think if we keep seeing the dollar weakening, we could be looking up towards the sort of $3,800, $4,000 level if this dollar weakening trajectory continues. And I think, look, the role has changed. That investment demand has become much more important for gold, and I think for central banks as well. What we see is when they change their behaviour, it tends to be sustainable. So in 2011, post the GFC, they went from being sellers to buyers, and then they bought at about the same level for a decade. In 2022, they doubled that level, and we've now seen 3 years probably on track for a fourth year. So I'd say that is here to stay.
So interesting. Amy, thank you so much for joining us today. Amy Gowrather, metals and mining commodity strategist at Morgan Stanley. Now, the U.S. President Donald Trump says he'll make a major statement on Russia next week, just as the U.S. ramps up military support for Ukraine by sourcing more weapons through NATO allies. In a phone interview with NBC News, Trump doubled down on his criticism of Vladimir Putin, condemning Russia's ongoing assault on Ukraine. Well, let's bring in Bloomberg's Russia economics and government editor, Greg Sullivan. Greg, good morning. So what can we actually expect President Trump to say, and how could this shape U.S. foreign policy moving forward?
Well, this could be a number of things. In recent weeks, we really have heard a shift in tone from President Trump on Russia. He's seemingly grown increasingly frustrated with Russia over their intransigence in talks and the continued bombardment of Ukrainian cities with drones and missiles. What we could hear from Trump would be more of that continued rhetoric, or even something like the introduction of sanctions on Russia. It could also be potentially an announcement about weapons deliveries to Ukraine as Ukraine seeks to protect itself from these bombardments. But on the other hand, we also had Secretary of State Marco Rubio, who just met with his Russian counterpart, Sergei Lavrov. They discussed Ukraine, among other things, in that discussion, and so it could be something out of that. The key thing to watch will be, is there some kind of concrete announcement, something on sanctions, weapons deliveries, or the talks at hand, or is this just really more rhetoric? And that will be the key to deciding whether this is an actual shift in U.S. policy or whether this is continued frustration with Putin, but not really a real policy change.
Greg, President Trump also threatened the possibility of more sanctions against Russia. So how likely is this?
Well, up until now, we've seen a real reluctance from President Trump to impose sanctions on Moscow. He has said on a number of occasions that that is an option at hand and that he would consider it. But so far, there's been no introduction of sanctions, and we've heard that he's actually quite reluctant to do so. Some in his party, including in the Senate, are really anxious to try to impose new sanctions. There is a Senate legislation for imposing sanctions. It's quite punitive. But if he does decide to impose sanctions, it could come about quickly. He probably would have the backing of Congress. But as of right now, it seems that it's still rhetoric. We don't know if he's actually decided that, yes, now is the moment. That's something we could learn on Monday as well.
Greg, meanwhile, the Ukrainian president attended a conference in Rome and seemed pretty optimistic. What are the main key takeaways?
Yeah, there definitely were some positive sounds from President Volodymyr Zelensky coming out of that conference. Zelensky's been on the hunt for Patriot missile batteries. Those help protect against the drone and missile barrages that Russia has been launching against Ukraine. He seemed pretty confident that those would be coming, and allies seemed to back that up, saying that Patriot would be delivered to Ukraine and that they were on board with supplying Ukraine with that. Trump said that they would be supplied, but that NATO allies would pay for them. So it does seem some movement there in terms of the deliveries. Of course, this is coming against the backdrop of these incredibly large and growing missile and drone barrages that Russia has been launching against it. So Ukraine really looking for ways to try to shield against those increasingly lethal attacks.
Greg, thanks so much. Greg Sullivan there with the very latest, of course, on Russia and Ukraine. Now, Britain and France have agreed to exchange migrants as part of a plan to deter illegal crossing by boat. Now, the deal was struck by the UK Prime Minister, Keir Starmer, and Emmanuel Macron, wrapping up a state visit from the French president to London this week. Let's bring in Lionel Laurent, our Bloomberg opinion columnist. Lionel, this is a pilot program. What are the chances of it working?
Yes, that's right. But before we even talk about the chance of it working, it has to be signed off. Macron was very clear to say that this would need to be signed off as well by Europe, because this is an EU border, part of a long-standing issue, but Brexit has kind of made it worse. Now, I think the chances of it working, before we even decide what success is, it'll take political will. We've seen this kind of deal happen between the EU and Turkey, for example, and we've seen that what this can do is bring the numbers down, but it does require political will, because when ties between EU and Turkey got strained, the numbers went up again. So there's always this risk of weaponization of migration. So it will depend a lot on the politics. So it has to be signed off legally first, and then politics will take over.
So what else has come from Macron's state visit to the UK?
So for the UK, this really was a lot of Starlink. So we can see these two countries are getting more constructive and working together better, but they clearly have very different priorities when it comes to their relationship.
How important was this visit when it comes to a reset between the UK and France, and actually the UK and Europe, Lionel?
It's important because I think it's just for France as well. If you think about how the relationship between France and Germany is progressing, Germany is clearly rising now as the leader on the continent with the most room to spend on defence, and Merz is now taking more of a leadership role. So I think France is naturally finding more partners, hedging its bets, and I think given the history of France and the UK and their nature as nuclear power and defence-oriented mid-sized countries, they are still interested in keeping that relationship going. So I think it's pretty important, even if not all the scars have healed.
Lionel, thank you so much. Lionel Laurent there, a Bloomberg opinion columnist, and also check out Lionel's weekly newsletter. It's really good. Coming up, the CEO of Europe's most valuable company on whether Europe can compete on the AI world stage. More from our exclusive interview with SAP's Christian Klein. That's next, and this is Bloomberg.
This is an iHeart podcast.
Today we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Nathan Hager. We made it to Friday on Wall Street, and that is the sound of the opening bell from the floor of the New York Stock Exchange on a morning with equities in the U.S. in record territory. This morning, they're pulling back. Right now, the S&P 500 is lower at the open by 0.5%, trading around 6250. The record is 6280. The Dow Jones Industrial Average opens 0.5% lower as well, down by about 240 points. The Nasdaq Composite is down 0.3%. The 10-year Treasury yield is up nearly 5 basis points to 4.4%. So stocks are pulling back from all-time highs after the latest trade threats from President Trump. They include a warning of a 35% tariff on Canadian imports. Bloomberg's Bill Ferries reports that's higher than the current 25% rate, but there's a catch.
The products that are covered under that USMCA trade agreement are not going to face that 35% tariff. And frankly, that's the majority of goods that Canada is exporting to the U.S.
Bloomberg's Bill Ferries reports the president also talked about setting a blanket 15 to 20% rate on most other trading partners. In an interview with NBC News, Mike Wilson, chief U.S. equity strategist at Morgan Stanley, says in an interview with Bloomberg Radio, the market reaction to all this is, here we go again.
We kind of know the pattern now. This is President Trump's style. He goes hard, and then he doesn't back off completely, but it's a back and forth.
And Morgan Stanley's Mike Wilson says markets could get exhausted by all this later this quarter, and tariffs could start to eat into corporate earnings. You can hear my full conversation with Mike Wilson of Morgan Stanley on the Bloomberg Talks podcast. Right now, President Trump is headed to Texas to survey the damage from last week's deadly floods and meet with first responders and victims' families. Patrick Turk with Texas Search and Rescue says more than 170 people are still missing.
Now we're dealing with the water being down drastically and huge debris fields that we have to sort through, and that takes a lot of time.
Patrick Turk with Texas Search and Rescue. The president's expected to get an aerial tour of the hardest hit areas. More than 120 people are confirmed dead statewide. President Trump says he could make a major statement on Russia this Monday. He reiterated his disappointment in Vladimir Putin in that NBC News interview as deadly Russian attacks on Ukraine continue. Bloomberg's Greg Sullivan covers the Russian government from Dubai.
In recent weeks, we really have heard a shift in tone from President Trump on Russia. He's seemingly grown increasingly frustrated with Russia over their intransigence in talks and the continued bombardment of Ukrainian cities with drones and missiles. What we could hear from Trump would be more of that continued rhetoric, or even something like the introduction of sanctions on Russia.
Bloomberg's Greg Sullivan reporting from Dubai. Secretary of State Marco Rubio says odds are high for a summit between Presidents Trump and Xi Jinping after his meeting today with Chinese Foreign Minister Wang Yi.
Obviously, there are some issues we're going to have to work through, and that's to be expected with countries of our size and scope and influence in the world, two global powers such as the United States and China. But I thought it was a very constructive and positive meeting and gave us some things we can work on together.
Secretary of State Marco Rubio spoke after his sit-down at the ASEAN summit in Malaysia. President Trump has said he would like to meet with Xi sometime this year. Back in Washington, the State Department has started sending layoff notices to more than 1,100 civil servants and close to 250 Foreign Service officers who are working in the U.S. The Supreme Court gave the go-ahead for the Trump administration to move ahead with its broader government downsizing plans yesterday. State Department spokeswoman Tammy Bruce hinted at the move following that ruling.
This is not a matter of the individual being targeted or an individual not being right. This is about being able to be effective due to the size of the organization and to the structure of the organization.
Tammy Bruce at the State Department. The Associated Press is reporting most civil servants are being placed on leave for 60 days, 120 for Foreign Service officers before they are officially let go from the State Department. Checking back on Wall Street, we're watching shares of Performance Food at the open. They are higher by 4% on word that company's drawing takeover interest from U.S. foods, and that stock's up more than 1%. Bloomberg's Valerie Teitel reports.
This is a potential deal that would create a food distribution company with combined sales of roughly $100 billion. U.S. Food supplies restaurants, hospitals, schools, and hotels. Performance Foods offers a similar service across the U.S. and Canada.
Bloomberg's Valerie Teitel reporting. We're also watching Levi Strauss shares. The denim giant says it's not distressed by tariffs and sees rising sales offsetting trade impacts in the latest quarter. Levi shares are up nearly 8% at the open. And Bloomberg News has learned Delta Airlines has started stripping the engines off new Airbus jets to get grounded planes in the U.S. back in the air and to stay ahead of European tariffs. Delta shares at the open are down 2%. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
Remember when a single technology glitch could bring an entire workday to a standstill? I'm Mark Banfield, Chief Commercial Officer at TeamViewer. Today, most technical issues are recurring. If you know the patterns, these issues can be remediated before they impact your business. One major UK retailer discovered a single point of sale outage cost them around $1 million in lost sales during a single lunchtime. Now, using TeamViewer's digital workplace platform, the same company is able to identify and fix those issues before they even happen. But proactive troubleshooting isn't just about the incremental improvements. It's about fundamentally reimagining how work happens for everyone. And the companies that move first get competitive advantages in terms of efficiency, productivity, and innovation. To find out more, visit bloomberg.com/TeamViewer.
The data that matters for your investments.
Shares of banks across the board are gaining.
And analysis on the companies making news on Wall Street.
Smaller companies that produce once again right here in America, Katie.
Well, on that note, President Trump now says that he will push forward with his tariff regime with no more extensions, just one day after hinting that his August 1st deadline was not firm. The president then turned his attention to two very specific industries.
I believe the tariff on copper, we're going to make it 50%. We'll be announcing something very soon on pharmaceuticals. We're going to give people about a year and a half to come in, and after that they're going to be tariffed if they have to bring the pharmaceuticals into the country, the drugs and other things into the country. They're going to be tariffed at a very, very high rate, like 200%.
All right, let's get the state of play from Bloomberg's Washington correspondent, Tyler Kendall. So no more extensions after August 1st, although people, Donald Trump says they're on copper, I guess, have a year and a half to come in?
Yeah, hey, Matt, exactly. So we are waiting for potentially these sector-specific tariffs to come down the pipe. We were expecting that they were incoming, considering that this is going to be invoked under Section 232 on the grounds of national security concerns, which meant that the administration had already launched an investigation looking into copper back in February, and then pharmaceuticals, the second sector-specific tariff that President Trump said to expect. That investigation was launched back in April. Now, typically it takes 9 months to get these underway, but it is clear the administration is working on a little bit more of an expedited timeline here, and it's really only going to complicate the negotiations on the so-called reciprocal tariffs going forward, because even though these are tariffs enacted under separate provisions under the law, they are becoming really integral in the conversations, including when it comes to the European Union, for example, which President Trump said could expect a letter in the next 2 days. He said that there will be a wave of tariff letters incoming. We could expect a minimum of 7 countries to receive them this morning, and he said a second batch will be coming later in the afternoon.
All right, Tyler, appreciate the update. That is Bloomberg's Tyler Kendall giving us a lay of the land here. Let's talk specifically about copper, because the president's 50% tariff threat is already impacting the price of copper. You have one Jefferies analyst saying, quote, that the U.S. does not have nearly enough mine, smelter, or refinery capacity to be self-sufficient in copper. Let's discuss now with Joe Doe, who covers the space for us. You had Citigroup also calling this a watershed moment. What do we know so far, and what does the reaction look like?
What we know is the president has said he's going to put a 50% tariff on copper. Don't know what copper, don't know which products, don't know how high or down the supply chain they go, and that the market had a massive reaction when he made the comment. We've seen prices pull back in both the futures traded here in New York and the LME, which is typically the benchmark globally. But we did see prices spike as much as 17% yesterday. I mean, I've covered copper for over a decade. Like, I've never seen that kind of a spike in a price in a one day. So where we sit today is everybody in this market is wondering, what are the details? What are we actually going to get? Howard Lutnick, the Commerce Secretary, said, well, it's done and we're going to get this out, and you'll probably see it in a Truth Social post or something like that. We haven't seen anything yet. The market does want detail. There are questions around this, like, is it copper cathode, which is like raw copper? Is it copper products like semifab and others? Is it pipes? Is it copper wire? I mean, copper wire is a massive, massive industry in this country because electric grids, everything, right? So everybody's wondering where the price is actually going to be on the tariff.
And when? Also, because we're going to talk to John Wobensmith later, who runs Genco, a shipping company. And I imagine he has clients calling him saying, like, can we send over some copper now, right?
Right, exactly. What we did see a few months ago when we reported that President Trump was speeding up the 232 process on copper, we saw an arb window open up. People were rushing to get copper into the United States, anticipating that the tariff would come on earlier than expected, which meant, hey, let's get this in before we have to pay a higher price. Presumably, you're going to start seeing the same thing now that we're starting to get closer to this actually happening. But I think the question is, like, how much of that, right? Because this had already been happening. The market has been expecting a tariff to come in. I think maybe the big surprise here is that number, 50%. A lot of the market was kind of waffling with maybe it's going to be 25%, maybe it's going to be 10%. They didn't know. But now we have the President of the United States actually giving a number. So we could see that affecting the actual trade flows for the near term.
All right, Joe, look forward to talking more about this with you over the next year and a half. Joe Doe covers metals for us. He's also our economic statecraft czar, so to speak. The president threatening a 200% tariff on pharmaceuticals imported into the U.S. 200%. That threat sending European pharma names into the red. For more, we're joined by Bloomberg's health reporter, Damien Garde. So, Damien, what do we know about the details of this tariff threat?
Well, very little. And in
कैंडल का ध्यान रखना, ये कैंडल ओपन इक्वल टू लो बनी है, ब्रेक होगा इसका खुद का लो तो सेल हो जाएगा क्रूड ऑयल में, ठीक है, डायरेक्टली मत करना. कैंडल इज ओपन इक्वल टू लो, कोई ऐसा डेटा तो नहीं है, बट 8 PM हुआ है तो हो सकता है कोई सडनली वॉल्यूम आ जाए. रेजिस्टेंस पर ही है, सेलिंग बनती है, थोड़ा सा एसएल बढ़ा है तो उस चीज़ का ध्यान रखना. 2 टारगेट रख सकते हैं इसमें डाउन साइड पे. नेचुरल गैस भी लगता है साइडवे चला गया रेजिस्टेंस एरिया के अराउंड.
Saw this morning with Merck agreeing to buy Verona for about $10 billion. We know that Merck has been shopping around, that they have that patent cliff coming up, and it seems like they've found their answer here.
It does. I think what we're seeing, as you mentioned, Merck's patent cliff is that they currently make the best-selling drug in the world in the form of Keytruda, a medicine for many, many types of cancer. It will soon lose its exclusivity, and Merck will have a roughly $30 billion, $40 billion hole to plug in its revenue. They know that there is no one, they're taking kind of a Moneyball approach, I suppose. They know there's no one product that can recreate the effects of Keytruda on their revenue, so they are looking to recreate it in the aggregate, mostly through a series of deals and through their pipeline. So that enter Verona today, which has a recently approved treatment for COPD, emphysema, and other kind of related conditions, that has peak sales estimates in the mid-single-digit billions out into the 2030s. And that is the kind of like single or double that a company like Merck needs in order to prepare itself for the loss of Keytruda's patent life.
Hey, Damien, great to get your take on this. We're going to be digging deeper and deeper, obviously, into this issue over the next few weeks and months as well. Damien Garde there covers healthcare for us here at Bloomberg. Coming up, Sam Altman and Mark Zuckerberg are poised to reunite in Sun Valley, but they're fit their fit is going to be much cooler than we're showing you in these pictures. You got to see the glasses Sam Altman is wearing, and I'm looking forward to a pendant over Mark Zuckerberg's turtleneck sweater. Later on, don't miss a conversation with White House Council of Economic Advisors Chairman Stephen Myron. In our next hour, we'll ask him about the effect on tariffs after the big, beautiful bill was signed on the 4th of July. This is Open Interest.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Harness technology and AI to shape the way we live our lives. And unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence. In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Harness technology and AI to shape the way we live our lives. And unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
Let's get out of high interest. Look at what's making headlines around the world. A Rivian-backed startup that's developing smaller EVs is getting valued at $1 billion right now in a new investment from Green Oaks Capital. The company, called Also Inc., was spun out of Rivian earlier this year. Also hasn't revealed specifics, but said its tech platform will be applicable to e-bikes and microcars, as well as neighborhood EVs, whatever that is. Mobileye is reporting preliminary second quarter results that beat expectations. It also announced, though, a secondary offering by Intel. Bloomberg Intelligence says the results reflect a stabilization in global auto production, and the offering likely reflects Intel's cash needs. And tech titans are converging in Silicon Valley, Idaho, for the annual Allen and Company conference, an event where billionaires and CEOs rub shoulders and strike deals. Our own Ed Ludlow is there, and he caught up with OpenAI CEO Sam Altman, who said he's looking forward to meeting with Meta CEO Mark Zuckerberg. The pair haven't spoken since Zuckerberg poached some of OpenAI's top engineers. Ed asked Altman his thoughts on AI talent recruitment.
I think we have obviously we have an incredibly talented team, and I think they really love what they're doing. Obviously, some people will go to different places. There's a lot of excitement, I guess we could say, in the industry, but no, I think we feel fine.
So that's one feud that's happening right now in the tech industry, which we're going to get to. But let's get to another feud that is underway, and that is Elon Musk responding to longtime Tesla bull Dan Ives. Now, yesterday, the analyst posted recommendations for Tesla's board to consider for Musk when it comes to his divided attention, when it comes to politics and what's actually going on with the business. What did Elon Musk say? He said, "Shut up, Dan." And that, of course, is Tesla's biggest bull on the sell side. Let's discuss with Bloomberg Tech co-host Caroline Hyde. So we're highlighting this because this is having a real impact on Tesla shares, this overarching concern that we have a distracted CEO and he's just getting deeper and deeper into politics and not focusing on some of the fundamental issues that are going on at Tesla.
The issue is Elon Musk has always given very short shrift to analysts, to the shorts out there. He's not afraid to bite the hand that feeds. Dan Ives is the hand that gives it a price target of $500. Biggest bull on the street, actually saying give 25% voting control to Elon Musk. Was Elon say, shut up? So, I mean, it's an interesting tete-a-tete, but we do see the ongoing concerns that we have a more distracted CEO. Also, a guy who's busy launching an updated Grok later tonight. So he's busy doing that. Grok getting a lot of flack today with some seemingly anti-Semitic commentary happening on the chatbot. You've also got the guy out there raising money for SpaceX. Ed Ludlow breaking the news that it's now going to be worth about $400 billion. That's the most valuable US startup out there, as it raises a little bit more money, but ultimately makes more liquidity for those who've been working there. I think that's a real signal that people are still willing to back Elon Musk and Elon Inc., even though he's busy having a feud with the President of the United States.
It's a good reminder that we've always had these conversations around Elon Musk. He's always been in charge of several different companies at one time, and the SpaceX share sale is a great example.
Yeah, I mean, Kathy Wood was on, I think, surveillance yesterday saying that she's not worried about Elon Musk being distracted, but he has got a lot to do. I'm waiting to see what Mark Zuckerberg wears to Allen & Co. Like those
glasses, right?
Those Varnays that Sam Altman was rocking are truly, I mean, Mike Judge needs to come back and make another Silicon Valley with these characters. They're just amazing.
And where are the cameras and where is the AI infused into your Varney glasses? I thought actually Sam
the
Altman...
Meta investment, right? Another $3.5 billion into Luxor.
Luxottica?
Yeah.
They're taking now a 3% stake in the maker of Ray-Bans and Oakleys, who make their smart glasses. They could ultimately take about a 5% stake, according to people familiar. This is them betting big on ultimately the share price improvement in a company that they've anointed to build their technology of the future. Interestingly, I thought Sam Altman was on fighting form today, yesterday when he arrived at Sun Valley, also saying that, look, watch this space for our hardwares. That was the last question that was thrown at him. And they were like, what about your hardware with Johnny Ives? And he was like, it's going to be great. But at the moment, he's wearing Varnays. But he's certainly not wearing Meta glasses. I'm pretty sure Zuck will be.
Yeah, and I thought that Meta investment was really interesting because you also saw Warby Parker shares rise yesterday. Warby Parker, of course, wasn't the target of the investment, but maybe some speculation that we're going to see more of these matchups in the future.
And you've already seen it. Alphabet, Google's been getting closer to Caring Group with its glasses. We're likely to start to see more and more companies come out with this new way in which we interact with AI. It's not going to be augmented reality. That's a step too far. The Vision Pro ultimately was too pricey and not the form factor we need. But we do want to have AI in our intermediate lifestyle, and that's going to be with the sunglasses, it feels like.
We should remember, so far, Meta has invested in EssilorLuxottica, and they own both Ray-Ban and Oakleys. And those are the two brands that have been infused with this technology, right? Varney is actually owned by LVMH, so it's a completely different...
fashion.
Owner, right? So Meta is only making glasses with the brands that are owned by Luxottica.
Yeah.
It's not like they're going to branch out and do something with a different brand that's not owned by Luxottica.
Are we trying to signal as to who OpenAI is getting into bed with? We know that they've got this partnership with Johnny Ive. We know that they've got some legal ramifications with that. And so we'll see who they particularly work with. I'm
so fascinated to see what Johnny Ive and Sam Altman come up with, because the thing about Apple is they really don't need... I know Dan Ives was out with a note today saying they have to make an acquisition, and he's saying perplexity is it. But as long as they own the hardware with which we use AI, it's okay. But if Johnny Ive and Sam Altman come up with something that makes you no longer need an iPhone, then Apple has a real problem.
But then also look at the changes that are currently happening at Apple. We've just had the yet further scoop that the COO, Jeff Williams, who'd been there running the COO role for at least a decade, saying goodbye. At one point we thought he might take over from Tim Cook. They're basically the same age. But the guy who comes in instead, Sabi Khan, he's been there for 30 years. These are people who know the business well. We're likely to see the hardware engineering guy get anointed potentially to take over Tim Cook. That's what people have generally thought. But this is a shuffling of the deck. The people in charge of supply chain here are all being regalvanized. And look, you have the latest tweet comment out of Peter Navarro, who's there very much trying to dictate where trade deals go, saying Apple thinks it's too big to tariff. That's a headache for Apple right now. Is that the distraction for that company rather than innovating in AI? You've got Tesla CEO distracted with politics, and you've got Apple distracted being forced to think about politics.
All right, Caroline Hyde co-anchors the Bloomberg Tech Show. You can catch her with Ed Ludlow at 11. He'll be lurking in the bushes somewhere at Allen & Co. Talking with a billionaire CEO, but I'm sure present on the program. Coming up on this one, we've got a wave of share sale announcements overnight, including, this isn't one, but interest in the Chinese business of Starbucks and other potential companies on the block. Details ahead right here on Open Interest.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Overcome operational constraints to focus on future growth and unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
Welcome back to Open Interest. A check on the setup when it comes to the futures market ahead of the opening bell, just about 7 minutes away. You can see we're up slightly. We had pretty much an unchanged finish for the S&P 500 yesterday with some big intraday volatility. Right now, as it stands, we're about 0.3% higher. Same story if you take a look at the NASDAQ 100. Your big tech names that live there also up slightly. Small guys are winning today. The Russell 2000 up about 0.4%. Probably helps that you have bond markets cooperating a little bit this morning. The 10-year Treasury yield down slightly below 440. Matt Miller.
All right, so overnight we saw a wave of stake sales, share sales, takeover interest from companies like Bank America and Starbucks. Those are the sellers in this. Let's get details from Bloomberg's cross-asset reporter, Isabel Lee. And I should say potential sellers, right? These aren't done deals. There's a lot of speculation here, but I want to start with AES, an energy company with an enterprise value of $40 billion.
It does have that enterprise value, and its market cap is only around $8 billion. So it's a power from AES, and it's exploring options including a potential sale. That's according to people familiar with the matter, and you see shares edging higher by just around 2%. So AES provides power, renewable power, to tech companies like Microsoft, Google, Amazon, and investors including Brookfield and BlackRock have really been studying their shares after they lost half of their value in the past 2 years, of course, due to Trump's anti-renewal policy. So AES, again, to your point, has an enterprise value of $40 billion, which will make it one of the largest leverage buyouts that would rank of all time.
And you can see shares just flying right now, up about 17%. I just want to talk about Starbucks and what's going on with the China unit, reportedly drawing interest for a potential controlling stake here.
Yes, you and I like Starbucks, so shares are also edging higher by nearly 3%. So China is the second biggest market of Starbucks, and Bloomberg reported in May that it is exploring potential review of its company. So now Starbucks is in the process of reviewing those and really shortlisting candidates for a next round of bidding. And this isn't really Starbucks' preferred option. I think that's important to note because they preferred a minority stake that will help them grow their business. But now here we are. And Starbucks really has been struggling in China, and they've tried to cater to local tastes. So they've slashed tea prices. They've made zero options for coffee. We'll see if it's working. But really, they've tried to attract more consumers there.
Zero options for coffee?
No, zero sweeteners for coffee.
Ah, okay.
Maybe I said it wrong. Did I say it wrong or you heard it wrong?
No, zero sweet. I guess like no sugar options.
No sugar options.
Bank America, Kuwait.
So Kuwait,
have they lost faith?
Yeah.
No.
That's too strong.
In 30
statement.
seconds.
Okay, so it's $1 trillion sovereign wealth fund, and they sold a $3.1 billion stake, according to people familiar with the matter again. So the sale was handled by Goldman Sachs, and they saw it's 1.5% discount to Monday's closing price. I think the most important thing here, it follows Warren Buffett's Berkshire Hathaway's retreat. So Warren Buffett was seen as a white knight, and now they sold out. And we have Kuwait Investment Authority also doing the same, and their backing goes as far as 2008. So that's really
all right. Great roundup, Isabel. That is Bloomberg's Isabel Lee. Stick with us. The opening bell is up next. We'll walk you through the action with Seema Shah. This is Bloomberg.
Progress never stops. Neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
We are just seconds away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. You're looking at futures that are pointing higher after kind of a flattish closed yesterday, 62.94 on the futures. On the cash trade, we're still about 50 points away from the all-time closing high that we hit on last Thursday. NASDAQ futures up a little bit more. Russell, the small caps, up more than 0.5% right now. You hear the opening bells. On the New York Stock Exchange, you've got Arlo ringing the opening bells, and apparently they make security cameras and the like. I should know because the stock is up 542% over the past 5 years. They've been absolutely crushing it, and that's why they deserve to ring the opening bell at the New York Stock Exchange. Meanwhile, down at the NASDAQ, Avidity is a biosciences company, and their stock is up 7% over the past 5 years, so it's better than a loss, but I think they could do better.
Yeah.
I think they could do better.
All right, so if you're listening, Avidity, Matt Miller has some opinions here. Let's stay on health, though, because we have some M&A in the sector. Merck buying UK biotech firm Verona in a $10 billion deal. Merck, as we know, is working to offset losses from that 2028 patent expiration of Keytruda, and that has really been a big overhang for the stock. You can see Merck is actually up a little bit right now, Matt Miller, about 1.6%. Verona obviously is flying, but Merck down about 33% over the past year, which is a big loss.
It is a big loss, but it looks like investors are behind this acquisition. Today, we're also watching copper-related stocks. Obviously, after President Trump says the tariff could go up 50%, customers are going to rush to bring in copper now. You can see Freeport-McMoRan, the first name that comes to mind, up about 0.8%, so a gainer there. The smaller, I'm looking at Ivanhoe Electric, for example, which makes copper right here in the United States. It's a small company, just about $1 billion, but it was up 5% yesterday, another 3% today. Equity volatility in general is poised to pick up in coming months. Goldman Sachs strategist led by Christian Müller-Glissman right, that, quote, a deterioration in tariff discussions remains a key risk, but fiscal concerns in the U.S. or U.K., potential French elections, and geopolitical tensions could also drive more volatility. Let's bring in Principal Asset Management Chief Global Strategist Seema Shah. And obviously, I don't care about the UK or France, Seema. Don't even know where they are. But the U.S. markets could see more volatility as these tariffs continue to be dragged out, right? August 1st is now the deadline, no longer July 9th. And the president says copper tariffs could come in a year and a half.
Yeah, and I don't think that even the 1st of August is going to be the end of the story. I mean, ultimately, you know, if you look back through history, trade deals take a long time to take place. Even whatever is announced on August the 1st, there's still going to be a long way after that. So in that period, there's always going to be the potential for resumption of hostilities, and it's going to continue to be a negotiating tool. So from our perspective, tariff noise, that's something which becomes a permanent feature of the economic backdrop. It's really whether or not the market's going to continue to take notice of it. But certainly in the next month or so, given where equities are sitting today, there is some vulnerability in that near term.
Is there, though? Let's talk about that a little bit more, because you get these headlines out from, of course, President Trump, especially in yesterday's cabinet meeting. It just felt like a grab bag of different industries that were being targeted, from pharma to copper, et cetera. And it just feels like there's not too much reaction, at least in the overall benchmarks anymore, like there might have been a couple of months ago even.
Yeah, that's absolutely right. And I think one of the things is, to your point, is the way that it was always almost announced was a bit off the cuff. There's absolutely no details either. So I think the market is also looking at that. But at the same time, I think one of the factors that I think markets are considering is that when you're thinking about copper, 50% tariff could be fairly negative for the US economy. So is President Trump genuinely going to go ahead with that kind of number? I think it's fair that the market is questioning it and saying, well, look, in the past, every time that there's been a really meaningful threat to the economy, he has taken a step back. So potentially this is a negotiating tool.
I kid, Seema, about not knowing where France is. Obviously, I've lived in Europe for many years. And those benchmark indexes have really crushed it compared to the S&P, right, which is up, 6% year to date. We're looking at, on the CAC 40, a 20% gain. On the DAX in Frankfurt, a 40% gain in, if you're a dollar investor. How much legs do you think those European index rallies have? Or do you see a reversal here? Is the U.S. now going to play catch up and you can sell some European stocks and put those profits into America?
Well, look, I think in the near term, as I said, I think there is some vulnerability for the US, given that there's so much headline risk in the next month or two. But if you're looking beyond that, I think Europe is maybe getting to the end of this current rally, starts to lose some steam. That doesn't mean it's going to be reversed. But I think you're getting to the point where investors are looking at the fundamentals, they're looking at the earnings expectations, and they're saying that there's a bit of a mismatch. And we know, of course, a lot of it is driven by these hopes around what fiscal stimulus can do for the European economy. But we do know also that typically and historically, Europe has been a bit of a disappointment when it actually comes to implementation. So we're getting to that point where European investors are saying, look, show us the money, show us actually what is going to come through, when is it going to come through, and how is it going to be spent? And then, of course, there's a potential for a further run-up. But I do think at this point in time, you're going to see a loss in steam.
Well, we should probably get some more clarity when it comes to at least the corporate picture in the next couple of weeks. Earnings season is fast approaching. The big banks kicking us off next week. And bringing back the conversation on tariffs, there was a really interesting note from Deutsche Bank yesterday, basically estimating that there could be a 2 percentage point hit to S&P 500 earnings amid all of this tariff noise that we were just speaking about. When you run your own models over there at Principal Asset Management, do you end up with something similar?
So look, we do think the S&P 500, a lot of companies are definitely exposed. I think the key question for us at the moment, though, is when does that hit come? It's not entirely clear that it is even on the doorstep, given that there's been so much front-loading of imports in the last couple of months. And even from the Fed's perspective, this is really going to be key, is when do we actually see that data materializing? When do you see an increase in prices? And at the same time, we also don't know exactly how much companies are going to be able to pass on the price increases. So I do think that as the earnings season gets started next week, it's going to be really interesting to read through that forward guidance and hear some of the narrative that these CEOs are talking about and how they're seeing any implication from adjusting supply chains.
We're looking at NVIDIA. I just want to point out to viewers here, Seema, NVIDIA shares continue to march higher. It is the biggest point gainer on the S&P 500, and it's about to hit $4 trillion in market cap. Is this, continued march higher just inevitable, Seema? It doesn't seem like there have been really any big competitors able to unseat NVIDIA, even as, the Chinese continue to try and have to eventually come close, right?
Yeah, I don't talk about single stocks, but I can talk about just generally the technology sector, obviously driven by NVIDIA here, is that has been a discussion point which continues to drive markets. It lost a bit of pace earlier in the year because of the emergence of DeepSeek, but people are really continuing to buy into that general thesis, that kind of long-term narrative that AI is going to be the key driver of all productivity growth. We haven't seen that disappear. And interestingly, technology is actually the sector which is most exposed to tariffs because it has majority of its revenue outside of the US, and yet it's continued to outperform. So I think this gives us an idea that investors are looking through a lot of the tariff noise, and they want to see that narrative continue. So tech earnings next week, as the coming weeks go, is going to be absolutely imperative in order to make sure that beyond the next month or so, you do see these continued gains in US equities.
Absolutely. It feels like the stakes just get higher when it comes to tech earnings. Seema, great to have some time with you. That is Principal Asset Management Chief Global Strategist Seema Shah. Let's get a check on some of these movers and the makeup of this market right now. You can see the S&P 500, it's in the green, and a lot of that comes back into NVIDIA. As Matt was just mentioning, we are closing in on $4 trillion for market cap. NVIDIA is your biggest points contributor to the S&P 500 right now, up about 2.2%. And that, of course, is fueling this entire market, though you do have the likes of Microsoft, Amazon, some of these other tech names certainly helping as well. You can see the S&P 500 up by about 0.6%. Let's take a look at the downside. There are more winners versus losers right now, but to the downside, you do have United Health Group down about 1.6%, Palantir, Apple, as we've been discussing, those woes continuing, and you can see that reflected in the single stock stories. But let's take a look at the sectors as well and see the makeup there. More green than red. Up at the top, you do have tech. Thank you, NVIDIA. Consumer discretionary as well. At the bottom, what's not doing too hot today, utilities, consumer staples, and energy, but small moves overall, Matt Miller.
Yeah, still so much news in this market that you can't take your eyes off it. Coming up, SpaceX is raising money and selling shares at a nearly $500 billion valuation, according to sources that have talked to us here at Bloomberg. We'll discuss that with the reporter who broke the story next. And in the next hour, we speak with Goldman Sachs Chief U.S. Equity Strategist David Kostin. He'll join us right before we get a chance to speak with the White House Council of Economic Advisors Chairman Stephen Myron. So a ton of news today and a ton of amazing guests that you don't want to miss. Keep it dialed in right here on Bloomberg Television.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Wynn Resorts getting a downgrade over at Citi. The analyst says that he sees Wynn giving up gaming market share in Macau in the near term. Shares down slightly. Next up, we have T-Mobile getting a cut to a sell over at KeyBank. The analyst over there saying that the stock's underperformance will continue and that its premium valuation is still too high. And finally, we have Microsoft getting upgraded to a buy over at Oppenheimer thanks to AI upside. The analyst says that investors should embrace Microsoft as one of the long-term AI winners in software, Matt, and shares are up about 1.4%.
All right, let's talk about those people who are investing in this technology. Executives have descended on the Allen and Company conference in Sun Valley, Idaho. They include OpenAI CEO Sam Altman. He spoke with a gaggle of reporters about explosive growth in AI and tech.
I am a believer in technology and science and economic growth, and sort of, I think that I'm all for offering great services, and I'm all for figuring out ways to make capitalism super inclusive. But I think part of the thing has got to be we drive the country towards very significant economic growth.
The more I see those glasses, the more I want my own pair. Altman spoke after a Bloomberg scoop that SpaceX is discussing plans to raise money and sell insider shares in a deal that would value the company at $400 billion. That would make it the most valuable startup in the world. Bloomberg Tech co-host Ed Ludlow broke that story. He joins us now from Sun Valley. So first, on the SpaceX sale, give us the details, Ed.
Sure. Yeah, it's a mechanism that they've used historically, which is concurrently a very small primary, selling a small amount of fresh equity to set price and therefore valuation. But the main thing is the tender, secondary, right? Give employees liquidity, allow early investors to have some liquidity as well. And it's a big moment. There's been a lot of tension between Elon Musk and the president. SpaceX has great regulatory exposure as well as a lot of business exposure to the United States government and various defense apparatus. But it shows continued growth, both on the launch business and on Starlink as well.
I do just want to quickly mention NVIDIA. We were talking about it last block. Its rise continues, and it actually now becomes the first company to reach $4 trillion in market cap. So NVIDIA ascendant this morning, and really for the past couple of years, we'll continue to keep an eye on that. But when it comes to SpaceX, part of this rise in valuation, Ed, comes back to Starlink. So talk to us a little bit about what the state of play is there, because that has also come under scrutiny.
Yeah, I mean, over time, the proportion has shifted, right? Starlink becomes more than 50% of revenue. It's higher margin business. You know, the business of sending rockets into orbit, regardless of the payload, is never going to be a big cash cow. And SpaceX increasingly facing competition, Project Kuiper from Amazon, but that's where there's a lot of hope. You know, SpaceX, like many of Elon Musk's companies, it's so hard to get into. You have the biggest private growth equity names, largest venture capital firms, other technology companies, Elon Musk's close confidants and friends, other sovereigns. But the hope is that in the longer term, the Starlink bit will be spun off. There'll be either some kind of listing or opportunity for a broader investor base to participate. And that's part of the story here around the valuation, too.
Ed, I can't look away from NVIDIA here. I mean, more than $4 trillion in market cap. I will never forget when you were on air and Apple crossed the $3 trillion mark. I have that, phrase ringing in my ears all the time when I think about this climb in the value of artificial intelligence companies. And in a sense, they've left Apple in the dust, right? I know we use Apple devices for the OpenAI app. But Apple hasn't made any moves, really any big moves here. Dan Ives was out with a note this morning saying they should buy Perplexity. What's your thought?
I saw that. Yeah, I mean, what's so astonishing is that Jensen Huang's not here, right, in Sun Valley, but all of his biggest customers are. Andy Jassy of AWS, Sam Altman, Satya Nadella, not just a customer, but obviously an investor and partner. And what they all have in common is that they've made continued commitments to not just big picture expand data center capacity, but NVIDIA has this commitment to bring out a new generation of GPU annually. And so you have two things happening, a broader expansion of capacity where NVIDIA holds a monopoly more than 70% of the market, but also a refresh, a technology cycle that's gone from being multi-year to annual, which is astonishing. And people rely on that technology as a bedrock of what's happening. On the Perplexity thing, it's not a deal that I've been hearing about here at Sun Valley, but it's been talked about for a little while. We had Perplexity's chief business officer on the show last week, I believe, and we asked him point blank, and he wouldn't comment, but said, you know, he wouldn't be doing his job if he wasn't talking to everyone. The ecosystem on the operating system side is really changing, but NVIDIA 4 trillion. Yeah, cool moment. It's weird not to be in the studio for it. But you guys did it. Congrats.
You're in front of a mountain, which is also pretty good. NVIDIA shares up about 2.5% right now, eclipsing $4 trillion. And we had Ed Ludlow right here with us. You can catch more of Bloomberg Tech co-host Ed Ludlow at 11 a.m. Wall Street time right here on Bloomberg TV. And we didn't even get to this meeting that could be happening between Sam Altman and Mark Zuckerberg. I know we talked a little bit about it, but not enough. We've been having so much fun with this story.
Yeah, I mean, it will be interesting, unlikely in front of cameras, right? So we're not going to see that meeting. No. And also, who knows if they're going to talk to each other in an amicable way?
That's
Are they
true.
going to be angry with each other?
Fisticuffs, perhaps?
I doubt that is going to happen.
I don't think so either. It would be nice if we could get an official readout like they were presidents of a country, but we'll continue to follow that story. And up next, we're going to talk about airplanes because Boeing hits an 18-month high for jet deliveries. More on Boeing shares and the other airlines, or rather the airlines in general, next. This is Open Interest.
Welcome to the second episode of the Abu Dhabi Advantage series. According to the 2024 Global Startup Ecosystem Report, Abu Dhabi has the fastest growing ecosystem in the Middle East and North Africa region.
The reason why we came to Abu Dhabi is the progressive regulatory landscape that's available for companies. So for example, they have a concept of sandboxing, which they actually help you develop the regulatory plan and process for companies, especially in biotech. And that for us was really important, along with timing and speed.
Well, U.S. plane maker Boeing delivered 70 aircrafts in June, and that is the most in 18 months thanks to renewed U.S. jet exports to China. For more analysis on Boeing and the overall airline sector ahead of earnings, we're joined by Savi Sith. She is Managing Director for Airlines over at Raymond James. It's great to have you with us. Let's start with Boeing because there's obviously a lot underway when it comes to Boeing and their turnaround efforts, but there's also an element of trade policy here, and it seems like for now those winds are blowing in Boeing's favor.
Thanks for having me, Katie. You're exactly right. It's it's great to see Boeing kind of turning around things and really showing improvement here in 2025. There is a lot of kind of uncertainty around the tariffs, and where components are made, and hopefully we'll kind of stick to the policy that was there before, which is that kind of global aviation supply is kind of tariff-free. But from an airline perspective, what we've been hearing is kind of Boeing has been delivering on time relative to new schedules and sometimes even faster, which is encouraging after several years of delays and mishaps. So, overall, a good setup here.
If, the airlines that you cover, Savi, for example, Delta, which announces earnings tomorrow, they use Boeing. They're never going to switch over to Airbus, or have they been doing that?
Thanks, but if you look at Delta, they fly both operate both Boeing and Airbus aircraft. So the the largest carriers, American, Delta, and United, they fly both types. Southwest is another big carrier in the U.S. They're solely Boeing. So, it's in their interest to kind of see a successful Boeing, but also have a kind of a tariff-free environment overall.
And focusing more specifically, of course, on the airlines, we got Delta kicking us off tomorrow. It just feels like demand hasn't been there. It hasn't returned to really robust levels. Occasionally we get these bursts of optimism and you see shares pop, and then we go right back to this sort of sideways chop that we've had for the past couple of years. Are you expecting something different here, or maybe more of the same?
Right now, we're seeing just more of the same, unfortunately, Katie, because, if you look at, you're quite right. You're seeing some, green shoots that maybe we'll see demand at least progressing closer to where it was at the end of last year, or early this year. But then some headlines will hit and you'll see a reversal again. What we'd be looking for, at least post-summer is there a change in corporate travel behavior? If we have more clarity around government spending, how stimulus is working, how tariffs end up, is there more comfort or certainty in for some of that corporate travel to come back? So that's what we'll be looking for. But right now, there's no change that we can discern.
All right, Savi, great having you on the program. Thanks for joining us. Savi Sit there of Raymond James talking to us about airlines after Boeing deliveries came out, and tomorrow we get earnings from Delta. Now, NVIDIA is really in our focus. It is the first ever $4 trillion company. You're here for an historic moment as the company crosses over that $4 trillion mark. It is, of course, the most valuable company in the entire world, and we're going to continue to focus on it. Coming up in the next hour, Goldman Sachs chief U.S. equity strategist joins us, David Costin, as well as White House Council of Economic Advisors Chair Stephen Myron. We are 30 minutes into the trading day. You can see markets are up across the board with the S&P 500 at 62.65. This is Open Interest. I'm Matt Miller.
And I'm Shanali Basak. We have a lot going on in this show. And, of course, we're going to hear from Wall Street. We're going to hear from the administration. We're going to make sense of it all for you.
Yeah, there's an absolute ton of news. So many single stock stories and so many stories in your wheelhouse about hedge funds and private equity. So
deals.
Yes.
Anyway, it's coming up. President Trump escalates his trade rhetoric and threatens more tariffs on copper and pharmaceuticals.
From Merck's $10 billion bid to Meta's bet on AI glasses, that's $3.5 billion. We've got a roundup of today's big deals.
And pledging loyalty. Goldman Sachs plans to ask junior bankers to confirm every 3 months that they have not accepted jobs elsewhere.
We begin, though, with trade tensions. President Trump now says he will push forward with his tariff regime, and there will be no more extensions, just one day after hinting that his August 1st deadline wasn't so firm. The president turns his attention then to two very specific industries.
I believe the tariff on copper, we're going to make it 50%. We'll be announcing something very soon on pharmaceuticals. We're going to give people about a year and a half to come in, and after that they're going to be tariffed if they have to bring the pharmaceuticals into the country, the drugs and other things into the country. They're going to be tariffed at a very, very high rate, like 200%.
Let's get the state of play from Bloomberg's Washington correspondent Tyler Kendall. So, Tyler, on the one hand, it looks like the August 1st deadline will be fairly firm for countries, and then the industry-specific tariffs or product-specific tariffs will be less so.
Yeah. Hey, Matt. And it's interesting because these two different tariffs, they are enacted under different provisions, but they've really become intertwined in the negotiations that we're seeing moving forward here when it does come to these expected tariff letters that could be coming more later today. President Trump had previewed that there could be 2 waves of letters today, with a minimum of 7 countries receiving them this morning, and then a second batch coming in the afternoon, as he doubles down that this really is the last chance for these countries to negotiate. The president had told reporters yesterday that we could expect some of these levies to reach up to 60 or 70%. He didn't give specifics beyond that, but of course that would be significantly higher than some of the marginal differences that we've seen so far outlined in these letters compared to the April 2nd rates. Interesting enough, he told us that one of the trading partners to look out for a letter here is the European Union. And that brings us back to the top of the discussion about the sector-specific tariffs, because it's our understanding that they are nearing a technical agreement in principle, but that the European Union is trying to find those exemptions and carve-outs when it comes to sector-specific tariffs, like autos, for example. But as this threat really does ramp up about the future of copper and pharmaceutical tariffs, that's just going to complicate the negotiations further as our trading partners rush to get a deal done by that August 1st deadline.
Tyler, we thank you so very much for keeping an eye on all of it for us. That is Bloomberg's Tyler Kendall. We're now going to bring in David Kostin. He's Goldman Sachs' chief U.S. equity strategist on the latest price target increase for the S&P 500. Because, of course, David, really interesting here. This is by far not the first time you've done this year. At what point do tariffs become problematic for you?
Well, the idea of tariffs are baked into our forecast right now. We're looking for earnings growth this year of around 7% and earnings growth in 2026 also of around 7%. And investors are now starting to turn their attention into next year's earnings. I know we're only early part of July of 2025, but the investment analysis looks into next year and discounts that back. So the idea of tariffs, we're assuming somewhere in the mid-teens, likely to be the final level. The effective rate for tariffs last year, as you know, was around 3%. It's already up in the low double digits right now. But the real insight will probably be later this year when we'll have sort of a run rate level of tariffs. But from our perspective, the market investors are sort of thinking about the mid-level of mid-teens, and that's probably what's going to support an earnings growth of 7%, and that's why the market moves higher.
Companies seem to have, Nir Kaysar wrote for us at Bloomberg Opinion, really fat margins right now, so they can absorb, to some extent, these tariffs.
I want to think about it the following way. In the last 30 years, margins have gone from 5% to 12%. That's net margins of the S&P 500, 5 to 12. What are the driving factors of that? What are the building blocks? Lower cost of goods sold, lower COGS, about 5 percentage points of that improvement in margins comes from there. Lower tax rates, another reason. Lower interest expense. Those are the reasons why margins have moved higher. And so we look out in the next couple of years, tariffs are a way of increasing the cost of goods sold. That's a downward pressure, likely to be a downward pressure on margins. Some of the debt that's rolling over for some companies is actually rolling over to a higher level. And so, Matt, the way you want to think about this is the tariffs are a downward pressure, and then who is going to pay for those tariffs? Is that going to be the suppliers? Is that going to be the consumer? Who's going to pay for that?
All right, David, you stick with us here. I want to now bring in our Bloomberg TV and radio audiences worldwide. We're going to simulcast this. Joining us now is White House Council of Economic Advisors Chairman Stephen Myron. Stephen, thanks very much for joining us. We were just listening to David Kostin of Goldman Sachs giving an optimistic view of the stock market and the way companies are dealing with tariffs. And I wonder how you think about the uncertainty that this creates. You definitely must have calculated that in coming up with this strategy. And if we're going to see an end to that uncertainty come August 1st.
Good morning. Thanks for having me. Look, I do see the uncertainty starting to reduce in the near term. Part of the benefit of uncertainty is it gives us leverage in negotiations, right? Like the president knows how to extract concessions from our trading partners, and he has been very successfully doing so. Now, as what you've seen with a number of these letters is there's some countries that haven't made the concessions that the United States requires, and as a result of the decades of accumulated trade deficits, the president has decided that tariff rates should ratchet back up for those countries on effective August 1st, and I expect that to happen.
I want to talk more about the sectoral tariffs, the Section 232. You look at copper just over the last 24 hours and the price increase you've seen in copper alone. This is a critical input for data centers, for power grids, for industrial machinery. And as the administration looks to bring more manufacturing onshore, how isn't it the case that a 50% tariff would impact some of those other efforts to otherwise power the economy?
So you have to differentiate between changes in relative prices and changes in the general price level. And when you target a specific good with a tariff like copper or some other specific good, you're going to get relative price changes, and that's totally expected. But that doesn't mean that there's an increase in the general price level, by which we mean inflation, because there are lots of thousands of products and services that go into the general price level, and it's an average, a weighted average across all of those. And we just published research yesterday showing that there has been no tariff-induced inflation in a general price level sense since the tariffs began being implemented in January. Quite to the contrary of all of the Cassandras that were shouting that it was going to be extremely inflationary. There's just no evidence of that thus far, just
Stephen,
like in 2018, 2019. Yeah.
Listen, I read the research, and we'll get back to it, but on copper, I want to read this note from Jefferies. They say that the U.S. does not have nearly enough mine smelter refinery capacity to be self-sufficient in copper. So then why target it?
Well, we need more of it. We need more of it produced domestically. There are certain critical minerals, of which copper is one, that you just absolutely need if you're going to have a manufacturing sector. And having a manufacturing sector is important, not just economically, because it tends to be a high capital, high productivity field with good paying jobs, but also for national security. You cannot defend yourselves if you do not have a robust manufacturing sector, and critical minerals like copper are essential to that. So will we be able to corner a market in copper? Absolutely not. But can we make more than we currently do? Yes.
So how long will that take? I mean, for example, when will these copper tariffs go into effect? Or is this just a stick rather than a carrot that you use to try and motivate the industry?
No, well, the president said we're going to do copper tariffs, and I think the president, and I think the president follows through on his promises. So I would expect them to happen. I don't have a date for that happening. Yeah. Well, I don't have a date for that happening. That process is underway.
All right. I want to ask also about the first point that you made, using tariffs not necessarily as a revenue raiser, but as leverage in discussions. I've watched Japan tariff U.S. automakers for decades now, and they refuse to back down. Are you going to be able to extract that kind of concession from such a stubborn economy?
Look, I think that the president is one of the best negotiators in history. I mean, he's spent decades negotiating deals across every field, from commercial real estate to international trade. And I have no doubt that he can negotiate successfully now too. But in order to negotiate successfully, other countries have to know that you're serious and that you're willing to do what it takes to get there. And that's what these letters show, that we are absolutely serious. So I hope that a country like Japan comes to its senses and does make the concessions they need, because it'll be better for them if they do.
Stephen, I do want to go back to your report, and I do appreciate the reports that have been coming out of the Council of Economic Advisors. I have been reading all of it. On the most recent report on the imported goods inflation, what do you say to the people that are looking at the impact of energy prices? Because if you subtract petroleum, you're not getting the same impact. In fact, you're seeing the price of goods rising in many categories that matter to American households, like electrical equipment and appliances.
Yeah, so you're right to flag that energy prices have come down and that we got to the lowest price at the pump since 2021, I think. And that's been a huge advantage to American consumers and a huge advantage to the American economy. It does drive the overall, some of the overall indices in the inflation data. But even if you take energy out and you look at core goods, as we do in our paper, or at durables, you still see the same wedge. No matter how you slice the different goods data in the inflation data, there's a consistent roughly 50 to 60 basis point wedge between the price increases in domestically produced, in overall goods versus the price increases in imported goods alone. And when you annualize that 50 basis point wedge, obviously it comes to a bit more than a percentage point at an annualized rate. And so when you slice things like taking out energy or just looking at durables or whatever, you end up with different levels, but the wedge between overall goods and imported goods remains. So the conclusion continues to hold.
So I also want to ask about the central bank here. The president himself has been very, very vocal for the desire for lower rates. He has said just recently on Truth Social that 3 points is too high. And he's talking about the interest costs that are embedded with higher interest rates, which, of course, is a good point when you do have interest costs about to reach $1 trillion or more pretty soon. But at the same time, he has been very critical of the Fed. I want to read you this note from Neil Dutta over at Renaissance Macro. He's basically saying here that the pressure that the president is putting on the Fed is making it so that any future nominee has to be beholden to what the president is saying. What Neil Dutta said is Trump has created a litmus test for his Fed nominee. They have to agree to cut rates. If Trump picks someone close to his orbit, that person will look like a complete toady, and I'm quoting the research, and have a limited ability to persuade colleagues to a dovish position. At some point here, is the president's weighing in on central bank policy counterproductive for what should otherwise have been an independent central bank?
Thanks. So, look, I'm a huge fan of Neil, and I get along great, but I don't agree on this point. I don't think that at the end of the day anything matters but what the policy rate is. I think, sort of sitting around talking about, about optics and committee, sort of internal committee discussions doesn't really matter. What matters is what the policy rate is and what markets expect the policy rate to be. And if they expect the policy rate to be better for the economy, then we'll have better economic outcomes, and markets will welcome that. If the policy rate is set in a way that's not better for the economy, then we'll have worse economic outcomes, and markets will reflect that. I think the rest of it is just chatter. What matters is policy being set well, or is it being set poorly?
Stephen, can I ask about just the basics of raising revenue? What do you expect from tariff revenue, say, over the next 3 or 4 years, since that's what's left in this term? And what about golden visa revenue? I heard Howard Lutnick saying that you've got 75,000 applicants or queries. And at $5 million apiece, that would be like $375 billion, massive amounts of revenue. If you could, can you repeat that every year and bring in like at least $250 billion in revenue every year from selling visas?
Thanks. So I expect the tariff revenue to be substantial. And in the research we put out about the deficit implications of the One Big Beautiful Bill and the rest of the administration's policies, tariff revenue played a substantial role in thinking about where the deficit would go in future years. We had about $3 trillion over a decade from it, which works out to obviously about $300 billion a year. And that's pretty close to where CBO ended up to when CBO got around to scoring it. So that's a number that I think is a reasonable baseline expectation. Given tariff rates are going a little bit higher now, the number might actually be a bit higher than that. So, I think it's such a fantastic thing to raise money from tariffs that are ultimately, the incidence of which is ultimately borne by the tariffed country, and use that money to finance lower marginal rates in American families and American firms to encourage more investment and more work here and encourage reshoring. I think that's just a fantastic common sense policy combination. With respect to the golden visas, I mean, look, I think that Howard has enormous demand for these things. He's created an amazing product. Howard and the president have created an amazing product that has attracted enormous amounts of interest from foreigners abroad, and I think we're going to see that huge demand materialize. However, I think you're right to point out, I don't expect that demand to reproduce every single year. It's not going to replicate every single year. I think you'll see a big demand up front.
All right. Really interesting stuff, Stephen. Appreciate your time. White House Council of Economic Advisors Chairman Stephen Miron. Now we are back here with David Kostin, Goldman Sachs Chief U.S. Equity Strategist. I love the golden visas revenue idea, right? It's just so tantalizing to imagine getting $350 billion a year, but, maybe that doesn't hold up. What do you think about the effects of One Big Beautiful Bill? Now that we have it, and Stephen was obviously a huge part of creating that legislation, now that we have that certainty, and now that investors can calculate, put it into their models, is it a good thing?
Well, I think the clarity, as you just referenced, is really the important thing for portfolio managers and for corporations. Corporate executives thinking about capital spending decisions, dividend policies, things like that, all are enhanced when they have some clarity on what the policies are likely to be. So in that regard, the fact that it was passed means we can look forward and see what are some of the fundamentals. And the idea the economy is decelerating but still growing is an important backdrop. And the idea that the Fed is likely to be cutting interest rates 3 times, the Goldman Sachs economics forecast, 3 times starting in September, twice next year. That is an environment where bond yields are likely to also be lower. 10-year Treasury yields probably around the 4.2%. And that supports our forecast of around 22 times multiple for the S&P 500. So that valuation, which is current today, we think forward earnings growth 7%. That lifts the S&P 500, in our view, to 6,600 by the end of this year, 6,900, 6,900 by middle of 2026, or next 12 months. That's the general backdrop. Again, the clarity on policy is important. And now investors have moved beyond sort of this year, really beyond the tariff discussions. The view is it'll be eventually resolved. And what's the general thrust of business?
You could make an argument that some of the market has already been looking beyond some of the current policies, trying to feel the impact of deregulation, lighter regulation. KBW Bank Index now up more than 12%. It's almost Super Bowl, aka bank earnings next week. And so that'll kick off. This earnings season will be really interesting to watch. Every single bank except one in the KBW Bank Index is up on the year. Have we seen the best it's going to get?
I think one important aspect to think about, we've had an incredible 25% rally in the last 90 days. A 25% rally in the S&P 500. It is a really, really narrow breadth market. It's really led by some of the largest companies in the market. That's fine. But the idea of the median stock, the typical company, is down 11%, 11% lower than its 52-week high. If you look at the mid-cap stocks, you look at the Russell 2000, these stocks are down basically 10%, or they're trading 10% lower than their on the 52-week high. As a consequence of that, the idea of some opportunities in these other sectors are where we are focusing our discussions with portfolio managers. The alternative within the financial sector, banks have had a terrific rally, as you just referenced, a lot of dividend increases once the CCAR results came out. And so what are some of the areas within the financial community that have lagged relative to our model? And the alternative asset managers are certainly one category that we focus on.
What do you think about the Fed path? As you pointed out, people are already looking to 2026, right? And at that point, President Trump is going to be able to put very likely a yes man, right? Someone who wants to cut rates dramatically in the chair. Do you expect that person to be able to push those cuts through? I mean, are you looking at 3 percentage points cut in 2026?
Well, what matters more for the stock market is real interest rates, real 10-year bond yields. So you think of nominal yields, we're looking at something in the vicinity of 4.25%, which is supportive of a valuation, as I indicated, around 22 times forward multiple. And that is the area that investors in the equity market are probably more focused on than specifically the path of the Fed policy. Now, our baseline forecast is you're going to get, because inflation is going to come lower, the economy is going to still grow, and the Fed has that capacity to be lowering rates. So that's the general path that we're anticipating, and that supports the market generally moving in a positive direction at this juncture.
So I'm going to ask our producers to pull up a chart, #BTV4400. This is a Bloomberg Intelligence analysis of the top 20 or so firms that have benefited most from tariffs and the bottom most impacted, like the worst performers, the ones that are most impacted by tariffs. The divergence is real. There has been a bounce back from the bottom of April. However, the best performers have been up almost 20%. The worst performers are still down almost 5%. How does Goldman think about this in baskets? What does well, and do the ones that have not performed well, do they continue to lag into next year?
Well, the idea of margins is at the core of investor discussions right now that we have, which is who's going to pay for those margins? Is that going to be the supplier? Is that going to be the corporation absorbing them? Is that going to be the consumer at the end of the day paying for that? And historically speaking, it's the consumer that ends up absorbing much of that cost. And now a lot of companies advanced their inventory at the beginning, so that makes the analysis a little bit more complicated. When you look at the share prices that you just showed in your graph, that could be complicated by the idea of this is how the share prices are performing. What about the fundamentals? And we're going to kick off next week on the 15th of July with all the bank earnings. And the next six weeks or so, we'll have much more clarity in the question of how is it that companies are dealing with these tariffs. Remember, the tariffs only partially were applied during the second quarter. So the second quarter still is uncertain. Now it's been pushed out in many cases really until maybe perhaps August 1st. So there's still a transition process here. But in terms of those stocks, there's certainly a lot of questions as to who's going to pay for the tariffs. And our view generally is the consumer. It's going to be ultimately passed on to the consumer.
You were here for an historic event, David. NVIDIA passed $4 trillion in market cap. We've fallen back a little bit below that, but we're there. And we've seen this company and this industry power the U.S. stock market higher for 3 years now in a row. How much more room is left for this gold rush to continue? I mean, where do you think we are if you were to compared AI opportunity to a baseball game. In what inning are we right now?
Well, let's think about that in baseball game. There's sort of phases of that. We think about phase 1, 2, 3, and 4. NVIDIA is absolutely in phase 1. We'll call that, the early innings that are necessary in order to build out the infrastructure. That's the leading edge of the infrastructure. But then you have the utility companies, you have other semiconductor companies, you have some of the hardware companies. That's sort of the second phase on the infrastructure. Now, where we are, I would say, is we're 2.5 years. November of 2022 is when ChatGPT was introduced. We're 2.5 years in. We'll say perhaps that whole transition process is maybe 5 years. So we're sort of halfway. First, to answer your question, maybe we're halfway through one scenario. And so you've gone from the leading edge, NVIDIA, you've had the infrastructure, now you have the applications. And most companies, when we talk to most companies and ask how is it that they're using AI, they're still looking for getting their data codified in a way that can allow the AI, generative AI, perhaps to make them more efficient. So that's the third phase. And the fourth phase is what's the long-term implications for corporates. And so another way of sort of summarizing this is the transmission mechanism for AI through the margin channel, better margins, more efficiency, or is it through the revenue channel? Is that companies can boost their output and get better sales? And there are different companies that are going to benefit or be different ways in which they can benefit. And so this is one of the things that I find most surprising is that only half the companies in the S&P 500 chose to discuss AI on their quarterly conference calls. Only half. The other half chose to, we're mute on the subject.
David, we got to leave it there. We're hitting a hard break. That is David Kostin of Goldman Sachs. Know you're on the road a lot, so appreciate you joining us here in studio. Stick with us. Markets still near session highs of the day. This is Bloomberg.
Let's get a check on the stock market right now using the move screen. I think this is the most dynamic way to look at an index, in this case the S&P. You can see we're off our session highs now, but still up on the day with the breadth about 3-2. 283 stocks rising, 218 are falling. NVIDIA adding the most points right now, almost 10 points with a 2% gain. It eclipsed a $4 trillion market cap, but has now under that a little bit. I'm going to take a look now at the sectors. You can see communication services. These are the hyperscalers as well as IT. These are the biggest gainers as we watch the Allen & Co. conference in Sun Valley, Idaho. Coming up, President Trump upending the global copper market. We'll take a look at that with John Wobensmith of Genco. President Donald Trump sending the copper market into turmoil. He announced a 50% tariff on copper imports, which immediately caused a record spike in New York futures and a drop in the global benchmark. This is the intraday trade today. It would have looked very differently yesterday. Companies across the world are racing to get copper aboard ships before the tariffs kick in. Joining us now is someone who owns a lot of those ships. John Wobensmith is the CEO of Genco. They own 42 dry bulk vessels around the world. And John, we were just talking, you have ships that bring back in one fell swoop 55,000 metric tons of copper from Chile. Are those in strong demand right now?
Copper in general is in strong demand. And yeah, there's about 1 million tons that are imported a year from Chile into the U.S. And I will say it was a little surprising to see a tariff put on copper. But when you start to think about it a little bit more, 25% of what the U.S. uses is actually produced here. And there is a brand new mine that is sponsored by Rio Tinto in Arizona that just got regulatory approval. So you have to wonder if there are some other pieces being moved around here.
That is interesting. But you look at also the amount that we import. You mentioned Chile. The other place that Chile exports a lot to is to China.
Yes.
How do these routes change? How does the equation for trade change if the U.S. is putting a 50% tariff on copper imports and China is not?
Yeah, so China is really interesting. They clearly, as you said, they import from China or from Chile. But they also have mining projects, particularly in the Congo, that are copper focused. So there are alternative sources for China. And it's one of the things China has been doing over the last 5 years in particular, and that is investing in other mining projects, particularly in West Africa, bauxite, iron ore, and then the copper that I mentioned in the Congo.
These tariffs, both the country tariffs and sectoral tariffs, have they been great for your business because of people pulling demand forward?
There's definitely been demand forward on soybeans, particularly out of Brazil. And we all know that the Chinese have gotten very close with Brazil, going both ways, but soybeans in particular. And so what we've seen is U.S. soybeans down 35% for this time of year. Now, we are not in peak season. Peak season really starts in September, and so that will tell the tale. But I do find it interesting, the last trade negotiations during the previous Trump administration, when they settled with China, they had a per ton, or tons of soybeans and ag products that needed to be moved out of the U.S. That didn't happen in this negotiation. As you know, it was more about rare earths than actual agriculture. So remains to be seen.
You tend to see things before the broader American public does, just the way that things are being brought into the country. Now, where else are you seeing that front loading? Where do you begin to get worried about inflation, if at all, with certain types of goods?
And where are things slowing down?
Yeah, so it's interesting. Not our business, but we obviously follow a lot within shipping. And if you look at the container rates, there was a lot of front loading into the U.S., China into the U.S. So those rates were, moved up quite a bit several months ago. The opposite is happening now. So container rates, China to the U.S. have actually dropped, but they've increased in Europe. Some of that has to do with the Red Sea hostilities again, but it's also because of a lot of the front loading that happened and the scarcity of tonnage available to go to Europe.
We were talking during the break about what's going on in the Red Sea, and there's a lot of very bad stuff happening there. Crews kidnapped and essentially terrorism, right? You're avoiding that by going around. So what does that add to a shipment in terms of cost? Obviously, it's worth it in terms of safety, but...
Yeah, look, it probably adds 10 days, and we build it into our freight model and our freight pricing. It's very upsetting what's happening now, because I think a lot of people felt that tensions were cooling down. Though we haven't put our ships through there since December of 23. That's when we made the decision not to go through there. But there have been 2 very recent attacks on dry bulk vessels. Fortunately, not ours. Again, we're not going through there. But it seems to be getting more lethal and more dangerous, because we're actually now having crew members, unfortunately, being killed. And it needs to be solved. And
what's the answer to that, John? I mean, we have already launched a ton of attacks on the Houthis, right? Everybody got to read it in the Signal chat.
Yeah.
But it doesn't seem to have solved the problem.
It doesn't. I think we need more military assets actually there and patrolling. We had that situation. We had a global force when there was piracy off the coast of Somalia. Indian, Chinese, U.S., I think we need more of a presence there. Because what the Houthis will tell you is you can go through, just don't call Israel. If you call Israel, then we're going to come after you.
Now, you mentioned you've been not going through the region since 2023, and that just goes to say there's been years of geopolitical conflict. When the broader American public is looking at the news, they're looking at kind of the worst of the worst happening. But realistically, there has been a lot of bad stuff happening for years, to the point you've been making. So what is the risk geopolitically moving forward? And perhaps how could that create inflation spikes that are unwanted, right? It wasn't long ago that we were concerned about the closure of the Strait of Hormuz.
For sure. And I think, look, that probability has dropped significantly, which is good news. But that doesn't mean it's necessarily gone away. I mean, we find out, tensions flare, on a weekly basis. So I think that's much lower probability now, but you can't rule it out. The Red Sea situation is definitely adding to freight costs on the container ship side in particular, but also to some degree in our business.
John, it's really great to get Such valuable intel from you, and really appreciate your time. John Wobensmith there is the CEO of Genco. Let's get a check right now on what's going on in these markets, because there is so much to talk about, right? In terms of single stock stories, you've got a flurry of deals, you've got potential deals, you've got share sales.
A lot going on under the surface. So yes, today the animal spirits are out to play. Even the 10-year has a little bit of a bid in it. We're going to talk about those deals that have been coming out this morning. We're going to bring in Bloomberg deals reporter Liana Baker, leads the team here in the United States. They've been breaking a lot of news. But talk to us first about perhaps what's going on with Merck. It's a really interesting move that they made with a patent cliff coming around the corner. What did you make of the price?
So there wasn't a huge premium here for a biotech, but it's a company that, for us at least, sort of came out of nowhere. It wasn't worth, this $10 billion valuation just a few months ago. But for Merck, this is a big deal. It's their biggest deal in years. They'd been sniffing around a lot of assets, so it's exciting to see them finally do something. But you mentioned the patent cliff with Keytruda, their top cancer drug, 2028. A lot of investors are watching that, and apparently this is just going to be a drop in the bucket. For Merck, it's only going to bring in $1 billion more of revenue. So while it's a step in the right direction, it's definitely not going to replace Keytruda, and we'll have to see more deal making to fill that gap.
And we mentioned this is a $10 billion deal for $1 billion in annual revenue for Verona.
Right. One of the stories we haven't talked about a lot today is the Meta investment in EssilorLuxottica. Of course, they already have been using those brands.
Ray-Bans.
What's the story? Ray-Bans, Oakleys?
So not a takeover per se, but definitely interesting to see Meta investing up to more than $3 billion in this company. We did see Google a few months ago invest in Warby Parker, a smaller investment. So all eyes are on this space. It's unclear, the exact terms of this, but it had been in the works, I think, a long time. There have been reports back in 2024 that Meta was looking at this. We're interested in Meta doing all these deals. The Scale deal a few weeks ago was also big, so they really seem focused on the future, and they're trying to invest in different companies to sort of fill out, what's next for them. And Mark Zuckerberg's in Sun Valley, apparently.
Maybe more deals where that came from. Also in Sun Valley, Ed Ludlow breaking a scoop overnight with our team. SpaceX inking a new valuation with a planned offering of insider shares being sold, $400 billion. What do you make
I
of that?
think it's even more, and it's crazy and hard for any deals person or investor to understand these valuations. I know there's a lot of attention on SpaceX, the Starlink satellites. I'm interested to see if they raise a primary round. That was mentioned in the report. That would be new money coming in. But in terms of a SpaceX IPO, what would that be worth? When would that happen? So our team is trying to figure out these sort of longer term.
And do they need it?
Right, with so much insider money, but at some point, some of these valuations, you have to ask: is it sustainable? I know it's Elon Musk, SpaceX is sending these rockets up, sometimes successfully.
We've been asking that question about Tesla for 15 years, Liana. 15 years of that's an insane valuation.
Right, but just these eye-popping numbers are definitely keeping us busy and, attracting a lot of eyeballs.
Listen, people don't sell. If you have a SpaceX share today and you're a private wealth investor, people hold on to it very, very closely. Now, if it's in public markets, Liana's point about a $400 billion valuation, could it hold up when you can get in and out as quickly? I think that there's an interesting
Can I just remind you that Tesla's worth $1 trillion? So the answer to your question, could it hold up, is yes.
Good.
100% yes. Right? Because you see that investors are willing to pay almost anything for exposure to Elon Musk, and this is just another way.
It's all in the private markets, though, so it's hard to see, this actually trading hands. I'm sure it's a great report, but it's very different than like a Merck acquisition where we could read, exactly what people are paying for that.
Great to have you on set with us, Liana. Thanks very much. Liana Baker runs our deals team. Coming up, Goldman Sachs has a new plan to help stop private equity firms from stealing its talent. They're going to make you promise, if you work there, that you haven't got a job lined up somewhere else. We're bringing the details next. This is Open Interest.
Technology is embedded in every aspect of our lives and laying the foundation for the future. From finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Drulers in Hong Kong. I'm Sherian in Tokyo. Watch Bloomberg Tech Asia. New episodes every month, only on Bloomberg Television.
And I want to now bring you some breaking news. Linda Yaccarino says she is stepping down as the CEO of X. Of course, this has been 2 years that she's been running the company. When she came in, there was a lot of questions on how she would navigate a relationship with the CEO who's known for being very, very involved. And of course, there have been a lot of changes under her tenure. We're going to bring you more in just a little bit as we know it. But of course, a big deal for X. Of course, not publicly traded, but very closely tied to the capital markets of late, as this company has been making a lot of moves with bringing on new investors. Now, it's time now for the Wall Street Beat. This is our top story of the day. Goldman Sachs plans to ask junior bankers to swear their loyalty in a bid to thwart poaching by private equity firms. Joining us now for more, broke this story, Bloomberg reporter Todd Gillespie. So we know that private equity firms have been going earlier and earlier to talent. We've heard as early as sophomore year of college. Goldman's used to this, isn't it? And I think you and I have both heard Goldman bankers say it's been a while since we've heard a private equity firm taking some of our talent. So what happened?
Yeah, well, I mean, what we know is that Goldman is now planning for their new analyst class this year to start implementing a rule where now every 3 months they have to, for conflict of interest rules, of course, tell Goldman whether they have already accepted a job offer from elsewhere, whether they've lined up a new opportunity outside the firm, which could potentially present some problems, some headaches. Maybe they're going to be working on a deal for a private equity company that they're about to join, but their bosses don't know that yet. Those are the kinds of headaches that you know, these MDs want to avoid. But obviously, they also just want to make sure that they're keeping their best talent. So at the end of the day, this is also a, you know, let's just make sure that you're in your seat for a while.
Why is it such a big deal? I mean, isn't the idea that you go to one of these analyst programs for a couple of years and then you're free to do something else? Does Goldman Sachs really want to hold these people there and develop them?
Right, David Solomon is so excited about his alumni network elsewhere.
David Solomon is very excited about his alumni network. David Solomon does boast of these boomerang hires where people go away and make big bucks in private equity, come back as partners to Goldman Sachs. He likes boasting about that in earnings calls. We all know that. But fundamentally, Matt, you know, they also want the best bankers at Goldman to stay at Goldman, and they want to know that the people they're investing in are going to be there for the long haul, and that they're going to provide the kinds of, you know, the kinds of intelligence, the kinds of networks that Goldman won over the years.
But surely, Todd, there are other ways to do that rather than having somebody swear an oath of allegiance, right? Why don't you just say, here's a pay package that's weighted heavily to later down the road?
Yeah, there are certainly ways of doing that, I'm sure. I mean, I think a lot of the banks have tried these sorts of moves over the years. There's also a limit to how many people they can promote. Obviously, each year, a lot of these young, up-and-coming talent, they want to get big bucks as fast as they possibly can, and they know that private equity is willing to pay bigger pay packets.
So, want to bring up the meme stock accounts here, because these are the ones that have pushed kind of justice for the junior bankers for the last couple of years. High Yield Harry says these big bad banks are genuinely too scared to talk to sponsors about pushing back recruiting, so they take it out on the 23-year-olds. They have been working 80-plus hours a week. Now, you know, how do you respond to that? Why don't they just... It's true, right? Didn't Apollo just come out with a note very recently about how they were going to stop poaching for the banks and stop pissing them off?
And I mean, that is one thing, but I don't think it's actually just about pissing them off, to be fair. I did speak to one banker a little while ago who told me, just a couple of months ago actually, and they were saying that you know, a lot of their own private equity clients, their sponsor clients, had told the banks, you know, look, we know we've pissed you off for a few years now. We're gonna ease off, partly because the talent we're getting from you actually isn't as good as we want it to be. Actually, it would do us better. It would serve us better if you train them up for just a little bit longer, maybe 3, 4, 5 years before we poach them, just so that you know, they've learned all the skills that they need. Because a lot of the young folk that they were getting into these PE firms just weren't at the level that they thought they were at, because they were hiring earlier and earlier and earlier, and these people didn't have the experience, hadn't proven themselves and got those skills that they really needed at PE firms.
Todd, awesome story. Instantly became the most read story on the Bloomberg terminal and has been there ever since in the #1 slot. Of course, everybody wants to read about this. Todd Gillespie covers Goldman Sachs and the banks for us. I want to get back to that breaking news now that the CEO of Twitter, now known as X, Linda Yaccarino, will be stepping down from the company after just 2 years. She said it in a tweet, doesn't give a reason. We bring in Bloomberg's Max Chafkin, who covers all things X and Elon Musk for us. Why do you think she's leaving?
Well, if you've been following the news lately, there have been quite a few reasons, I think, that have pushed Linda Yaccarino away. I should say, first of all, 2 years is a long time in Elon Musk's orbit, especially in the role she was in, kind of serving as a buffer between Elon Musk and the world of advertising. That's going to be a very difficult situation for anybody. I think most people did not expect her to last anywhere near this long. So in that sense, it's a really impressive run. And I think in certain ways, she's done a lot, right? Like they managed to, it was a very chaotic couple of years or a couple of months at the beginning of her tenure at Twitter, kind of righted the ship. The problem is you have Elon Musk sort of relentlessly, changing things up in ways that I think have been super unhelpful. Of course, and you'll remember this well, bringing back all these far-right influencers, that's the kind of thing that advertisers don't like. And just in the last couple of days, we've seen this new version of Grok that is sort of just spouting anti-Semitic, cliches and praising Hitler and so on. And if there's one thing big advertisers don't like, it is having their ads adjacent to that kind of content. So that, I think, is making her job untenable. The other thing I'll say is Elon Musk just merged X, the company formerly known as Twitter, with XAI, his AI initiative, which owns Grok. And it was always a little bit unclear what her job was going to be. It seems like this is Elon Musk's company now, not sure what Linda Yaccarino was going to do.
I've been scanning his own X account, and I don't believe he's weighed in on this yet. And that was going to be my question. With the merger of X and XAI, listen, just to run X, the handful of people who could do it wasn't that large, was it? Not with Elon Musk, if you will. Now,
well, he's running X, right?
Right.
Regardless of who he puts in place as CEO.
She had a mark.
Yeah, I mean, the thing that she was able to do, and you saw it, they brought in a handful of influencers, most prominently probably Tucker Carlson, who has developed a pretty substantial following on X, since leaving Fox News. She was sort of trying to build kind of a right-wing media platform, and I think that actually made a lot of sense. You saw that kind of reach its peak around the election. You could really feel like the energy of conservatives going there, but that really depended on Elon Musk having a, good relationship with the man in the White House, and that, of course, has changed as well. So again, it's a lot of things that I think makes the job of selling advertising hard. There's also a way in which Musk himself has undercut that business, not only by, putting all this edgy content on X, but by moving towards AI and sort of signaling that the point of this company is not to create content that you're going to sell ads against, but it's to train large language models and eventually an AI, and that is a different business altogether.
Really interesting moment, of course, and I know we're going to have more throughout the day from not Elon Musk, but also from Sam Altman's conversations at Sun Valley. What a day. Max Chafkin, thank you so very much for joining us. For more coverage on Elon Musk, don't miss the weekly Elon Inc. podcast from Bloomberg Business Week. This was one I'm going to want to listen to very, very closely. We're going to switch gears. We're going to talk about the fund management industry. Active managers, they're being forced to adopt hedge fund strategies in order to stay competitive, according to French asset manager Arkea. Joining us now for more, Bloomberg senior equity strategist Michael Masika. Hedge funds were out of favor for a while here. Now they're starting to roar back, even if they're trailing broader indices. What here is the big pitch, especially as we know the biggest of big hedge funds are paying top dollar for top talent. Can we now see an asset management industry that's doing copycat techniques with a little bit of quant genius in it?
Hi. Yes, I see the point. The thing is here, access to hedge funds is very difficult. What you had is like a lot of retail investors can't really access them. They're like a very, very high amount of money that you need to invest in them. The liquidity is not good. So, they turn to ETF, they turn to passive asset management. So here is the thing. With the regulation evolving a little bit, now you have access to funds that have daily liquidity that can protect your portfolios with what they call an overlay, which are like a bespoke derivatives. And that's new in the industry. And I think that's what's interesting here. That's the story that's interesting. It's like giving access to hedge fund style without being a hedge fund.
The thing about it, is this an acknowledgement here that this market is being driven in a large part, not just by retail investors, fine, that's a marginal buyer here, but by quantitative investment strategies? Ultimately, you're not reading the human on the other side of the room, you're reading the machine.
Yes, but what's happening is like people tend just to buy the market as it is and just like ride the gains. The problem is if you're getting into a fund or you're getting into an ETF at the wrong time, what's going on? You're going to need to wait a lot of time before you actually recoup your losses. I mean, obviously, we had a very quick V-shaped recovery recently, but that's unusual. In theory, when you have like a crisis, it can take years before you get your money back. So if you invest in strategies that are, protect your portfolios and that kind of limit the downside, then you're kind of like more confident in your investments. And you know that you can invest pretty much anytime you want.
Michael, we thank you so very much. That is Bloomberg's Michael Masika. And Matt, it's really interesting. A top story on the terminal now is about all the hedge funds making money off of merger wagers, because in the Trump administration, they're starting to pan out. Discover, Capital One, U.S. Steel, Juniper, Hess, Calanova, and a lot of money is being made in that strategy in hedge funds too right now.
Yeah, I'm still blown away by the U.S. Steel deal. But it's true. We're finally getting these deals done. And this is what the market was betting on after the November 5th election, that we would see deregulation and that, some of these combinations, purchases would be finished. Now merger arbs are cashing in.
Patience has paid. Let's go check out these markets. It's a good day.
Yeah, it is a good day if you're long these markets. We have the S&P right now gaining only about 0.2%, so well off of its highs from the early trade. 62.36 the level. I think 62.79 is the closing high from Thursday. The Nasdaq up 0.25%. Nvidia right now gaining almost 2%. It did cross that threshold, worth more than $4 trillion. Coming tomorrow, Wilbur Ross, former Commerce Secretary, joins us, as well as Julian Emanuel.
This is an iHeart podcast.
Today, we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Amy Morris. President Trump is threatening a 35% tariff on some Canadian goods to take effect August 1st. He also raised the prospect of increasing levies on most other countries. Bloomberg Treasury reporter Dan Flatley on Bloomberg Intelligence.
Trump is trying to give himself some additional leverage as these talks kind of continue. Canada, China, Mexico, Japan, others, where deals are still being worked on. And so I think we're certainly going to end up at the end of the day with a higher average tariff rate across all countries that send their goods to the U.S.
Canada's Prime Minister Mark Carney responded that Canada would continue to defend its workers and businesses. President Trump says he'll wait and see what happens.
We're going to see. It was sent yesterday. They called. I think it was fairly well received, but it's what we need. So we'll see what happens.
Now, President Trump made those comments as he was boarding Marine One. The president is heading to Texas for a first-hand look at the devastation caused by catastrophic flooding that has killed at least 120 people. The White House says Trump will visit the State Emergency Operations Center to meet with first responders and relatives of flood victims. Trump will also get a briefing from officials. Now, speaking of tariffs, sources say Delta Airlines has been stripping engines from new Airbus SE jets in Europe to use them on grounded planes in the U.S. The airline is doing this to overcome a shortage and avoid aircraft import tariffs. The engineless aircraft will remain in Europe, potentially to be sent to the U.S. at a later date without tariffs. Delta shares are now 2.5% lower. We do check markets for you all day long here at Bloomberg. The S&P 500 down 0.4%, NASDAQ down 0.2%, the Dow down 0.6%. The Russell 2000 index is down 1%. The 10-year Treasury yield at 4.4% and the 2-year yield at 3.89%. Now let's check Bitcoin. It is up 3.6%. More than $1 billion in bearish crypto bets were liquidated over the past 24 hours as Bitcoin surged to an all-time high of 118,847. And bullish signs are accumulating, including renewed ETF inflows and a congressional committee declaring next week as Crypto Week. Secretary of State Marco Rubio says a summit between President Trump and Chinese leader Xi Jinping is likely after the diplomats for the two countries met in Malaysia.
The odds are high. I think both sides want to see it happen. Obviously, we have to build the right atmosphere and the right deliverables so that a visit isn't just a visit, but it actually has some takeaways from it that are concrete.
Rubio described his sit-down with Chinese Foreign Minister Wang Yi as very constructive and positive. Beijing described the meeting as pragmatic and constructive. The State Department is firing more than 1,300 employees in line with a dramatic reorganization plan initiated by the Trump administration. Spokesperson Tammy Bruce.
This is not a matter of the individual being targeted or an individual not being right. This is about being able to be effective due to the size of the organization and to the structure of the organization.
A senior State Department official says the department is sending layoff notices to more than 1,100 civil servants and 246 foreign service officers with domestic assignments within the U.S. The cuts have been roundly criticized by current and former diplomats who say they'll weaken U.S. influence and its ability to counter existing and emerging threats abroad. FDA Commissioner Marty Makary says his agency may fast-track new drugs from pharmaceutical companies that equalize the cost of their medicines between the U.S. and other countries.
We can issue a national priority review voucher for companies that are promising to equalize the price between other OECD countries and the United States, even with other products that they currently have. And so we want to incentivize good behavior in the marketplace.
The vouchers are part of a new program announced by the FDA, and Makary says they could be used to incentivize companies to lower their drug prices in the U.S. You can catch more of that conversation with FDA Administrator Marty Makary on Bloomberg Wall Street Week. It airs tonight at 6 Eastern on Bloomberg Radio and television. One key Trump official is demanding more information from Fed Chair Jay Powell about the central bank's renovation of its headquarters in Washington. Washington. Office of Management and Budget Director Russell Vogt compared the renovation to the Palace of Versailles.
This is about the renovations that are occurring, the extent to which they are largesse. The cost that we're talking about is now $2.5 billion.
The accusations intensify scrutiny of Powell amid a broad pressure campaign for the Fed to lower interest rates. That's news when you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Charles the Bald, Charles the Fat, Ivor the Boneless, Ragnar Hairy Pants. The Middle Ages has some less than flattering names for its political figures. Sound familiar?
Now, Sleepy Joe would say the unemployment rate. Crooked Hillary, she is a crooked one.
But name-calling isn't the only medieval language seeping its way back into our politics, and that doesn't bode well for the rest of us. Consider NATO Secretary Mark Rutte's letter to Donald Trump, which Trump then happily leaked to the press. Rutte praised Trump in the sort of bombastic and extreme language that Trump himself uses. Or later in the summit, when Rutte justified Trump's use of an expletive.
They don't know what the they're doing.
By saying that sometimes daddy has to use some strong language. This all really is reminiscent of the sort of loyal addresses that subjects sent to their monarchs during the Middle Ages. These addresses could not be too extreme in their use of flattery, and yet the kings of the time took this as absolutely natural, as their due, and just wanted even stronger language, just like Trump. Iranian leadership's language over the recent bombing is yet another example. Iranians talked about the evil hand reaching into history and being covered in blood. The Iranian supreme leader talks about the little Satan, which is Israel, and the big Satan, which is the United States. Again, this is reminiscent of a world in which people thought that good was doing constant battle with evil, and in which the end of times were just round the corner. This is all a very far cry from the sort of bland, bureaucratic language that people in the past used to discuss international affairs. It'd be nice to think that all this middle-aged language is a passing fad, the result of Trump's narrow victory in the last election and the peculiar goings-on that we see in Iran, but I'm afraid it's not. What we're seeing all around the world is that the basic tenets of the Enlightenment are being reversed. We're seeing strongmen seizing control of countries, treating those countries as their private property, and seeing international affairs in terms of the war of egos. We're seeing religion once again taking a commanding role in international affairs. And we're seeing a brain-addled, short attention span public crying out for memes and nicknames rather than trying to understand the world in all of its incredible complexity. And whether we can survive all of this, especially in a world with nuclear weapons, is, I'm afraid, open to doubt.
The odds are high. I think both sides want to see it happen. Obviously, we have to build the right atmosphere and the right deliverables so that a visit isn't just a visit, but it actually has some takeaways from it that are concrete. But there's a strong desire on both sides to do it. The president wants to do it. The Chinese side wants to see it happen. President Xi said that publicly. So I think the odds are high. I don't have a date for you, but I think it's coming. It'll happen.
Neither should you. At PW.
Brazil is notably the most important. Brazil is part of the recipes, is part of the coffee people enjoy every day in the world. So having tariff for U.S. on Brazilian import coffee, of course, it means that the price of the coffee cup in Brazil has to rise quite a lot. 50% is really high tariff. So it could create a lot of inflation in our industry that's already under stress because the problem of green coffee beans that notably saw very, very much during the past 4 years.
But Giuseppe, I mean, Arabica prices are fluctuating sharply this morning. Again, is this an early, sign indicator? And if you look at the Brazilian Arabica market, can it be shipped to Italy? I mean, does it change supply chains, or is it something, or have agreements been signed like years and years ago?
No, there are not long-term agreements in this industry. So normally you can decide to buy coffee from different countries. So of course, if some tariff hits a specific country, roasters try to avoid to use a very expensive coffee. Maybe they try to ship to other coffee. But nevertheless, Brazil is so relevant in coffee industry. It counts for about 40% of the total production. And with Vietnam, they altogether counts about 55%. So not having Brazil coffee disposable means distortion in the market, restriction in the coffee availability, and so high tension on the prices of green coffee around the world.
What does it mean for Lavazza? And again, you could have this massive dislocation between future prices and also spot price.
But yeah, we try, of course, to manage quite carefully the prices of coffee. But for Europe, this is a different situation because we don't have this system of tariffs. So we can, for example, buy our coffee. We have other issues, of course, high coffee prices, U.S. regulation that acts more or less as tariff because it reduces the quantity of coffee we can buy from different countries. So it's a pretty tough environment, and I hope lawmakers have the sensitiveness to understand this.
But so it doesn't necessarily impact actually where you buy your sources. It doesn't necessarily impact your sourcing strategies, basically.
No, really not. Of course, we try to keep strictly under control the quality of our products. So despite high prices, despite this kind, for example, of difficult situation, dire straits, we keep pay a lot of attention to the quality of our recipe. Yeah. We don't accept any kind of compromise in terms of composition of our blend. This is part of the trust that we build with our customers and consumers around the world.
Do you think U.S. roasters need to start reformulating actually some of their sourcing? And so does that, again, is it a competitive advantage if tariffs aren't too hard on you coming from Europe?
Of course, the market move from one side to another one. If there are this kind of distortion in the market, we try to mitigate. But nevertheless, remember that for Lavazza, the taste of the products is very important. So we have some limits to do that. The most important things for us is to deliver to our consumer the highest possible experience in terms of coffee. So we can't modify, for example, the composition of our blends. We have some limits, and we can do, but with very, very short space. So more or less, the kind of coffee we have to buy every year is the same. If there are tariffs, of course, this means that the cost of coffee is higher. And so we have to deal with a situation of pressure again on cost, on supply chain, on negotiation with our customers. That's very, very dangerous situation, very tough.
But would you be able, given the consumer right now, would you be able to increase prices in certain markets?
We try, of course, to act very responsibly because, of course, we wanted to keep high our competitiveness, protect the customer, of course, and, of course, to try not to threat the trust relationship we have with the retailers, for example. But just to give you an idea, in 2019, the cost of coffee for Lavazza was about 6 million euros for 1 year. And nowadays, in 2024, is about 1.6 billion euros. So really a relevant shift. We can try to absorb some of cost in our balance sheet, but we also have the necessity to adjust the prices and so to have a price increase in certain geography, in certain markets.
So a disclaimer, I love coffee and I have too many espressos probably. Where do you want to expand expand? I mean, you're known for the coffee, the espresso, the capsules in certain places. Is there an area that you're looking at? I was surprised to see, for example, Ferrero looking to buy Kellogg's. Is there something that you think that you want to get into which is away from coffee?
No, we are very focused on coffee. This is our mission since 1895. The company has a specific strategy to expand in interesting geographies, as notably North America, China, and even to try to cover all possible channels where people like to have coffee. Retail, away from home, e-commerce is growing quite a lot. And vending as well is another very interesting channel. So we try to expand in all these directions, but stay very, very stuck on coffee.
Very close to coffee.
Yeah.
This is probably very good news for coffee lovers. How do you see the China market actually evolving? I mean, it's a nation of tea drinkers, but you see actually pockets, especially in urban cities, where I guess gourmet coffee is really taking up.
China is quite a very interesting potential country. Over the last 3 years, coffee consumption rose about 60%. It's a good sign. Chinese people love coffee, especially if it mixes with milk. They love a lot of recipes. And it's a high competitive market. A lot of coffee shops are active in China. We have a very interesting partnership with a Chinese partner, Yum China, with the aim of open around 1,000 coffee shops by 2028. We are about 100. We're testing our concept, but very confident that China will represent the future of the company in Asia.
But so what kind of growth are you looking at? Is it like 20% growth for coffee drinkers?
In China?
Yeah.
Oh, yeah. I think that China, the dimension of the business in China is huge. So if we consider that now is the first stage of the coffee in China, the potential of the market is exceptional. So I think one Chinese can drink one coffee per day, it means that the world of green coffee has to double or to triple. So we need to have a lot of coffee production in the producing country to satisfy such a huge demand. So very good news for producers.
Progress never stops, neither should you. At PwC,
50% tariffs on all Brazilian goods. Trump suggesting a bigger political reasoning behind the hefty tariff. We'll have more on the trade fight, where those long-promised deals are, coming up.
Also tonight, the frank conversation Secretary of State Marco Rubio had with his Russian counterpart, seeking to express the president's disappointment with Vladimir Putin over his attacks on Ukraine. We'll have more on where things stand in the war and developments out of Israel with former NATO Supreme Allied Commander and retired four-star Air Force General Philip Breedlove up ahead.
And the president's birthright citizenship executive order blocked again. The determination in court today that reinstated protections put on hold by the Supreme Court last month. And what happens next in one of the president's signature policy moves?
We've got all that, plus a Bloomberg scoop for you tonight. NVIDIA's Jensen Huang meeting with President Trump at the White House today ahead of the CEO's trip to China.
Now on the offense with global leaders as the administration issues tariff demand letters. In total, 22 letters have been delivered so far, igniting negotiations with some nations and a political standoff with others. Bloomberg's Mike Shepard and Romaine Bostick are on hand to discuss both the political and market implications of it all. We start right now with Mike Shepard here in our Washington, D.C. bureau with more. Mike, learning about this meeting between Jensen Huang and President Trump tells us a lot about where we may be going next with export controls and so forth. What is his ask for the commander-in-chief?
You know, it's unclear what his ask is. We've been able to confirm that the two men met. And what you see in private from Jensen Huang and get a sense from him is not different from what you see in public. He has argued on behalf of NVIDIA against a lot of the export restrictions that the U.S. has put, primarily against his company when it comes to selling advanced AI chips to China. And the idea for the U.S. government is one that's driven by national security motivations. They want to prevent China from taking those AI chips and putting them toward military uses, possibly. The whole dual use question that surrounds a lot of advanced technology. But Jensen's argument has been, and it's been consistent for months, that those export controls don't work, and they also risk putting his company and the U.S. and American technology at a disadvantage to Chinese competitors, especially Huawei Technologies, which is developing its own vanguard of AI chips and trying to roll them out, and perhaps trying to steal what could be U.S. market share in some other places around the world, Joe.
So NVIDIA, obviously an example of a company who is trying to navigate what is a very complicated and uncertain situation around export controls. Meanwhile, you have companies and, frankly, countries across the board trying to navigate what is a very uncertain environment when it comes to tariffs. We didn't get any new trade letters from the president today, Mike, though he has suggested more are coming, and there's no deals that we have yet in hand in addition to the ones that we already knew about.
You're right, Kelly. There's only a handful of deals that have actually been signed, sealed, and perhaps delivered, and even the details of those remain a little bit obscure and thin in the eyes of many economists who specialize in global trade and have gone through years and years of rounds of previous accords like USMCA, to just name one. What we're seeing now is this waiting period now until August 1st. And so many countries are under pressure to deliver some sort of concession to the U.S. to reach some sort of understanding with the Trump administration to avert much higher tariffs. And a great example of that, of course, is Brazil. They were hit yesterday with an eye-watering 50% level. And that came with a little bit of political topspin, as we were discussing right at the top of the show. The president of Brazil, leftist leader Luiz Inácio Lula da Silva, he has viewed what the Trump letter contained as very much a political message. And Donald Trump was singling out Brazil for a much higher rate because he thinks that Lula's predecessor, former right-wing president Jair Bolsonaro, has been treated unfairly by the Brazilian judiciary. He is now facing charges there for attempting to foment a coup. And this is all adding up to a different element altogether in trade negotiations. It's not just about economics and trade. Perhaps it's also about politics, too.
All right, Bloomberg's Mike Shepard, thank you so much, as always. Now, the president today was crediting his policies for fresh records in the stock market, posting on True Social, quote, tech stocks, industrial stocks, and NASDAQ hit all-time record highs, crypto through the roof. NVIDIA is up 47% since Trump tariffs. And joining us now for more context is Bloomberg's Romaine Bostick, live from World Headquarters in New York. Romaine, should we be characterizing this as a market that's rallying because of tariffs or in spite of them?
Probably a little bit of both, Kelly. I think the idea that Trump is at least trying to get at is that some of his policies maybe have cleared the way for this rally that we've seen. But, of course, this is a rally coming off of a huge drawdown that we saw in U.S. equity markets back in April that were also due directly to his policies. So what he's stating there is true. The S&P, yes, indeed, did close at a record high on this day. Industrial stocks, not quite at a record high, but only about a percentage point, less than a percentage point from achieving that record high. You saw that reflected today in the Dow Industrials, the Dow Transports, as well as in another index tracked in the S&P 500 that includes a lot of the airline stocks. So there is some optimism in this market, not so much that his policies are helping, but that the negative effect of those policies is not going to be as bad as some people had priced into this market just a couple of months ago.
Is this a rally that's broadening the way we tend to hear about, Romaine? I'm supposed to ask you about the broadening of the rally, the rotation into value, or is it the same 4 or 5 stocks pushing these indexes to new highs?
Pretty much the same 4 or 5 stocks, Joe. I mean, I hate to break it to you, but when you look at the big rally that we've had off of those April lows, I mean, most of those gains still are the big tech companies, your Microsofts, your Amazons, and, of course, NVIDIA. You guys were just mentioning NVIDIA a while ago with Jensen Huang apparently being seen entering into the White House ahead of his big China trip. That remains an 800-pound gorilla. in this financial market, and it remains the big part of the reason why stocks overall are at record highs. Do you want a broadening of this rally, Joe? Well, in order to get that, you need to see a lot of those smaller companies, the companies in the Russell 2000, the companies in the S&P 400 mid caps, start to post more meaningful gains when it comes to their earnings. And these are the companies that are most directly affected by a lot of Trump's policies, whether it's the direct effect from tariffs or the second order effects on economic activity. Those are the companies, and more importantly, the stocks that are still struggling. Those are the stocks that are nowhere near their record highs. So if you do get a broadening of those into those names, that's good for the market. If you don't, then maybe we can see this market range bound for a considerable time.
Really important. We're always lucky to have Bloomberg's Romain Bostic and his view from world headquarters in New York. Romain, thank you. Joining us now for more insight into the global economic impact and the market impact of these tariffs, Christopher Smart, founder, managing partner of the Arbroath Group. Christopher, it's great to have you back on Bloomberg TV and radio. What do you make of the S&P 500, the NASDAQ hitting all-time highs against the backdrop of this extreme uncertainty that we keep hearing about when it comes to trade and tariffs? Is this a market that's just grown numb to this idea, or is it the ultimate taco?
Well, Joe, good to be with you. I think, you and your colleagues have covered the taco trade inside and out for the last few weeks. I'm not sure if Trump always chickens out. I mean, you'll have to ask folks in Iran or even importers of Chinese goods, which are facing stiff tariffs right now. But it's clear that this market doesn't believe all of the posts on Truth Social that we're getting from the president, or indeed his statements about whatever tariffs are going to be coming online. I think what's interesting today compared to April 2nd or whatever Liberation Day was, it feels like many, many years ago, not many months ago, but the uncertainty around the Trump trade policy is almost as high as it was back then. We had always been hoping, I think investors that I talked to have always expected that by now we weren't going to get all of these deals that he had promised, but we'd get some sense of what parameters made sense, what qualified as a good deal in the president's mind. But drawing any lessons from the partial framework that has been concluded with the UK or the little bits and pieces we know about what's been done with Vietnam, it's really hard to know what's going to cross the finish line. And so while the negotiations continue, I think what the market is telling you is that we're going to be in this world of uncertainty. But as Romain just said, the negatives of the tariffs that are expected may not be as painful as we might have thought back in April. But we're also certainly not expecting the top lines that he's promised to follow through.
Well, not as painful, Christopher, on the inflation front either, at least not yet. You aren't seeing it reflected in higher prices or higher price data, which is why the president keeps pushing this idea that the Fed should be in a position now to cut rates. But the Fed chair, Jerome Powell, has suggested he expects the tariffs to actually start showing up this summer, potentially next week in the CPI report. Is that also your expectation?
I think we'll get the beginnings of some signs of tariffs in the inflation numbers. I mean, you have to remember that, companies have been bracing for these tariffs for a while, and they've been buying a lot of extra inventory to be able to avoid tariffs if they could. And now many of them, particularly the smaller ones that are traded on the stock exchange, are being forced to pay some of those prices. But again, it's going to be company by company and sector by sector as to which companies have been forced to push through some price increases and others that are going to still try and hold off. The other piece that's important to remember, I think, for all of our attention on tariffs, imports to the U.S. represent roughly around 13-14% of GDP, and only a smaller portion of that are covered by tariffs so far. So it's going to be visible, but not necessarily prominent.
Okay, so if we froze the game right now and actually we're stuck with all of the rates that have gone out in these letters, 25% Japan, up to 50% in Brazil, what would be the reading on inflation a year down the road?
Well, I think that's the hard thing to predict because, as the president and his team will tell you, a one-off increase in a tariff in itself is not inflationary. That's prices get adjusted, currencies adjust one way or the other. What is inflationary, I believe most economists will tell you, is the trade war, the threat of retaliation, and you get a world in which people just always expect prices to go up because of a tariff or a counter tariff or the uncertainty of a tariff. And that's what drives up expectations in the surveys. And that's what makes the Fed, I think, more nervous than a one-off. If the president were imposing these tariffs and they were fixed and we knew what they were going to be, you could probably figure out how to absorb that shock from the Fed's perspective. But it is this uncertainty, I think, that is making them more wary of cutting too quickly.
And yet the president is still suggesting that the Fed funds rate is 3 points too high. Not sure we're going to see 300 basis points and cuts materialize anytime soon. Christopher, as we consider, though, that part of what the president argues he needs the Fed to cut rates for is because our interest burden is so high, it would greatly bring down the costs and the amount of spending that we need to do on interest specifically if the rate were lower. How should we be considering that element of this as we think about the longer term fiscal health of the United States, having just passed a long term budget reconciliation bill that will have implications for years to come?
Well, I think that's the other big piece of news that you have to remember when you look at this stock market, right? You have the bill that is passed. We now know what tax rates will be for different companies. It is a marginally, I would argue, stimulative bill going into next year. And, I think there is this expectation that that is going to support economic growth, even as you get a headwind from tariffs. But I think clearly on a much longer term view, investors are going to be looking at the sustainability of the U.S. debt. It particularly gets tricky as the price of debt rises. And as you say, that's why the president is focused on bringing interest rates down. I still think, fundamentally, as long as investors believe that the U.S. economy is the most creative and dynamic in the world, people will buy our debt. But it's going to be at a probably higher cost than the president would like or than even the Fed might like.
What's the most important deal that the White House could present between now and August 1st, in your view, Christopher? Is it India, or do all roads lead back to China?
Well, I don't expect, India might get done, and that would be a good thing, although the rumors of it getting done have been going on for some time now. The biggest deal to be done is with Europe. It is, the largest investor in the United States. It is the largest economic relationship with the United States, and the uncertainty around that continues. And what's particularly difficult is that from the European side, they need to get the approval of 28 different countries. It's not just a guy sitting in the Oval Office who can sign off on one side. You really have to bring along a lot of the Europeans, and they have a diminishing tolerance, I think, from some of these threats that the president has made right now. So I think what I hear is that we're close, but that's going to be the big one from the market, from the economic perspective.
All right, Christopher Smart, founder and managing partner of the Arbroath Group. Thank you so much for joining us. And coming up, the Justice Department has opened criminal investigations into former FBI Director James Comey and former CIA Director John Brennan. We'll bring you those details. But first, Secretary of State Marco Rubio meets with Russian Foreign Minister Sergei Lavrov to discuss the war in Ukraine. We'll have more with retired Air Force General Philip Breedlove, former NATO Supreme Allied Commander Europe, next on Balance of Power on Bloomberg TV and radio.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Overcome operational constraints to focus on future growth? And unlock economic and social prosperity through environmental responsibility? With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
My deep conviction is Vladimir Putin doesn't want peace. Vladimir Putin wants Ukraine. I sense that my old running mate is coming around to recognizing Putin's real intentions here. It's in the interest of our country. It's in the interest of our allies in the region and long-term peace in Eastern Europe for us to continue to provide military support to Ukraine to put punishing sanctions on Russia until a just and lasting peace can be secured.
Former Vice President Mike Pence here on Bloomberg TV and radio earlier today, discussing the war in Ukraine and President Trump's recent tone shift around it. Joining us now on Balance of Power with his analysis, retired four-star general for the U.S. Air Force, Philip Breedlove. He's also former NATO Supreme Allied Commander Europe and a distinguished professor at the Sam Nunn School of International Affairs at Georgia Tech. General, thank you so much for being here. As we consider that we have seen a bit of a shift from President Trump, much more willing to criticize Vladimir Putin, obviously reversing the Pentagon's prior decision to pause aid for Ukraine, knowing how prone he has been to reversals in sentiment on this subject. Do you expect that it changes Putin's calculus at all, at least in the near term?
Well, first of all, thanks for having me on. We are all happy to see our president begin to truly understand and embrace the problem that Putin presents. And we're all very, very happy that the president is beginning to change his tact. Do I think it's going to change Mr. Putin? I don't. Mr. Putin does not want peace. He's not a partner in the way ahead on Ukraine. Mr. Putin wants to take Ukraine and subjugate his people, and that's all he's interested in.
General, it's great to have you here. There is reporting that American-made weapons have resumed the shipments to Ukraine after the interruption that we reported on, an interruption that was apparently not signed off by the president here. Apparently now artillery shells and mobile rocket artillery missiles are now being provided to Ukraine, but they need more than that. And I wonder, what is the most important item we can provide now? Is it Patriot missiles?
Well, Joe, I hate to disappoint you. The most important thing we can deliver right now for Ukraine is a solid, loud, proud, public, declaratory policy that says to Mr. Putin, you will not win this war. We are going to support Ukraine until you stop this senseless war. Remember, this war is completely at the creation of Mr. Putin. It is inhumane, it is illegal, and it is immoral. And so most important would be for the Western world, and especially the United States, to be very straightforward. You will not prevail in this war. After that, lots of things we can discuss on weapons. But Mr. Putin needs to know he's not going to win.
Would Congress passing and the president signing a stricter sanctions package as is currently being discussed go at least some way towards sending that message, General?
It would, and I really believe that we should continue the sanctions because they are having some effect on Russia, on the Russian people, on the Russian economy. But sanctions have never changed Mr. Putin's approach to the battlefield, and that's the most important thing we need to do now. We need to change his approach to the battlefield.
A year ago, General, and I remember hearing commentary from you at the time. There was a big debate about whether the U.S. should provide F-16 fighter jets to Ukraine. Our viewers and listeners should know that you are a fighter pilot and you flew F-16s for the better part of 20-plus years. Was it worth it in the end? Did it have an impact?
Well, first of all, yes, it does have an impact. It is important to note that we have given them no U.S. F-16s. The United States has not given Ukraine a single F-16. The U.S. okayed our allies to give Ukraine F-16s. I think it's time that we in the United States should look to some of ours that are sitting in the desert and that we should consider giving them actual U.S. F-16s.
Well, beyond the F-16s, though, General, when we think back to the pause we were discussing a moment ago, the initial concern was that the U.S. just doesn't have enough to share, frankly. Our defense industrial base is not able to produce at such a capacity that we can afford to deplete ourselves so much in the name of defending Ukraine. How do you think about that calculus, or rather providing Ukraine with the means to defend itself?
Well, Kaylee, it's a tough subject. Clearly, when we offer things to Ukraine, they are no longer available to us. But if you look at the dynamic of what the United States has done so far, we have given them our older kit. In some places, kit that we were getting rid of. And in one case, kit we were going to have to spend a lot of money to demilitarize. We have given them all of those things. And so the impact to our true fighting capacity is there, but it's not as much as it would seem because much of this kit we were phasing out to begin with.
General, how do you fight a war against an enemy that follows no rules? Ukraine is targeting military installations. Russia is targeting civilians and anything else that it can bomb.
This is a point that very few Americans understand. It's, as I said a few minutes ago, this is an illegal, inhumane, immoral war. Russia is shooting indiscriminately into the spaces where normal people live. Remember the stories early of Mariupol, where Russia bombed the maternity hospital, and then as the women and children were leaving the maternity hospital, they bombed the women and children as they left. This is a war criminal leading an illegal war, and the world needs to understand that. And then what we see Ukraine doing is, because they have so few weapons to waste, they are very discriminate in what they bomb. You watch the great story of the takedown of all their bombers deep inside Russia. This is a country that is fighting a legitimate war. We call it a counter-force war.
Mm-hmm. A sobering take from retired four-star general for the U.S. Air Force, Philip Breedlove. It's great to have you, General. Come back and see us again. He's former NATO Supreme Allied Commander Europe with us on Balance of Power. Coming up, we turn our attention to the impact of President Trump's tariffs on farmers. An important conversation with Tom Vilsack, the former Secretary of Agriculture in the Biden administration, will join us next as the administration tries to balance funding for farmers with its crackdown on immigration. It's next on Balance of Power on Bloomberg TV and radio.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? Harness technology and AI to shape the way we live our lives, and unlock economic and social prosperity through environmental responsibility. With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
Technology is embedded in every aspect of our lives and laying the foundation for the future, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Annabelle Drulers in Hong Kong. I'm Sherian in Tokyo. Watch Bloomberg Tech Asia. New episodes every month, only on Bloomberg Television.
There's already been $100 billion collected in tariffs, and it has not really adversely affected the economy. The estimates are that total will get to around $300 billion by the end of the year. $300 billion on a full-year basis is a little over 1% of our economy.
Wilbur Ross, former Commerce Secretary during the first Trump administration, this morning on Bloomberg discussing the revenue generated by tariffs. And joining us now here on Balance of Power on Bloomberg TV and radio with more of the state of play of tariff policy itself, Adam Farrar, senior geoeconomics analyst for Bloomberg Economics. So, Adam, obviously this week we have gotten 22 letters from President Trump to the leaders of various countries, tariffs ranging from 20% up to 50% in the case of Brazil. Yet nothing new today, and still no deal announcements, even though he's characterizing these letters themselves as a deal. What does that suggest about where exactly we are as we get closer to August 1st?
So I think you're keying in on the reality of our situation is that these letters in many ways are to some extent a distraction. As you highlighted, most of them are just a reiteration of the April 2nd tariffs, and in some cases obviously with some movement up and down, but overall even across the board. And more importantly, the big takeaway from this week was that July 9th came and passed, and that August 1st is our new date. And for all those countries that were rushing over the weekend, sending their trade ministers, making their phone calls, they had the opportunity to breathe a sigh of relief and try and push those negotiations out to really find something of substance they can latch onto.
So are we to believe that a series of conversations started after this new deadline emerged and the letters went out? Has this actually changed anything?
I think the answer simply is that the conversations have continued, right? The countries that were negotiating, Bloomberg assesses that number to be somewhere between 18 and 23, depending on how we count it, are still negotiating. And they're using this time to try and get something across the board that both addresses the Trump administration concerns and gives them something they can take home to their domestic populations. And the one thing I'd flag there is this big question, this outstanding question of sectoral tariffs, and whether the administration is willing to give enough for countries like Japan, South Korea, and the EU that need something in that space.
Well, and for like South Korea and Japan, autos specifically in terms of sectoral tariff, I would imagine is a concern. But we also learned officially from the president overnight that August 1st is when that 50% copper tariff will be going into play. Do you expect that we could see carve-outs for copper-producing countries like Chile, or that we could see tweaks to that policy overall, know how critical that commodity is?
I think the simple answer is that we should expect that anything is possible at this point. He's given, again, a runway for conversations. There's been ample reporting over the last 24 hours highlighting the essential nature of copper to the technology industry in the United States, and the simple reality that that demand is inelastic, right? People are going to need to buy it regardless of the price. And so if there are no changes, we're going to see price increases in the United States on key goods.
Adam, great to have you. Adam Ferrer, Bloomberg Economics, here on Balance of Power. We appreciate the insights, and joining us now for a look more at how the agriculture industry is watching President Trump's tariff policy, along with other policies impacting farms out of this White House, is Tom Vilsack, the former Democratic governor of Iowa, former Secretary of Agriculture in both the Obama and Biden administrations. He's also the CEO of the World Food Prize Foundation. Governor, great to see you, and welcome back to Bloomberg TV and radio. President Trump, we'd like to start with the tariff matter, says that this is in fact good for business for American farmers. How do you see it?
Well, it's a mixed bag. To the extent that there are agreements that open up opportunities and markets for American agriculture, that's good news. But the reality is that right now that's not necessarily the case. With corn prices, for example, under $4, soybean prices under $10, I think it's a reflection and indication of a market that has quite a bit of surplus in it. And there has to be a place for it to go. And right now, it does not have a place to go. You know, our big client is China, and I think we're all waiting to see what ultimately ends up in terms of the agreement with China, if there is to be one, and then whether or not China will actually follow through with the agreement. We had a phase one agreement during the first Trump administration that China never actually met the goals or requirements of that agreement. And I think that's something to remember. These are agreements. These are not trade pacts that are essentially approved by Congress. These are one-off agreements that oftentimes countries make the decision not to follow. And that was certainly the case in China.
Well, of course, Governor, to have agricultural goods to actually export, you have to have those agricultural goods harvested and grown, and it requires workers to do that. So I also want to ask you about the president's immigration policy, as we have the current agriculture secretary, your successor, Brooke Rollins, suggesting that people who need to work in order to receive Medicaid, able-bodied Medicaid recipients, should replace the migrant farm workforce. Sir, is that even possible in terms of the numbers required? Is that the solution here?
Well, we're talking about several 100,000 individuals who work extremely hard on farms across the United States, primarily in the specialty crop dairy areas in particular. The reality is that's not the answer. The answer actually is immigration policy that essentially acknowledges the important work that these farm workers do and a pathway for them to continue to do it. The Farm Worker Modernization Act was proposed several years ago. It was passed by a Republican House. It had probably more than 50 votes in the U.S. Senate. It just couldn't get to 60 votes. that would have provided a pathway, would have provided a responsibility on the part of these workers to acknowledge the wrongdoing, which would then not be amnesty. There would be a fine involved. There would be taxes that would have to be paid. There would be a period of time that they would receive a